those volatile chips.
Absolutely.
All right, Kevin, always a pleasure to see you. Thank you very much.
Thank you.
All right, here's what to watch in the week ahead. We got Tuesday kicking off a big week for economic data with the ADP private payrolls report and October's retail sales rescheduled from November the 14th. We're also getting November non-farm payrolls. That's right, the jobs report, rescheduled from December 5th because of that government shutdown. And then Thursday, we get more delayed data with November CPI and real earnings, plus an ECB bank decision. And then on Friday, we get existing home sales, consumer sentiment, and a Japan rate decision. And then on the earnings front, we got 9 S&P 500 companies reporting 1 Dow component, and that includes Nike, FedEx, and General Mills. That does it for us. Squawk Box starts right now.
Good morning. Futures higher on this last full trading week of 2025. On tap this week, we have jobs numbers and a key inflation reading, plus President Trump keeping Wall Street guessing on he's going to pick to lead the Fed after Jay Powell. And how do Americans really feel about the issue of affordability? We're going to drill into the issue that is flaring in Washington. It is Monday, December 15th, 2025. The Squawk Box begins right now. Good morning and welcome to Squawk Box right here on CNBC. We're live at the NASDAQ Market Set in Times Square. I'm Andrew Ross Sorkin along with Melissa Lee. Good morning to you.
Good morning to you, Andrew.
Hanging out. Becky and Joe are off today, but we got a lot going on, including this, because you may have noticed there's a new CNBC logo on your screen today. It's part of our evolution. We have removed the NBC peacock to embrace a distinct new identity as part of our new brand's future. It's a small visual update as we continue to deliver the same trusted coverage around business, around markets, the economy, and so much more. And I dig it, to be honest with you.
I think it's very modern.
I think it's who we are.
It is.
So, I do miss the peacock in certain ways because I grew up with the peacock in a long time, but
Exactly.
I think it's pretty cool.
Yeah, and it ushers in a new era.
It is the new era with the Versant
Less
spinoff,
than a month away.
and here we go. So here we are. Meantime, U.S. equity futures at this hour. Take a look at where we are. Dow up about 244 points. You're looking at the S&P 500 up about 33 points. The NASDAQ up about 131 points. Treasury yields. Let's show you where the 10-year sits just right now, 4.1%. The 2-year at 3.5. Crude oil, if you want to buy it by the barrel, WTI will cost you $57.32 on Friday. I should mention the WTI saw its lowest settle since early May. And then let's flip the word around and show folks where crypto sits right now. Bitcoin, I don't know, we're looking at Bitcoin as a barometer of risk on, risk off. It's sort of hard to even determine it as a barometer of anything at the moment. But $89,845.
National Economic Council Director Kevin Hassett says he'd be happy to talk to President Trump consistently if he's chosen to lead the Fed. On CBS's Face the Nation, Hassett called the president's views on the Fed strong and well-founded, but stressed it is the Fed's job to be independent.
No, he would have no, it's just his opinion matters if it's good, if it's based on data. And then if you go to the committee and you say, well, the president made this argument, that's a really sound argument, I think. What do you think? If they reject it, then they'll vote in a different way.
On Friday, the president told the Wall Street Journal he was leaning toward choosing Hassett or former Federal Reserve Governor Kevin Warsh to run the Fed after Jay Powell. He said Warsh was at the top of his list, though he also praised Hassett in other unnamed candidates. The president confirmed he pressed Warsh earlier last week on whether he could count on him to lower interest rates if he is chosen to lead the Fed. President Trump also said he thinks the next Fed chair should talk with him about where to set interest rates and said he believes a year from now the federal funds rate should be 1% at most.
That would be a huge shift. The idea of sort of not just, we've always had a situation where there's been regular conversations happening between the Treasury Secretary and the Fed Chair. They famously have breakfast and lunches together. This has been going on for a very long time. So it's not, maybe it's not so far off to say that the administration and the Federal Reserve need to talk to each other. The question is, should you be talking to the president, and how much influence is really taking place? One of the things we've never really known is what exactly gets said at those lunches and breakfasts, and how much of the time the president has told their Treasury Secretary, or the Treasury Secretary is doing it on their own, saying this is what let me advocate for this position right now.
So the question is this sort of an acknowledgement of what already happened, or is this actually something new that happens in terms of consulting the president as to where rates should be? We don't really know that, to your point.
We will have to see where all of this goes. Do you think both Kevins are up for that? We know that Kevin Hassett is game for this, clearly, because he's just said it.
Right.
I don't know whether the others will do the
I
same.
don't know, but I assume that they want to serve the president. They're going to be appointed by the president, and they will engage with him, whether or not they admit that it's consultation of sorts or advisory, or if they just say we're having a discussion.
Meantime, the chief financial officer of Elon Musk's rocket company, SpaceX, telling employees that the firm is preparing to go public next year and will buy shares from insiders in a deal that values SpaceX at around $800 billion. That's according to multiple reports that took place over the weekend. They say a letter late last week from SpaceX's CFO, Brett Jensen, to employees and other shareholders laid out plans for SpaceX to buy about $2.5 billion worth of those shares from eligible stockholders at $421 a share. That's about double the previous internal value, and according to reports, the letter says the proceeds from an IPO could be used to increase the number of Starship launches, deploy AI data centers in space, and send crews to Mars. So it's not the 1.5 trillion number that you've heard bandied about yet, but maybe that's still on the road.
Yeah. And what's interesting too are the firms that have invested early on in SpaceX and now have these unrealized gains that are enormous. Like Google in April said it had an $8 billion unrealized gain, which was assumed to be SpaceX. Fidelity also has the same, is in the same situation. So once this thing goes public, those will be realized gains. That should be interesting. Yeah. Australia's leader proposing tougher national gun laws after a mass shooting targeted a Hanukkah celebration in Sydney, leaving at least 15 people dead. The Australian Prime Minister said he would push for limits on how many guns licensed owners can obtain, and he also said licenses should not be granted forever. The shooting at Sydney's popular Bondi Beach was Australia's worst in almost 30 years. Close to 40 people were being treated at hospitals. Police said the two shooters were a father and son. The father was shot dead. Australia's national broadcaster said 2 Islamic State flags were found in the gunman's vehicle. The shooting spotlighting whether Australia has done enough to stem rising anti-Semitism. Synagogues and other buildings have been targeted since the Israeli-Hamas war began in 2023.
You know, I didn't know if I wanted to say anything about this or not. I don't know what you have to say about this. Obviously, the whole situation is just so devastating. But the thing that I've been thinking about a lot is we've been seeing so much anti-Semitism across the world, but here in the United States. And we have a debate oftentimes on this set and around that has been considered an acceptable debate. And I don't know if it should be considered acceptable, which is there are folks who debate and say they're debating the politics of Israel. I think that's probably a fair debate, right? You can decide that you don't like the politics of Israel or what Israel's doing at any given time. But there's been a much bigger push
All right, they cut him off.
of a true anti-Zionism, anti-Israel debate in its totality. And I think there's a genuine, and I know people think that somehow you can hold two ideas in your mind at one time, or that that's somehow acceptable. But I think that there is something happening right now where this anti-Zionism argument, I don't even want to call it that, is now bleeding over into something that and people have said it is anti-Semitism. And I think we need to have a broader conversation about what that connection really is. And for whatever reason, that is not happening right now. And I think that obviously there's a lot of things that are taking place in the Middle East that people have lots of concerns about. But nonetheless, I think when you see stuff like this, you have to say to yourself, something else is going on here. Meantime, back here in the United States, the manhunt continues for a suspect in Saturday's shooting at Brown University. Overnight, police released a person of interest who was taken into custody earlier yesterday. On Saturday, a gunman opened fire at the Ivy League College, killing 2 people, injuring 9. Law enforcement officials released a video of a person dressed in black walking on a sidewalk near the scene of the shooting. They say that person remains a person of interest, but they are continuing to search for additional video evidence. The university is sending students home, calling off final exams, and remaining classes and assignments for the semester.
Filmmaker Rob Reiner and his wife were found dead at their Los Angeles home yesterday. That's according to a source close to the Reiner family who spoke to NBC News. Their source said the couple appeared to have died from stab wounds. LA police said they responded to a report of 2 deceased individuals at Reiner's home. Police said a death investigation was underway. Reiner was 78. He was known for his role in All in the Family and directing popular films including The Princess Bride, When Harry Met Sally, and A Few Good Men. His wife, Michelle Singer Reiner, was 65.
I just want to say, I think we have to send our love and prayers to everybody.
I mean,
This is one of those weekends
the tragedies that have happened this weekend.
is very hard to, in almost every instance, we would sit here and talk about this for a much longer time. The Reiners, think about it, you just reeled off those films. If Joe was here, we'd be talking about those films this morning. They were all extraordinary. Families on Bondi Beach. Folks at Brown. We got a lot more to come. We're going to talk a lot of business this morning. When we come back, we're going to talk markets with Funstress. Tom Lee will get his take on what he thinks about the early Santa Claus rally that's taking place in today's 8 a.m. hour. Don't miss our exit interview. Probably get into some of this issues around anti-Semitism here in New York with Mayor Eric Adams. He's going to be stepping down at the end of the year, but he's going to be with us first, right here on Squawk Box. You're watching CNBC, and we're coming right back.
futures ahead of jobs numbers and inflation data this week. It looks like we are recouping some of the losses that we suffered on Friday. We saw more than 1% declines across the board on Friday. S&P looking to be higher by about 34 points. Dow looking at 241. NASDAQ looking to be up by 134. Joining us now, Tom Lee, Fundstrat Head of Research. Tom, great to have you with us. There's a lot of things to talk about with you in terms of the skepticism now around the AI trade, skepticism around Bitcoin. Are they, in fact, related, do you think?
Related but not related.
Yeah.
You know, I think the AI trade, I mean, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, you know, what's the appropriate price to put. And that drives some profit taking because they've done so well this year. On the crypto side, I think that there has been some concerns about, you know, quantum, and then there was that huge deleveraging event on October 10th. But the crypto fundamental story, I mean, is exiting on a really high note this year. You know, the U.S. government passed legislation and regulations favorable for crypto, and we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like what's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now is a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You know, you can't just charge $20 a month. I mean, really AI, agentic services, but the market ends up being huge because in the U.S., it's really making 130 million existing workers into super workers. I mean, that's a several $1 trillion market just in the U.S. alone. So I think there's still opportunities.
When do you think that we're going to see the tipping point on that front? I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is it 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, no, we're actually not getting the value out of some of these products that we were hoping to.
Yeah, I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. You know, like when color phones first came out on mobile, or even keyboards, people kind of sneered and said, you know, who's going to be using a color screen? And remember famously what happened when the iPhone was launched and how one of the biggest competitors dismissed it, saying it's just a toy. I think we're at that phase with AI where the capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Max 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, I mean, one distinct change has definitely already happened. That is asset light to asset heavy, asset spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like NVIDIA, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings, because they're predictable, then NVIDIA shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that they should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech
Do you
and
think that
financials.
all the banks, or do you think, I mean, JP Morgan in particular is invested obviously heavily in tech, but if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized the bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech-forward banks?
It possibly. Goldman certainly is. And I
Okay.
think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies,
Even at record highs.
even at record highs. You know, as many technical strategists would tell you, it's actually sometimes better to buy things at all-time highs. Not always.
For 2026, though, you're bullish over all the markets, and it sounds like you believe in a broadening, but not necessarily a decline in the AI trade.
That's right. I mean, I think 2026 could look like this year, because this year had a bear market and then a bull market. Next year, there was two puts. There's the White House put still in play, and the Fed put, I think it's going to come back. People sort of forgot like it's been dead for 3 years. It's really going to come back in force. But it will take maybe the first half of the year to get through that because we don't have a new Fed in the first half. So I think the first half next year could be down 10 to 15%, and then a big recovery.
The White House put is what? Further stimulus, the tax refunds that are coming? I mean,
Yeah, it's pro-business regulation. It's really allowing, the U.S. to step away. Look at how they're trying to simplify even AI regulations and rulings. And then it's, of course, legislation passing. And then we have the midterms, which gridlock is kind of good for markets. So I think tailwinds develop in the second half.
Gridlock because you suspect that Democrats win the,
Yes, it's probably expected that they gain in the House.
and therefore, so therefore you think gridlock will be good for the
Yes, markets.
second half of the.
Yeah, I would say half of the equity investors I talk to will breathe a sigh of relief if there's gridlock.
one last question on Bitcoin for 2026, or crypto in general. If MSCI decides to exclude digital asset treasury companies like a strategy or yours, for instance, what happens to sentiment? What happens to this trade?
Well, MSCI is important because other indices follow suit. MicroStrategy is building a digital credit company, so I think investors will still support their efforts. But of course, I think they can be very persuasive. But the DApp world has many companies. A company like Bitmine is already becoming more of a bridge to Wall Street and investing in DeFi, so it's becoming more of a financial infrastructure company. I think DApps are going to be more of a generic word like REITs next year.
So it doesn't matter what you're saying. The MSCI decision.
That's right. And right now, the only MSCI sort of dependent company is MicroStrategy because everyone else is not even in an MSCI index.
Oh,
Thanks, nice to see you. Happy holidays, we don't see you. Hopefully we will, but I like your green tie, which is very festive. Coming up, a one-time consumer product high flyer declaring bankruptcy. This is years after a multi-billion-dollar deal for it collapsed, I should say, and close it down. We'll bring you the details about what happened right after the break. There's a hint of what we're talking about right after this. Welcome back to Squawk Box. So Roomba's vacuum maker, the iRobot, filing for bankruptcy. It's going to do this after going private, being bought by its primary manufacturer. The company has faced competition from lower-priced rivals and stress from U.S. tariffs. That includes a 46% tariff on imports from Vietnam, where iRobot builds its products for the U.S. Amazon, if you might remember this, tried to buy iRobot years ago for more than $1 billion, but that deal faced opposition from regulators. So it's interesting now that that deal was blocked, and here we now have a bankrupt company.
Right, what was the better outcome?
What was a better outcome?
Right, I don't know. But this is the case for Mint, happened with U.S. Steel too.
Yeah.
Right?
Totally.
Company in distress. What is better?
What's better?
Letting it be sold or letting it be in distress?
And what I don't know from a competitive perspective, are there now so many competitors to iRobot that that's actually good for consumers, bad for iRobot, and maybe that's,
There are a lot of robot back. Do you have one?
I don't. Do you?
I don't either. I used to have one, but it would get stuck under radiators constantly.
Okay, we've never gone down the iRobot.
Yeah. Good old fashioned. Yeah, it's better. Yeah. Coming up, blockbuster data out of China shedding new light on the state of the country's economy. We'll get the details right after this break, but first, here are the biggest pre-market gainers in the S&P 500. Squawk Box will be right back. Things to know ahead of the opening bell, new evidence of China's economic troubles. Consumption, investment, and industrial output data all falling short of expectations in November. A court in Hong Kong finding pro-democracy activist and media baron Jimmy Lai guilty of sedition and collusion with foreign countries. 78-year-old was charged under Hong Kong's controversial national security law enacted in 2020 after pro-democracy protests the year before. Sanofi shares are lower, the French drug maker flagging another delay to a U.S. regulatory decision on its experimental multiple sclerosis drug. It also gave disappointing late-stage study results that stock down more than 1% pre-market. ServiceNow is in talks by cybersecurity startup Artemis. Bloomberg reports a deal, which could be announced this week, could be worth about $7 billion. And Disney's Zootopia 2 taking the top spot at the box office this weekend, raking in more than $26 million. The animated sequel also crossing the $1 billion mark worldwide.
We come back a lot more on Squawk Box. We're going to dig into the affordability debate with pollster Frank Luntz. Democrats trying to hammer the White House on that issue, and President Trump hitting back and claiming his economy is recovering from the Biden years. Reminders, ready to a break. Get the best of Squawk Box in our daily podcast. You can follow Squawk Pod on your favorite podcast app. Listen anytime. We are coming right back. Welcome back to Squawk Box. The number one issue facing Americans today, which they say will impact their vote in the 26th midterm, is affordability of everyday items like food and fuel. That's according to a recent survey conducted by our next guest. Joining us right now is pollster and political strategist Frank Luntz. Frank, it's great to see you. We've been talking about this word affordability, which has become sort of part of the political, if not popular lexicon. The president has said that word is a con job. Greg Gibb from the Wall Street Journal has even raised questions himself about what even affordability means. But given that you work in the world of language and how people use it and how people think about it, where does it really lie, and how do you explain it?
It's very significant. A year ago, I was on your show. We talked about inflation, and I criticized those who use that word because the average American doesn't talk about inflation. That's an economist word. The average American talks about affordability or cost. Can I afford the food, the fuel, the housing, the health care? But there's something that's even more important. Half of Americans now live, and I quote, paycheck to paycheck. And how they define that is different. But these are people who have trouble paying their bills on a monthly basis. When half of Americans are saying that, that tells me that this economic insecurity and anxiety is real. And Andrew, let me give you 3 numbers behind this. 1/3 of Americans could not afford a cost, an unexpected health care cost of $5,000. And that's powerful. And when I know that half of Americans have trouble with their expenses, it goes from a concern to a crisis. And you'll notice that the number 1 issue is food. And the number 2 is food and fuel. The number 2 issue is affordable health care. That's why this debate that's coming up in the Senate and the House is so important. And my warning to both political parties, if you don't figure out a way to make health care costs more affordable, the public is going to punish you 1 year from today.
So Frank, here's the real question though. Is it about bringing costs down, or is it effectively about bringing wages up? Because that is there's 2 ways to handle this situation. And the question is, which measure effectively, politicians even have a real role over changing?
Well, that's a brilliant question, and no one asks it that way. And that's what I study, because I'm a language person. And I know that it's the outcome, it's the result. Wages are important, but costs are vital. Wages put you in the game, but if your wages are up, and you still can't afford the house you want, the health care you need, and the food and fuel you deserve, what good is it? So I'd say to you that costs are more important, and secondly, it's not just that healthcare has become unaffordable. It's actually that things have become so expensive and prices are considered too high.
When you think about just affordability though, and the measure of affordability, how much of it is the price rise relative to where it was a year or 2 ago? The reason I mention this is because you start to think about yourself, think about the country historically. Even when you think about numbers like unemployment sometimes, I think to myself, right now, for example, unemployment in this country on a historical basis is actually quite low. It's almost like Alice in Wonderland, to be honest with you. Go back and think about where unemployment was after the financial crisis, 10%, middle of the pandemic, 14%. I heard about 1929, back in 1932, 25%. Lowest unemployment we ever had was 2.5%. But people would say right now that somehow we're having, I've heard from people say this, we have a real unemployment problem in this country. But it's all relative. And so the question is how we should think about prices on a relative basis, how you should think about employment on a relative, and is it just a year look back, a 2-year look back, a 5-year look back? What is the measure in your mind?
It's right now compared to the past, and that's the best I can give you because that's accurately how Americans see things. That they look at it and how it impacts them personally, not their neighbors, not the country. We don't care what the overall numbers are if we're suffering. By the same token, if things are well for us and they're not well for other people, we don't see it, we don't perceive it. So it is relative, but there's no absolute. And I would say to Democrats, when we go back to healthcare, y'all keep coming back with a government solution. That's a mistake because the American people don't trust the government to do anything on healthcare. And for the Republicans, they keep coming back to an insurance-based solution, and Americans hate insurance companies. So Andrew, the real problem here is that these vehicles, the ability to make these changes that the public is demanding, the problem is they don't trust the institutions who are responsible for those changes. By the way, that's why I'm here in the studio and not doing this on Zoom. I want people to hear this clearly. We are at a breaking point in this country. That the public sees that these problems, that the challenges that have faced them are so significant, and that neither political party, I'll repeat that, neither political party has the answers for them or is willing to do it. And the final proof for them was a government shutdown that lasted months, many weeks, 6 weeks, I guess.
It sounds like both parties then are between a rock and a hard place, because you're saying that the only solutions the American people will accept are solutions that lie outside of the government, and yet that's what's in the control of the administration, of Congress. What needs to be the messaging of either the administration or Democrats if they want to maintain control or gain control, in the case of the Democrats, to the American people? What is the gap in the messaging here?
We learned from Joe Biden that to say that inflation was transitory, first off, the average American did not know what that meant, and those that did said, no, it's not. This is real, and I'm feeling it. And Donald Trump won the election in 2024 precisely because the Biden administration did nothing in the eyes of the public on inflation. Remember, it's not reality, it's perception. If you perceive this is happening, you'll believe that that's the truth. Secondly, the Trump administration seemingly doesn't seem to prioritize these issues. And combining it with a big, beautiful bill, which is his language, his name for that legislation, it was a bad name. It was inefficient and ineffective to promote what was happening in that legislation. And now he realizes it when it's upside down in terms of public support. So going forward, first step is, I hear you, I see you, I get it. Second step is, you don't want rhetoric, you want results. You want solutions. You want common sense and not politics. And third, stop blaming the other party and start doing. These 3 steps, either party could take advantage of it, either party could embrace it, but if they don't, the public is not just deciding between Republicans and Democrats, they're deciding whether or not they even want to participate in the democratic process, and that's when you know you've reached the breaking point.
Frank, if you were a betting man right now, what does 26 look like?
Perfect question. Democrats narrowly take the House. There aren't that many seats that are up for play, thanks to redistricting. And by the way, Andrew, we haven't even talked about that. How damaging it is to the public perception of democracy when they change the lines in the middle of the game. If you change the football lines, you change the baseball lines, the hostility would be significant. Democrats have a 5-point lead right now, and that's enough to give them roughly a 5-seat majority in the House and the Senate. If they botch health care, the Senate could be up for grabs as well.
The healthcare debate, does that work in the favor of Democrats or Republicans come 26? The government shut down for a long time. There were a lot of people blaming the Democrats for shutting the government down, but I do wonder strategically whether that will ultimately work in their favor, especially if there are these major price hikes as we get closer to the election.
If they believe that Republicans are tone deaf on health care, they will punish them. If they believe the Democrats are trying to make political gains, and I go back to Enron, Andrew, I'm old, so I remember when this happened in 2002, the Democrats had every advantage over the Republicans, but the public came to perceive it as politics rather than policy, and they punished them for it. If it looks like it's an insurance company's solution, the Democrats will benefit. If it looks like it's a government solution, the Republicans will benefit because the public doesn't trust either of them. At this moment, the Democrats have a slight advantage, but my God, we've got a year to go, and in the end, voters don't make up their minds until Labor Day before the election. That's the date you want to watch.
Frank, always appreciate your perspective, specifically appreciate it this morning on this important topic, and appreciate you coming in this morning to articulate it to our viewers. Thank you. Happy holidays.
You too.
Coming out, the CNBC investigation finds the FDA approved a $250,000 work trip to Singapore during the government shutdown. That is next. But first, the AccuWeather forecast with meteorologist Bernie Raynow.
It's the coldest day of the season today. Your AccuWeather exclusive forecast. How about 27 in Boston, 30 in New York City with some gusty winds. Sunshine, though, from Dallas toward Atlanta, maybe a shower in Miami. And bad news in the Northwest, more rain coming. Your AccuWeather exclusive travel forecast. The wind causes some delays in Boston and New York City. To help you make the best decisions and be more in the know, make sure to download the AccuWeather app today.
FDA has been an agency under fire, from controversial staff appointees to deep staffing cuts to being openly questioned by former FDA chiefs about medical policies. Now CNBC has learned that in the depths of the government shutdown, the FDA approved sending staffers on a $250,000 trip to a conference in Singapore, prompting questions about the agency's priorities. Here's the story. On the last day of the government shutdown, employees from the Food and Drug Administration boarded planes destined for Singapore, where a global healthcare conference was convening on November 18th and 19th. According to internal FDA documents and invoices CNBC obtained, the delegation was comprised of 31 FDA staffers. The trip, which cost more than $250,000 or upwards of $8,000 per person, was approved about 1 week before they departed on November 12th, and before the House of Representatives voted to end the shutdown.
The bill is passed. The motion is adopted.
The conference venue was a Hotel Aura and Hotel Michael on the Singaporean island of Sentosa. These five-star resorts house a Universal Studios amusement park and an adjoining casino. The event was the International Council for Harmonization, or ICH, which aims to unify global standards for drug development and approval. But questions about the trip come as the agency is under fire from all sides. It's undergone a roughly 15% reduction in staff.
A lot of this reorganization is smart, and it's being smart with taxpayer dollars.
And the Trump administration is proposing an 11.5% reduction in budget to the FDA. On top of this, senior leadership has been in upheaval, and former FDA chiefs have publicly questioned the agency's handling of key issues such as vaccine policy. Dylan Hetler-Gaudet is the acting vice president of policy and government affairs at the Project on Government Oversight, a nonpartisan watchdog group that champions government accountability. He says the public perception of attending an international conference in the shadows of a shutdown is not good.
I would hope that FDA leadership and the administration would place a higher degree of priority on making sure the organization, the agency, is resourced completely rather than needing to attend specific conferences or events.
In a statement to CNBC, an FDA spokesperson said the meeting was mission critical and required approval from center leadership and the chief operating officer. He added attendance in the prior 2 years ranged from 47 to 49 delegates, and the purpose of the conference was to support global alignment on drug development, approval standards, and regulatory science. And taxpayers did not foot the $250,000 bill, according to the FDA's statement. The trip was funded with carryover user fees, money the agency collects from drug, device, and other medical product manufacturers for product reviews, inspections, and other regulatory work. Still, the FDA seemed to be aware that any travel could be viewed unfavorably. For example, in one document the agency wrote, due to the optics of business travel conducted during a shutdown, conference approval will be handled by FDA's senior leadership on a case-by-case basis.
Those dollars are still public dollars. Those still belong to all of us, the American public.
The day after we reached out to the FDA about this story, the agency removed 2 public website links that outlined its travel policies during a government shutdown. The spokesperson for the FDA told us the agency routinely updates its web pages to ensure information remains accurate and consistent with current policy. We also asked if Commissioner McCary was aware of and approved the trip. The FDA did not respond to our repeated questions about that matter in particular. There was a virtual option. 3 people decided to attend virtually, but still 31 decided to go physically.
So they could have gone virtually if they wanted to.
They could have done this virtually. We're not saying that this was a boondoggle whatsoever. I don't want that to anybody to come away from it. It's an important conference. But it was during the government shutdown. It was during a time when funding was very limited. These carryover user fees, these are from applications. That's the only funding that the FDA has during a shutdown in order to conduct things like inspections, to respond to imminent threats. And specifically, they say imminent human threats or threats to property. That's what the funding should be used for during a shutdown. Some will question whether or not a conference falls into that category.
So what happens next, now that you've reported all this?
Well, there have been questions already about how the FDA spends money. Congressman James Comer of Kentucky, Republican of Kentucky, has held hearings about budgets, priorities, etc. And obviously there are a lot of questions just around the management of the FDA, the revolving door at the FDA when it comes to top staff. So this is just one piece in sort of the picture of where this agency is right now.
Great reporting. Really interesting.
Coming up, a look at the state of the economy from the book aisle. We'll be joined by the CEO of Barnes & Noble. Bob Fox will be right back.
Welcome back to Squawk Box. Holiday gift buying in full swing. Joining us right now with a view of the economy through his lens as a bookseller. James Dawes is here. He's Barnes & Noble's CEO. Good morning to you. And I was just thanking you because I've been in a whole bunch of Barnes & Nobles over the past couple of months as I've been selling my book. But how do you see the book business as an indicator of the economy these days, and the sense of how many people are actually buying books these days?
Books, thankfully, are doing really well and have kept on going up ever since the pandemic. It's sort of one of those unlikely things. But 2025 has been a fantastic year for us. I think the naysayers might say, well, books do really well in recessions, but either which way, we're very happy.
What do you think is driving it? I mean, I've learned all about TikTok and what they call book talk. How much of that is where the growth is coming from? Where do you think, I mean, what do you think is inspiring all these people to buy books?
I think if the publishing is strong, and it's been very good this year, a nice spread of books, but also that people, once you get into the habit of reading books, and that clearly happened during the pandemic, you retain that habit, and it's accumulative. So I think people are enjoying that, and they're enjoying coming into bookstores to find books.
What about people who are buying audiobooks? And where does Barnes & Noble lie in the audiobook business?
I think audiobooks and indeed ebooks as well are sort of feed physical books. So the more people are listening to books, you can't read a book as you're going for a jog, you can't read a book when you're on your exercise machine, but you're likely then to pick one up. So I think the boom in audiobooks has been very helpful actually for physical books.
We were just talking about the word affordability. The affordability of books, or lack of affordability. Prices are up, right?
This is where books really win. You can go to a restaurant, it's gone in an hour or two, and you never get it back. With a book, hours and hours and hours. 1929 is going to take you what? You're a massively quick reader, 10 hours, more, several days, maybe even a week plus. And then you've still got a book you can gift, you can look out on your shelf. So books are fantastic.
And have the tariffs impacted the book business in a big way?
Virtually not at all. On paper a little bit, but it's been very, very minor.
And then what about in terms of labor right now for you, just in terms of the staffs at all of these different bookstores? What are you paying? Do they feel the affordability crunch themselves?
For sure. I think there's a huge pressure on employers to raise pay. Everything costs more. So if you're not paying your people more, they're going to be feeling that.
And how much of the bookstore culture is now around just coming in? I mean, some of the, because I've now been so many books, and they're so different. Each one really is very different. The kinds of books, there's some where everyone's just hanging out, just peeling through the books. There's others where you don't touch the books as much. There's others where they have coffee, so people are hanging out. I mean, how do you see that in terms of what the store is supposed to be?
The success of Barnes & Noble, and it has been extraordinarily successful over the last few years, I think it's been allowing the store teams to really curate their stores, but also present their stores and inject personality to their stores, each according to their own community. And stores are places to meet. They are very vibrant, dynamic places. Booksellers generally are vocational. They believe in the power of books. They believe in the purpose of selling books to people of all ages.
And how many people, dare I ask you, this is a terrible question, how many people do you think actually walk into a Barnes & Noble, check out the books, and then go to Amazon?
I think some do, but I think then you realize that you didn't buy as good a book. It may be the same book, but it isn't invested with the emotion and the fun that you get from walking out of a true bookstore. It's something that independent bookstores really benefit from as well. Where you buy your book does invest something intangible in the book itself.
How important was it? That's the other thing I was going to mention. Because each store seems different, there is almost an independent-like bookstore mentality to them, which is very different than what I recall a decade or two ago. And so when you walk into a Barnes & Noble, it sort of does feel very independent. Do you think you're competing against the independent bookstores? Do you think you're competing against Amazon? Who do you think is the competitor set today?
I think each of us works in our own community, so I think we're doing exactly the same as the independent bookstores. We don't directly compete with them, try not to, and unfortunately so many bookstores have closed in the United States that there are vast sort of deserts of bookstores, and that's where we're opening our new stores. But I think it is, physical book is competing with online.
How many new stores this year?
We did 67.
67, and how many planned for 26 and 27?
58.
Okay.
I just like going up.
You just like going up by one or two?
Just by one or two.
And which markets where you feel like things are really hopping?
Well, we've been actually opening across the nation. We've been putting them in very remote places. We've been adding into these densely populated East West Coast.
But there's not one area where you go, oh my goodness, Austin, Texas is taking off. We got to get on every corner in Austin. I'm just making this up.
Yeah, Texas and Florida, the population booms have fueled a lot of stores there, in particular big states, lots of population.
Any stores where you're saying, you know what, we've got too many stores?
We're closing almost none, and where we do close, we always relocate. So it's good times for booksellers.
Thank you for coming in. We wish you a lot of luck. I particularly wish you a lot of luck.
Thank you for the vote.
Meantime, it is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. Just past 7 a.m. I should mention. Melissa Lee is hanging out with us today. Becky and Joe are both off. And you may notice something on your screen that looks a little bit different, a little bit new. I'd say fresh. It's part of our evolution. It's the new CNBC logo. Take a look. Goodbye to the peacock. We are embracing a unique and distinct identity that aligns with our future amidst our spin-off with Versant, which is happening next month. It's a small but important visual update as we continue to deliver hopefully the same trusted news and business on business, the markets, the economy, and so much more. And I think really reflects where this whole company can go, not just as a business news organization, but as a platform, media platform more broadly.
Among today's top stories, President Trump told the Wall Street Journal that Kevin Warsh is at the top of his list to be the next Fed chair, but he also praised Kevin Hassett and, quote, other people. After his comments, the Kalshi odds moved sharply, with Kevin Hassett still the favorite at about 50%, Kevin Warsh at 41%. The chief financial officer of Elon Musk's rocket company SpaceX telling employees the firm is preparing to go public next year and will buy shares from insiders in a deal valuing SpaceX at around $800 million. That's according to multiple reports. And in geopolitical news, Ukraine President Volodymyr Zelensky offered to drop the country's request to join NATO in return for security guarantees as part of a peace deal to end the war with Russia. He made the offer in talks with U.S. officials, Steve Witkoff and Jared Kushner in Berlin over the weekend.
Meantime, take a look at the futures right now. Dow on this Monday morning looking like it will open up much higher, about 237 points higher. NASDAQ up about 150 points. The S&P 500 up about 35 points right about now. I'm going to get straight over to Dom Chu. He's got a look at this morning's pre-market movers. Dom?
Good morning, Andrew. Good morning, Melissa. So let's start with the Dow component. Your Intel shares on the rise after a Bloomberg report late on Friday that the semiconductor company is nearing a deal to buy AI chip startup SambaNova for about $1.6 billion. That's per sources familiar. The report goes on to say a deal could come as soon as next month, but nothing is final. Now, Intel CEO Lip Bhutan is chairman of SambaNova. His venture capital firm was one of the company's founding investors, so that tide is getting some news here. Intel up about 1% on that. Meantime, you got Live Nation Entertainment, which is falling this morning to the tune of almost 3%. After a judge ruled on Friday afternoon that the Ticketmaster owner must face a class action lawsuit over ticket pricing, expanding upon a prior lawsuit. The class action suit will cover consumers who bought tickets directly from Live Nation since 2010. Now, CNBC has reached out to Live Nation for some comment. We'll let you know if they get back to us here. And Texas Instruments is our final one here. The S&P market, pre-market laggard so far is down 2.5% after it was downgraded to a sell rating from a prior buy over at Goldman Sachs. They also slashed their target price down to $156 from $200. Now, Goldman says that the semiconductor makers' excess capacity and inventory will weigh on profit margins in 2026, despite a recovery for the broader analog chip sector overall. So Texas Instruments down 2.5% on that. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro where subscribers can get all the context and detail around some of those big notable upgrades and downgrades. Andrew, I'll send things back over to you guys.
Okay, Dom, thank you for that. Appreciate it.
Time now for the CNBC All-America Economic Survey, holiday edition. For the past 19 years, we've tracked how much shoppers are spending for Christmas and, most importantly this year, what is behind the spending decisions. Senior economics reporter Steve Leisman has the details. Joins us here on set. Steve.
Thank you, Melissa. This looks to be the Christmas where inflation is the red-nosed reindeer. That is leading shopping decisions among American consumers in a way we have not seen before. The CNBC All-America Economic Survey finds 41% of Americans plan to spend less this year, 42% saying they're spending about the same, 16% shelling out more, 16% that is. Respondents always say they're going to spend less, but the spend less, it's up 6 points this year, the most since 2022. The average American who's buying gifts say they will spend about $1,200 this year. That's a 3.9 increase over last year, a decent gain and in line with some of the holiday spending forecasts that we've been following. That would not be a bad outcome for retailers, but the reason shoppers give suggests prices are sapping some of the holiday spending cheer, a potential sign that tariffs and other price increases being felt at the checkout counter. 46% of those spending less say the top reason is the high cost of goods, up 10 points from last year. It's been the top reason since 2023, followed by what used to be the main reasons, being paid less and the weak economy. But here, check this out. This year, the high cost of goods is the #1 reason for the first time among those spending more. That's up 11 points from last year, beating out the usual top reason that people are being paid more, followed by having more gifts to buy, and a belief in a stronger economy. So it's the top for both categories, spending less and more. Inflation as a factor in goods buying surged first in 2022 with the pandemic inflation. It leveled off last year, but then you can see the surge again, happening again this year. Overall, 68% say gift prices are higher this year compared to last year, with a third saying much higher. And that's true of people who've already gone to the mall and did their shopping on the Black Friday weekend. So the affordability issue looks to be a significant part of what's driving the holiday shopping season and why we're saying inflation is the red-nosed reindeer this year.
This is interesting because it gets to this notion as to whether or not tariffs are being passed through, or where are we in terms of the pass-through of the tariffs? Chair Powell had mentioned that as long as tariffs sort of pass through and it's done, then he can see going to 2%. We've also heard from various earnings reports that the impact of the tariffs have yet to be passed on to the consumer for certain goods. So there is still another sort of potential wave of price increases to come.
I think there's two elements in this survey. in any survey, well, even three elements, there's a psychological dimension to this. We find that Democrats are much more sensitive or much more concerned about inflation than Republicans are. So I look to the independents, and they look a lot more like Democrats. So there's definitely a psychological / partisan aspect to this. But the other aspect, I think, is going to be real. And I think you're hitting the nail on the head, Melissa. Some has been passed along, and then you add the cumulative effect of the price increases over the past several years. And also, by the way, the media attention to it, I think, saps into people's psyche. So there's all of these things going on that you can't really separate it. What I thought was really interesting is I went down into the depths of the survey and looked at what we call the crosstabs. And what I found was that if you went out and you shopped on Black Friday weekend, you had that experience of believing that prices are higher just the same as those people who hadn't been out. So it suggests that maybe and then the next conversation, I don't know if you want to have it now, is the one about retailer margins, where those are at. And it may or may not matter. If they're able to charge more and sell plenty, then retailer margins will be okay. The question becomes this back and forth over people looking for bargains.
We'll get into President Trump's comments about the next Fed chair in the 8 o'clock hour.
We got a lot more to come this morning. We're going to get you ready for the trading week ahead, including jobs data and a key read on inflation. Then later, New York Mayor Eric Adams is going to join us for an exit interview as he prepares to leave office. We'll talk to him this morning at 8:30. You do not want to miss it. Squawk Box coming right back.
Futures are up across the board. S&P looking at 29, Dow up 213, Nasdaq higher by 123, offsetting Friday's more than 1% losses across the board. Joining us now, Savita Subramanian, head of U.S. Equity and Quantitative Strategy at BofA Securities. Savita, great to have you with us. 2026, reset and valuation. What does that mean? How much of a reset are we talking about?
Yeah, I mean, so we're looking for a pretty good year when it comes to earnings, when it comes to broadening out. The economy looks okay. But I think it's going to be a year where we see some significant multiple compression. So we're actually forecasting, I mean, our year-end target is pretty lackluster at this point. It's 7,100 for next year, not this year. Next year's year-end target. And, you know, we've got 15% earnings growth penciled in, but, you know, I think we're going to see a chunk of multiple contraction. And the reason really is the stocks in the S&P right now that are the bulk of the market are not the economically sensitive companies. They're really the AI plays, the, you know, kind of the buy the dream companies. And those we see as maybe headed for a little bit of an air pocket in 2026.
More so than what we've seen in the past few weeks or so.
Yeah, so I think what's been nice about the past few weeks is that we've seen the market continue to move higher. We've seen some multiple compression in tech, but I think where we are now is a point where you really have to pick a side. So either AI stocks or all that, but if that's the case, they're going to take a bunch of jobs away, which means that consumption could falter next year. So, you know, I worry about the idea that we're just pricing in the best of everything right now. Moreover, when you think about the direction of travel, like I think about the Wayne Gretzky quote, skate to where the puck is going. So everything looks really good right now from a liquidity perspective, from a Fed perspective. Economic data is still relatively healthy, but when you think about liquidity over the next 12 months, it's getting worse rather than better. So I think that's what we're worried about, is the idea that we've seen monstrous numbers of central bank cuts this year, next year a little bit less. Liquidity just seems like it's maxed out right now, full bore, and it's likely to, you know, kind of be more of a trickle next year rather than the same gush.
When it comes to the AI trade, there's so many components of it in terms of there's the hyperscalers, there's more of the hardware-leaning companies like NVIDIA, and I'm not asking you to play stock market here necessarily, to the extent that you can. Where will we see the most valuation adjustment when you think about breaking down this AI trade?
So I think it's going to be the areas that are, you know, not the CapEx takers like the semiconductors or tech hardware companies, but new media companies where they're fighting over a fixed pie of sales, right? I mean, there's corporate ad spend. That's the main driver of revenue growth. And that's pretty fixed. I mean, companies don't spend more just because of AI. They spend at a rate that's, you know, defined by nominal GDP. So I worry that all of these companies aren't going to do as well as what their multiples are implying. And then on top of that, they don't really have the options to cut CapEx anymore. Like back a couple of years ago, they could do a lot more in terms of cost management. Today, they're kind of, you know, mandatory CapEx spenders. So I think that's the worry, is the optionality of these new media companies is a little bit less attractive than it has been.
So for the folks that know, new media companies meaning like an Alphabet,
Exactly.
Meta,
So it's like,
so the hyperscalers that are spending upwards of $400 billion in CapEx next year.
on CapEx, and then, you know, you think about Amazon, you think about these companies that are just maxing out CapEx spend, they're starting to borrow. I think that's where you really want to watch, you know, how much are they borrowing, how much are they generating revenue off of AI, and that's really where we are in the cycle. It's more of a show me environment.
How much Fed or how little Fed is in your forecast for next year?
So, you know, I think the Fed is likely to cut more next year. I mean, what I think that does is it helps the lower income to middle income consumer, but not necessarily the bulk of consumption growth, which has been in middle to upper income. So I think the Fed is likely to drive more equalization across spending. I mean, one of the areas where we're most out of consensus and we get the most pushback from clients is we are overweight consumer staples and underweight consumer discretionary. And this is the idea that you want to do the opposite of what's worked over the last few years, which is lower income struggle whereas the middle and upper income cohorts are really healthy. Now I worry about the wealth effect. I worry about jobs for that, professional white collar employee where AI seems like the biggest threat in that cohort of the spending economy. And that's a much bigger contribution to consumption than lower income. So I think, where we are now is a broadening not only in consumption trends, but in the market, in, economic growth. And that might be great for the economy, but it might not be as good for the S&P 500.
Educator, great to see you. Thank you.
Yeah, great to see you. Thanks.
Coming up, Nebraska Republican Senator Pete Ricketts is going to join us next on healthcare negotiations in Congress, the affordability battle, and so much more. Don't go anywhere. We'll be right back. Welcome back to Squawk Box. Today is the deadline to register for the Affordable Care Act's open enrollment. Also marks the last week for Congress to get anything done on the health care front before the subsidies expire. Joining us right now to talk about this and so much more, Nebraska Republican Senator Pete Ricketts. Good morning to you.
Good morning. Thanks very much for having me on.
So we've been talking about Obamacare, we've been talking about health care, we've been talking about what is going to actually happen in Washington in this next week, but we've also been talking about how this is all going to impact 2026 and the midterms. And I'm curious sort of where you think all of this lands right now.
Well, right now, with regard to what we're doing on the health care, we had the votes for both the Democrats' plan and the Republicans' plan. There's ongoing conversations to see if there's common ground. I might point out there were more Republicans who voted for the Democrats' plan, but no Democrats voted for the Republicans' plan. So what we want as Republicans is to be able to empower people by giving them the money.
Right.
And the Democrats' proposal is just continue to do what we're already doing, which we know. I mean, GAO just came out with a report last week showing how much fraud was going on. 18 out of 20 accounts continue to get fraudulent funds, $10,000 a month. GAO said in 2023, $21 billion they couldn't verify, maybe $27 billion in fraud last year. So this is something that has to be addressed, and our solution is give the money to people so that they can spend it and have competition, drive down the cost, and not just give it to insurance companies.
So here's the question, and this is the hard part of, I think, what you're proposing. In an environment right now where people are talking about this affordability gap constantly, by default, I actually think what you're doing long-term may actually push some of the prices down and do some of the things that you want. But invariably, that could take some period of time, and from the sort of sticker price issue, if you will, in terms of affordability, the question is whether you will get credit or you will get blame if in fact the prices are higher later.
Well, that's one of the things that I think we, as Republicans, have to do is go out there and carry our message out there. With the current plan by Senator Cassidy and Senator Crapo, because we would be funding some of the CSRs that would actually bring premiums down in 2027. We would also, the plan the Democrats have is you've got out-of-pocket expenses of $6,000. So before you even get to anything covered by insurance, you've got to pay out $6,000. Our plan would give you either $1,000 or $1,500 to help offset that right away. So we're giving you money directly. I think that would be one of the things that people say, oh, I got the money in my account right away. I think that helps us to be able to say, hey, we're actually addressing some of this.
Do you think it's the outliers on the, hopefully they're outliers, but on the, because on the other end, yes, the deductibility issue is going to be different, but on the other end, if costs spiral, if you have a real problem in your household, all of a sudden the costs become much more complicated.
Well, and again, one of the things we got to remember is that when we're talking about these, the Biden Obamacare COVID bonuses, there were, Obamacare was never really meant for these high-income earners. But if you're one of the low-income earners, you're really not going to be impacted, right? Because you're still going to be on Obamacare. It's really the folks at more of the higher end of the scale. And that's where these people were drawn out of the private marketplace when we started pushing these things out during the pandemic. And of course, the pandemic's been over for 5 years now, so I think we have to get back to market. And I think that's where, again, where we're coming from as Republicans. Look, we know Obamacare was a failure, right? President Obama said premiums would drop $2,500 and you keep your doctor. Didn't turn out to be true. Premiums are up 3.5 times or something like that since 2013. Insurance companies are making lots of money. Their stock prices are up over 1,000% over the last 10 years or so. So the system is not working. Let's not keep doing the same thing. Let's fix it. Let's try different ideas. Let's give money to the people and try and change it. I think that's a message where we as Republicans can win when we're talking about getting at affordability.
Affordability is a huge issue when it comes to Americans. It's not just healthcare, it's all sorts of things. Other insurance premiums like car insurance, housing insurance, food, you name it. According to various polls, it is top on Americans' minds. So where does this fit in terms of, sending the message to Americans that you are tackling this affordability issue? Because it seems like they don't believe the administration's message. There's still questions, they're saying, we don't feel it. We don't feel good right now. No matter what party says what, they still don't feel it. They still feel like they can't make ends meet.
Well, Leslie, you're right. When I talk to folks back in Nebraska, they don't feel good about going to the grocery store. This is not something that started this year. This started under Biden. 40-year high inflation, prices went up, people didn't feel good about going to the grocery store, and prices have been sticky. They're not coming back down right away. So we have seen things where, like, gasoline hit $4.73 on average during Biden. When I just filled up back in Nebraska last week with a 10% ethanol blend, I was paying $2.40. So we're seeing that there's opportunities there where prices are coming down. But we do need to continue to address this. So I think that, for example, we've got the Road to Housing Act, which will address housing affordability. In the Working Families Tax Cut Act, you're going to see not only things on healthcare like the Rural Healthcare Fund to be able to make rural healthcare more affordable, but next year people are going to do their tax returns. They're probably going to get CBS, I think, report $1,000 more refunds. You're going to see less money coming out of their withholding. I think all of that will help get to the affordability issue because you're going to keep more of their own money to be able to go to the grocery store.
Where do you think the economy is right now? Among your own constituents?
I would say right now, again, people, when I talk to folks, don't feel good about going to the grocery store. So we've got to work on some of these issues we just talked about with regard to not only getting gasoline prices down, but housing prices. I mean, I think the average...
I think that it's about getting prices down themselves versus getting wages up. Because it's very, like, getting housing down is impossible. I was going to say, getting housing prices down is a long-term game that I think ultimately involves a lot of supply, but that's a decade-long project in almost any community, frankly.
Certainly, I think housing is a little bit longer runway. I think it's probably less than a decade because we are seeing investments. But I think one of the things that will help drive growth and help people get that wage that you're talking about is all the things we put in the working families tax cut will encourage businesses to invest. So we've got the things such as meeting expensing for research and development, plant and equipment, interest, bonus deduction, 199A for small businesses. All that permanent. Actually, getting the death tax thing permanent too. That encourages businesses to go out and invest and create those jobs that will help drive that higher wage.
What about tariffs? You think it's impacting inflation?
I actually don't think tariffs are really impacting inflation that much on some, across the board. I do think the president was smart to take tariffs off things that we don't produce, like coffee and bananas. So I think it's a one-time hit. But I think the big thing about the tariffs is we got to get stability. We got to get these trade deals done and locked up so businesses feel like they've got the stability to make those investments I was just talking about to create those jobs so people see that better wage.
I got one other for you, maybe a curveball, but you read the papers like everybody else, and we were talking about it in the 6 o'clock hour. We may get a new Fed chairman.
Right.
And one of the interesting things that came out in the past, 48 hours, is this idea that whoever the Fed chair is going to ultimately be meeting regularly with the President of the United States, and he's going to, may have input in terms of, or advisory, consulting services, if you will, to the Fed. Does that bother you? Is that, do you think what actually happens in practice already? We were having a discussion about how the Treasury Secretary invariably has always had a lunch or a weekly breakfast with the head of the Fed, and maybe therefore whatever message is just privately getting delivered anyway. But then there's the other view that maybe there's too much influence.
All presidents, to greater or lesser degrees, have tried to influence what the Fed is doing. I don't think it's very different. In fact, if there's going to be just straight up meetings, I think that's actually a more transparent way to do it, so that people know the president is giving his feedback to the Fed chair. I think I was just watching your ticker out there. Kevin Hassett said he's going to be independent of whatever the president wants to do. I've known Kevin a long time. He's a very smart man. He's also very data-driven. That's what we want out of our Fed chair. We want somebody who's going to be data-driven, looking at the economy and making the right choices to make sure we continue to have growth, but that we don't see inflation, because again, that gets back to the affordability issue.
Talking about data-driven, Polymarket says that Hassett is the clear. Do you think it's Hassett or do you think it's Warsh?
You know what? I have never made a career of trying to guess what's going to happen here on these sort of things, but the president's going to go, so. But I will work with whoever is going to be the Fed chair.
Okay.
It's going to be Kevin. It's going to be Kevin.
It's
going to be Kevin.
Thank you, Senator.
Great, thank you very much. Appreciate it.
Merry Christmas.
Coming up, the court ruling in Hong Kong in the case against media mogul Jimmy Lai. Details next. Then Walter Isaacson will join us to talk about the bidding war for Warner Brothers Discovery and Disney's big bet on AI. Clock, be right back. activist, media baron Jimmy Lai, guilty of sedition and collusion with foreign countries. 78-year-old was charged under Hong Kong's controversial national security law that was enacted in 2020 after pro-democracy protests the year before. In an 850-page judgment, the court said Lai had, quote, harbored his resentment and hatred of People's Republic of China for many of his adult years. Lai had pleaded not guilty to 2 charges of colluding with foreign forces under the national security law, as well as another charge. His sentencing is expected to take place on January 12th.
Okay, when we come back, we're going to talk about Disney's big AI deal, the bidding for Warner Brothers Discovery, and so much more. We've got Walter Isaacson with us at the table. We're excited to talk to him in just a moment. And then later, an exit interview with New York City Mayor Eric Adams. That's coming up at 8:30 a.m. Eastern Time. Squawk Box. We're right back after this. Welcome back to Squawk Box. Our next guest is going to be weighing in on Disney's billion-dollar deal with OpenAI, dueling bids for Warner Brothers, and so much more. This morning, Walter Isaacson is here. Great to see you, of course. Walter's Pro Weinberg Advisory Partner, Tulane University history professor, CNBC contributor, amazing writer, and all-around great friend of ours. Help us understand. Let's go AI first. You saw the Disney story. Were you surprised, and what do you think it portends?
Well, I wasn't surprised because Bob Iger, he actually shouldn't retire next year. He has been on top of this and leading it, but here's the key thing. In this era of AI, people who create content should be part of the party when the proceeds get divvied up. Otherwise, you won't have content created. So whether it's the New York Times, which is doing its lawsuits, Wall Street Journal has made its deal with OpenAI, the important thing is whether it's the Times-Picayune of New Orleans who's sending reporters to every high school football game and getting its data straight, we have to have it so that they make deals and Disney is leading the way.
Well, the question, though, which is interesting to me about the Disney deal, is it focuses mostly on characters that are clearly Disney IP. They haven't gotten into sort of the live action universe, which actually gets much more complicated. So, for example, in the future, if you want to wear an Indiana Jones hat, should Harrison Ford get anything for that? If you want to have a Johnny Depp in the Pirates of the Caribbean, do those creators get share in this? Do the creators of the films from the get-go get a share of this? How do the economics
Anyway,
work?
we're talking about there are complexities here, and obviously, if it's Mickey Mouse, that's been on different character forever. If it's, you have to figure out how much do the actors get. At some point, I had a great old boss who said, "Let's quit fighting over giving up the proceeds till we finish robbing the stagecoach." At first point, you got to figure out how do you get the stagecoach, and that's to say we're going to make these deals. Then you say, okay, Harrison Ford, Johnny Depp, we're going to cut you in this way. There can be some debates, but we can't let AI take all of the profits. When you're writing a book on 1929, I don't even necessarily have to buy it. If I want to answer your question about the Fed, I can ask AI, what does Andrew Ross can say about Fed chair independence? And it would give it to me. Well, I've just, they did, was it Perplexity, I think, made the deal. I just got it in the mail, which is they scraped all my books, they pirated all the books from one of these pirate sites, and there was a lawsuit, and they sent me something, saying, hey, fill this out, we're gonna give you.
I just got one of those from Anthropic.
Anthropic, I'm sorry.
Yeah, Anthropic.
Same one.
Honestly, I did the math. I think that, I don't know about you, I for too big to fail, I might be owed like $1,500. Or something like that. It was not.
How much are they offering you?
I think that's what it's like. There's a couple $1,000 is what they said. Is what the settlement is based on all of the different books that they scraped.
1.5 billion, right? The settlement. But look, you did the math. That's because you're the type who does the math. I just said the principle has now been established. They got to pay.
Right. Let me ask you a question. We've been talking for obviously the past couple of weeks. It's maybe longer now. I imagine it'll go on even longer. The soap opera that is the fight over Warner Brothers Discovery. And interestingly, we should say, in terms of your own background, you ran CNN for a period of time.
I started off at Time, which became Time Warner, which became Time Warner, CNN, AOL, Warner Brothers Discovery. The problem, one of my thoughts is all these people, ever since I worked for Gary Levin, at Time Incorporated, they make all of these deals, they undo all of these deals, and it's mainly financial engineering. People should.
But wasn't there a period of time where, when you were at CNN, I could be wrong about this, that they tried to merge CNN with CBS, which of course is owned now by Paramount. So this deal
Andrew Hayward and I, he was president of CBS, we're having dinner tonight. We shouldn't tell people, but we're having dinner tonight to celebrate. That it must have been 20 years ago. I'm trying to remember, even before that, 25 years ago, when we sat at my kitchen table in Bronxville, New York, and Andrew and I went bureau by bureau and worked with Les Moonves and other people. We also did it with David Weston and Bob Iger and ABC News and Disney. It makes sense to merge CBS with a broadcast network. And we did it. And then Ted Turner, who was still in full glory, took a sword to the boardroom meeting and waved it around and said, we're not going to give up control to CBS.
So when you think about the two deals that are on the table now, Netflix on one end, and they're a little bit apples and oranges given the nature of one being for the entire company, Paramount trying to buy the whole thing, Netflix trying to just buy the streaming business and the studio business. Ultimately, I think it's going to go to the highest bidder at this point. But where do you think the regulatory apparatus is going to land, and this idea that the president is going to be involved directly in the decision? He said the quiet part out loud this time.
Right. That's the big one, which is, will the president of the United States put his thumb on the scale for the regulatory issues to get CNN spun away, to change CNN, to get it so that the Ellisons, his friends, David Ellison and his father Larry, can get it through the whole Paramount.
He's also been critical of them as owners, even with what's been happening in 60 Minutes. I just say out of fairness to both sides, because you invariably say one thing about one side or the other, and you get viewers who come at you.
Right. I'm just saying that a president should not be using regulatory powers, such as antitrust investigations, to tell a news organization what he wants them to do. People invoke the First Amendment all the time, and usually it's spurious. But this is exactly what the First Amendment is about, is that government should not have the right, and the president shouldn't have the right, to tell news organizations what they should do and use regulatory things. Like saying, your thing is not going to pass regulatory review unless I like it. That is a real corruption of power.
That asks you, you wrote the book on Elon Musk. So SpaceX, reportedly looking to go public next year. How do you think that fits into the Musk empire and just how things, how do you interpret that?
Well, I think going public, he probably slightly reluctant. You need to if you're going to make the biggest thing. It is sending more than 95% of all of Earth's payload to orbit comes from SpaceX. The rest is China, NASA, Russia, Europe, whatever. So he's making huge, and what's truly huge is things like Starlink, which is recreating the internet in outer space. So he, I guess, needs to go public. He's not somebody, he kind of chafes at the restrictions that come along when you go public, as we saw with Tesla and other things. But I just think this is a company that's really going to go huge. SpaceX. Yeah.
Well, Drew Isaacson, it's great to see you. Appreciate it. Thank you. Merry Christmas, Happy Hanukkah.
All that. Happy New Year.
Thank you.
You do need that.
We do.
Still to come, we will talk to the head of HR for the U.S. government. Scott Cooper is the director of the Office of Personnel Management. He'll join us live from Washington, 8:10 a.m. Eastern Time.
Squawk Box. A Roomba vacuum maker, iRobot, filing for bankruptcy. It says it's going to go private after being bought by its primary manufacturer. The company has faced some competition from lower-priced rivals and stress from U.S. tariffs. That includes a 46% tariff on imports from Vietnam, where iRobot builds its products for the U.S. Amazon, if you might remember, tried to buy iRobot years ago for more than $1 billion. Ended up scrapping that deal after it faced pushback from e-regulators. I went back to actually look at the interview that I had done with Andy Jassy, and it's so interesting because he said at the time how sad it was that the deal was being called off, in large part because, but interestingly, made the point that there were so many different Chinese competitors at the time, and that he said, look, here's this great opportunity to keep this, not to keep the company in business, but make it even more competitive. That was the argument, and the EU didn't see it that way, and here we are.
To a Chinese company, basically. Coming up, Dallas Mayor Eric Johnson will join us. He is the president of the Republican Mayors Association. That is next. Squawk Box will be right back. Our next guest is here to weigh in on the business climate in U.S. cities, affordability, and much more. Let's bring in Dallas Mayor Eric Johnson, Chairman and President of the Republican Mayors Association, which is convening here in New York City. Mr. Mayor, welcome. Good morning to you.
Good morning.
Dallas has a lot of Goldman Sachs employees. It's got an exchange launching. I mean, what's been sort of the driving force there in terms of attracting businesses?
Well, I think this is it's been a long time in the making. Dallas has been a very pro-business city for a long time. A lot of America's great Fortune 500 companies started there, Southwest Airlines, Texas Insurance, and all. So we've had the big sort of corporate footprint for a long time. That brought some high net worth individuals over time, some wealthy individuals, going back many years. They've got family offices there now, and that has brought a lot of private equity attention, even now some more venture capital attention. And I think that ecosystem really launched what we're calling Y'all Street. A lot of financial institutions have decided they want to have a presence in that part of the United States that's growing so fast, the Sun Belt. I think Dallas is probably the buckle of the Sun Belt, and so I think Goldman Sachs maybe making the biggest investment in recent years with I think that investment's closing on $750 million they're putting into a new campus there, right in the middle of downtown. So it's pretty cool, and it's attracting more and more activity. And I think we had an announcement this morning from Goldman. They're actually going to be an investor in the Texas Stock Exchange along with B of A, so that's going to be pretty cool.
You're the chairman of the Republican Mayors Association. There have been some key events that have happened in the past year or so. A Democrat has won the Miami mayoral race for the first time in 30 years. 2 socialist Democrats have won New York City, here in New York City, as well as Seattle. What is going to be the tone at this conference?
Yeah, I think we're talking about how the Republican Mayors Association is going to be very integral to getting the RNC, getting the Republican Party at large to pay more attention to our cities. I think for a long time, the Republican Party has basically conceded that Democrats are going to be dominant in our major cities and have used them more as foils to talk about. But what we're realizing now is that there are a lot of votes in these cities and they actually impact the statewide races, and particularly in these swing states, it becomes very important in presidential years. It's going to be important in 2026 in these midterms that we do well in some of these cities. So we're going to have a conversation about where of the 60 to 70 U.S. cities of the top 300 they're going to have an active mayor's race going in 2026, where there's overlap with a key congressional race or something like that, where we want to get involved and get the RNC involved early. Like in Miami, the Democrats were really early to get involved in that race, and it paid off for them. And they outspent us 19-1 in that race. We can't let that happen.
I got one for you. It feels like there is now open gerrymandering taking place in Texas, open gerrymandering in California. We're just seeing it, and people are pretty straight up about it. How do you think the American public should think about that?
Well, we've been, I mean, the term is very old because we've been doing it a long time. It's the mid-district thing, the mid-decade gerrymandering that I think that's sort of throwing people off. Normally we do this every 10 years, and that seems like we're perpetually in redistricting mode and gerrymandering mode. So we've always done it, but I think the frequency that we're doing it is maybe off-putting to people. But the reality is the political party in power has always wanted to preserve their power, and it's nothing new. It's not unique to the Republicans or the Democrats. In blue states, Massachusetts, where I went to college, and places like New York, you see a representation in their congressional ranks that doesn't necessarily actually perfectly reflect the percentage of Republicans they have in the electorate. So this isn't really a new thing, but we're doing it a lot more frequently, and it'll be interesting to see how much tolerance the American people have.
And then the other thing I wanted to ask you is what you're seeing in you talk about affordability constantly, what you're seeing with your own constituents right now as people think about that. I was with Treasury Secretary a couple weeks ago, and he said that folks, if you want to get out of states that have inflation, he said, you should get out of the blue states, go to the red states. I don't know if you think it's more affordable where you are right now than it is in other places. There's some evidence, at least looking backwards, that there's actually more inflation, interestingly, in some of the red states, Florida and the like. By the way, I was just in Austin. Prices are going up because a lot of people moving there.
It's objectively more affordable in Dallas compared to cities of comparable size, but I do think that the affordability issue, what people are calling affordability, is one I've been giving some thought to because it's going to be relevant going forward for the Republican Party. Because here's what I think is not being said a lot. When we talk about affordability, I think to a certain degree people are forgetting that we do live in a free market economy, at least ostensibly, and prices of things are determined by the market. Supply and demand determines the price of things. But there's this growing feeling that maybe government can or should be playing a greater role in setting prices. And I think that, to me, is a little bit concerning. And I think in New York, the election of a socialist as the mayor who campaigned on, oh, things are expensive, I'll make them less expensive for you. Let me fix that for you. Let me set the price of housing for you. Let me fix the price of childcare for you. Even if I recall, let me fix the price of groceries for you. Let me open some stores and set the price of groceries. That's sounding a lot like a command economy, and like you want to get involved in setting the prices of things as opposed to letting the market do it. And I think Republicans have to be very careful about how we respond in this environment, because if we go down that road, I think that we're sort of playing to the socialist game here, and if we don't, we appear not to be sensitive to the issue. So I think we've got to talk more about how the way you lower the price of housing is increasing the supply of housing. You permit more efficiently, and you make it easier to do business. You increase the supply of housing, and that pushes the price of housing down. It's not by telling everyone, oh, well, I think I know what the price of a house ought to be. I mean, what's next? I mean, we're just going to determine what the price of an automobile should be. We're going to determine what the price of clothing should be. It's just not the way it works. I mean, unless we really start tacking down that path of socialism, which apparently some people want to do. I think it's a generational thing, too.
Mayor Johnson, thank you.
Thank you. Great to see you. It is 8 a.m. right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross, along with Melissa Lee. Becky and Joe are off today. And a little bit of news and something else that's new for you this morning. You may have noticed it. It's right on the screen. Actually, I'm pointing the wrong direction there. On the screen on the corner right there, CNBC's new logo. It's a refresh for our network as we get ready for the spin-off with Versant. We're going to continue bringing you all the financial news, business news, of course, you rely on. The new brand includes an upward tick to represent our optimism about what is ahead, and really, I think, refreshes where this entire company is going. Meantime, today's top story is Ukraine's President Vladimir Zelensky saying he's willing to drop the country's bid to join NATO in exchange for security guarantees as part of a peace deal with Russia. Zelensky making that offer during a weekend talk in Berlin with U.S. officials. Steve Witkoff and Jared Kushner calling it a compromise to prevent future Russian aggression. And Intel is reportedly in advanced talks to buy AI chip startup Salmonova. Bloomberg reporting that the price tag is around $1.6 billion, and who's dead? The report says the deal could come together as soon as next month. And National Economic Council Director Kevin Hassett says he'd be happy to talk to President Trump consistently if he's chosen to lead the Fed, and stressed it's the Fed's job to be independent.
I think he has very strong and well-founded views about what we ought to do, but in the end, the job of the Fed is to be independent and to work with a group of people that are on the Board of Governors at the FOMC to drive a group consensus on where interest rates should be.
And on Friday, the president telling the Wall Street Journal he was leaning towards choosing Hassett for former Federal Reserve and Governor Warsh also potentially to run the Fed. Steve Wiesman joins us now on more with some commentary on the two Kevins. What do you think? Polymarket says Hassett. Are you on the Hassett end or on the Warsh end?
I'm on neither end. I'm on the end of trying to report what's going on.
I'm not saying who you like. I'm saying
no. But that's everybody asks me. It's like you go to a Christmas party these days and go, Steve, who's going to be the next Fed?
That's what.
Who is going to be? That's what I want to know. But here's the thing, I want to go through the timeline here and ask you guys what you think is happening out there. So I think I know a little bit, but let's look at the tail of the tape here, okay? First thing, what happened is the president on Air Force One goes, I know who it is.
Yep.
What happened to Polymarket? Hassett surges.
Yep.
A couple days later, the Fed candidate interviews that we know about get canceled. Then 8 days go by, and the interview is back on with Warsh. Melissa's shaking her head. Hang on, let me go through the rest of it. And then the evening of the 11th, as reported the next day in the FT, Jamie Dimon is among those signaling support for Warsh. And then December 12th, an interview, as Andrew just reported, the two Kevins are great, says the president. And of course, we know the interviews are back on. We don't know yet if other people are. So what we're hearing is that there's been some pushback. People in the president's ear whispering
on Hassett.
On Hassett. And what's also interesting is those comments you just read from Kevin Hassett on CBS seem to be directly in response to the pushback, sort of, in the sense of the thing on Kevin Hassett too close to the president, which, by the way, ironically, is one of his great assets.
Right.
That's the one the president wants, but apparently the pushback is Kevin is not the right guy for the job, for people who are very high level and have the president's here. But you can see there, the Warsh has gone up. Waller not yet in there, but I know a lot of people that think Chris Waller would be very, very good for the job because of his knowledge about monetary policy. He's written over.
The idea that Haas is 50 and Warsh is 41, it's a close, now we're a close call here.
Right. I mean, it's a close call. What I always worry about with these markets is that they become self-fulfilling outcomes, right? I mean.
So when you said tail the tape, I knew you were going to go through a TikTok of some sort, but I also thought you were going to overlay the 10-year yield. Because that seems to be an interesting thing to see, because when it seemed like it was Hassett, after that, yields went up, what, 20 basis points or so in the next few weeks?
Yes. If you guys could put it up from, I don't know, maybe the 30th would be a good place to start that particular tail of the tape. Because some stuff happened, and I'll tell you what happened. The president said Hassett on Air Force One, and yields went down. I think that's the belly in the middle there, that decline. But that may not have been related to Hassett. And some of us, including me, reported the idea that maybe the market was not concerned about Hassett. But it was actually perhaps some comments made by the Treasury Secretary about some capital and leverage requirements that caused the banks to rally and yields to fall.
Okay.
And then I'm really wary. I'm wary of this, Melissa, because a lot of stuff influences the 10-year.
Of course.
But you are correct in that as that percentage rose of Hassett, yields also went up along with it. I actually made a chart. I don't know if it's around, but and they ignored each other for a while, and then after the president said, "I know who it is," Hassett and the 10-year yield went up. Hassett's probability and the 10-year went up together. And I think that may be part of the concern there, that it's okay for the Treasury Secretary and the chair to meet, and they don't apparently talk about rates. But it's not seen as okay for the president and the Fed chair. President and the Fed chair don't meet a lot, never really did.
And so what do you think the distinction is between sitting across from Scott Bessent and Bessent delivering whatever message may be delivered to the Fed chair via the president, and so you're the lieutenant of, versus, and Walter, we were discussing this with Walter during the commercial break, versus when the president looks you in the eye and says...
I'm not sure the president, I think you make an assumption here that I cannot prove through my reporting, which is that the Treasury Secretary and the Fed chair talk about interest rates. I'm not sure that's true. I think the word is they talk about the economy.
Right.
They talk about the outlook for inflation. I think the Treasury Secretary may discuss his plans to sell bonds because there's an impact on the Treasury there. For example, now the Fed is out there buying a lot of bills that could help the Treasury Secretary issue fewer coupons. That's an issue, but I'm not sure they talk about interest rates. I would think that some Fed chairs who I know would think it inappropriate to talk about that with the administration, and would think it's inappropriate certainly to talk about it with the president.
Well, then this would be
In fact, I want to add one more thing, which is I know Fed chairs who think it's inappropriate to even meet with the president. If you notice, it was Powell waited until he got an invitation. He did not call the president and said, "Let's meet." He waited until the invitation, and then they talked, and apparently they did not talk about it. Now, there could be stuff going on behind the scenes I'm not aware of, but that's the reporting I know.
Steve Leisman, thank you, sir.
Pleasure.
Coming up, the push to modernize the U.S. government, the Office of Personnel Management launching a recruitment program for engineers. Director Scott Cooper joins us next. And later, New York Mayor Eric Adams will join us. He's stepping down at the end of the year. We'll have a wide-ranging interview at 8:30 a.m. Eastern Time. Spot clock, we'll be right back.
Welcome back to Squawk. The Office of Personnel Management is launching a new initiative today called the U.S. Tech Force. They're going to work alongside all government agencies and several top technology companies, including Alphabet, Apple, IBM, Meta, Microsoft, NVIDIA, OpenAI, and so many more. Joining us right now with the details, Office of Personnel Management Director Scott Cooper. Good morning to you, sir. Tell us about this new endeavor.
Yeah, great to be here. Thank you guys for taking the time today. So look, what we're trying to do is a couple things. As you know, technology is obviously incredibly important to the future of the government, and we're trying to reshape the workforce to make sure we have the right talent on the right problems. So first thing we're trying to solve with this endeavor is to make sure we've got modern software talent, modern AI talent in the government. The second thing is, you may know this, but only about 7% of the U.S. government workforce is early career, so people who are, let's call it like 5 to 7 years of work experience. That compares to almost a quarter, actually, in the rest of the workforce. And so we're not doing a great job of kind of, as we have people retiring from government, we're not doing a great job of bringing the next generation of leaders in government. So this program is really intended to solve both of those problems.
And how easy or hard do you think it is to get talent to actually show up in this world that we're living in?
Well, look, I think the message that we're going to bring to people is a fantastic message, which is, do you want to do good for the country, and also do you want to advance your career? So one of the most important things we're doing, Andrew, is we've partnered with about 25 of the top private technology companies, and they've agreed to help us kind of provide career development experience for folks. We're going to do a job fair for people once they complete their 2-year term here. So what we're really trying to demonstrate is that the work that you can do in government is both challenging, complex, and that if you decide ultimately you want to go in the private sector, that's great. That work is valued by the private sector, and you'll have the opportunity to take that as the next stage of your career.
Scott, you've obviously spent time with the most sophisticated companies in the world. You've invested in them in your previous life. What is your take just on how good or terrible the technology is that we as taxpayers are dependent on today?
Yeah, I'm going to avoid saying good or terrible. I'm going to say it's dated. I guess maybe that's the best way to describe it. And so, look, part of what we're trying to do with this program is we've got to modernize our systems, right? So if you're the Department of State and you're trying to do great intelligence, you've got to have modern AI to do that. If you're the Department of War and you're trying to make sure our fighters have the best technology, that all requires modernization. So that's what this really is about. It's reshaping the workforce to make sure that we have people who understand things like agile software development, people who understand AI and can apply those technologies. Because, yeah,
the reason I'm asking though is how much of it is the issue that we don't have the talent, and how much it is that talent doesn't want to go into government because government doesn't have the hardware effectively.
Yeah, I don't think the hardware is the problem. I think the reality is, a lot of the work that that we've been doing here at OPM is we're trying to change the nature of the workforce, right? We're trying to create a high-performance culture where people can come to work every day, do their best job. So I think these things work in tandem, which is we've got to tell the right narrative to early career people, which is these are some of the world's most complex and challenging problems. And if you're excited about that, come do this. And oh, by the way, we have to have a work environment where we eliminate bureaucracy, we don't have a lot of red tape, we're able to promote people who actually do well. And so we're doing both of those things at the same time. And I think that's what actually will enable us to be successful in this program.
Okay, but here's the other one. When you have a world where there's an arms race, effectively, for talent, and you have the Mark Zuckerbergs of the world, and I know you're partnering with a lot of these companies as well, but some of these engineers, as you know, are getting paid an extraordinary sum of money. I mean, just it's remarkable. The top talent in AI right now, you can't attract these people fast, and you can't pay them enough. And so how do you actually get those people to go into government when the paycheck is going to be so much higher elsewhere?
Yeah, so we're doing a couple things, Andrew. So one of the reasons why it's important to focus on early career is that the pay gap, at least, is a little bit less between private and public sector than it is as you kind of go through your career. So we're never going to solve that problem, right? It's always going to be kind of less remunerative to be in the federal government than it will be in the private sector. That's fine. We understand that. The real question and the opportunity I think that this program has is, can we demonstrate to early career folks that the types of problems they're going to solve are the world's most complex, they're the biggest problems, and oh, by the way, you know what? Give us 2 years of service, and then you're going to have Zuckerberg and all these other guys clamoring for you because the experience you'll get, the knowledge you'll learn, that's going to translate well into the private sector. So I'm not asking people to commit to a 40-year, career, civil servant career. I'm asking people to say, hey, look, do something good for your country for a couple of years, and in exchange, we're going to make sure you're well set up in terms of your broader career after that.
Okay. Scott, I want to thank you. I want to thank you for what you're doing. We appreciate it. We always love seeing you. I want to wish you happy holidays.
Happy holidays to you. Thank you.
Thanks.
Still to come as investors chase the buzz around AI, are they missing out on opportunities in industrial names? A sector spotlight next. Then later, New York City Mayor Eric Adams will join us. We'll talk about his successor, Mayor-elect Zoran Mamdani, the state of the New York City economy, and his outlook for the future of the Big Apple. Meantime, take a look at futures. We are indicated higher right now. Dow looking at 229, S&P up by 33, NASDAQ higher by 148. We'll be right back. With perceived growing risk in tech, investors are rotating into industrial, sending the sector to record levels. Joining us now is Nicole DeBlaise, Deutsche Bank research analyst. Nicole, great to have you with us.
Thanks, great to be here.
It's actually been an extraordinary run that maybe people aren't even paying attention to. It's the longest winning streak since August of 2020. The transports, though, Nicole, as you know very well now, they're very different in terms of the components of the index itself. There are the airlines, there's the truckers, there's the expediters of the world. So where do you see sort of the most opportunity in 2026?
Yeah, so we cover electrical equipment and multi-industry, not transports, and I think with respect to what we've seen within the broader industrial space, I think investors are starting to become a little bit more optimistic about the potential for a recovery, and I think that's come from a few things. It's come from, tariff policy stabilizing. It's come from hope that maybe the Fed would cut. It's come from the ISM index being in contractionary territory for 3 years running, and I think hoping that we start to see a reversal of that in 2026. I think that's all kind of tied into why the industrial sector has been underperforming in recent weeks.
I apologize. I don't know why transport's on the brain, Nicole, so I apologize. But in terms of industrials, some some of the greatest winners in the industrials have been some of the areas that are tied to AI that are thought to be sort of related AI plays. Do you see their fortunes sort of following the AI trade, or can they still go higher because of the very strong backlogs that a lot of them are experiencing and reporting?
Yeah, so we kept a lot of our positive views on the AI space. In fact, our top pick for 2026 is Eaton, which is a company that has about 20% exposure to data centers. We also really like GE Vernova. We've been big fans of that company for a long time. And the reason why we've decided to keep those buy ratings is because you're absolutely right. Backlogs are extended. Companies are now booking orders into 2027. In the case of GE Vernova, booking orders into 2029 and beyond. So we have quite a bit of visibility into continued upside versus consensus estimates, and the magnitude of upside is still very great. We're coming to, potentially high single digit to low double digit upside potential through 2028, which is still very attractive to us.
I mean, that investor day for GE Vernova was extraordinary in terms of the guidance lift and then the follow through on the stock, not just that day, but also the day after, Nicole. And I'm wondering, if you start thinking about the out years, 2028, 2029, and you sort of think to yourself, let's take out a percentage of that AI exposure. What would that leave us? Just in terms of trying to get our arms around where this stock should be valued, like what is the floor valuation if the AI trade deflates a little bit?
Yeah, I mean, I think the floor, we kind of saw this play out with GEV over the past few months. I mean, the stock kind of stalled in the high 500s, low 600s, and so that's kind of what we come back to for what a floor could be when sentiment around AI was a little bit more bearish. But I think, listen, the reason why the stock traded up so much on the investor day is because this isn't just a story about gas turbine demand, which is extremely robust, by the way. But we now have visibility into the gas power services aspect of this, driving continued outsized earnings growth versus peers into the 2030s. We just don't find that visibility in many spaces in industrials.
So it's the services sold along, so the recurring revenue as opposed to just the sale of the turbine. It's the services that follow that makes the story much more compelling.
Exactly. They sell a long-term service agreement with every single gas turbine, and those gas turbines that they're selling that will go into the installed base over the next few years will come into their major service windows in the 2030s.
In terms of the industrials that may have been left behind, are there some that you think are underappreciated at this point?
Sure. I mean, I think if we do see a short cycle recovery play out, the three that come to mind where our analysis shows us that there's still significant upside potential. So Dover Corporation, Illinois Toolworks, and Ingersoll Rand are the three where we see the potential for not just earnings upside in that event, but also a multiple re-rating. So you could get upside, north of 20% for all three names, we think.
Wow. Nicole, thank you. Great to have you.
Thank you, you too.
Okay, coming up next, a bit of breaking economic news, and then Eric Adams in one of his final interviews as mayor of New York. Squawk Box coming right back after this.
are just seconds away from Empire State Manufacturing. Taking a look at futures and how we are setting up ahead of that release. The S&P looking at 32 at the open, NASDAQ higher by 140, the Dow up by 223, of course, reversing some of the losses that we saw on Friday, where we saw 1% declines pretty much across the board. The treasuries this morning have been fairly stable. The 10-year yield sitting at 4.17%, the 2-year at 3.5%. Rick Santelli is at the CME standing by for the numbers, but in the meantime, Rick, talk to us about what's going to happen. We have a lot of data this week. We've got BOJ meeting this week. Got a lot going on.
Yeah, we do have a lot going on, and not only that, we have to continue to monitor what's going on in other countries, their debt scenarios, their issuance scenarios, whether it's Japan as their twos really all the way out to 30s are hovering at some of the highest yields for the most part since 2007. Their currency is taking a bit of a breather. It's coming back a little bit against the dollar. It's still very stubbornly low against the euro currency. But maybe the most important issue this week, as you pointed out, is we'll get a bit more caught up on what's going on the labor side, at least from the job side, the hiring side. And we know that we're going to have limited scope in terms of being able to look into the unemployment rate. One group, of course, that surveys those data points is not going to be able to go back in time, so we're not going to have that October rate. We'll have the November rate. I don't know that'll make a huge difference. I think the other issue that we need to keep a very close eye on, of course, what's going on in the debt markets just in general with AI and all the associated debt to try to create that infrastructure. Of course, there's so much investors could buy, whether it's sovereign, investment grade, or high yield, and there's going to be a competition for investor demand in that arena, and I think that's going to keep long rates, especially stubbornly high on the sovereign side. All right, Empire for the month of December, manufacturing in and around New York, still on the downside, minus 3.9. We're going to actually hope for a positive number in this series, but minus 3.9 is when we end up with. Minus 3.9, well, the last time we had a negative number was minus 8.7. That was in September. Last month at positive 18.7 was the best positive number we had going all the way back to April of 22 to show what this series has been doing. Of course, with the payroll numbers coming out, I don't want to underscore that's the only glimpse into the economic catch-up we're going to be playing. We'll have retail sales, and this week we'll also have inflation numbers in the form of CPI. Ultimately, I'm a bit of an outlier. I think the Fed needs to tread very safely. I look for resurgence in economic activity, and I do think that the housing market is going to be handicapped for another year in 2026 due to stubbornly high rates. Back to you, Andrew.
Okay, Rick, thank you for that. With just a few weeks left in office, we are joined now by New York City Mayor Eric Adams, and at least for us, what may be an exit interview of sorts. Good to see you, Mr. Mayor.
Hey, great being here this morning.
I want to talk about the last 4 years, but really want to talk about the next 4 years and what you see in this city. We were talking a little bit off camera just about the next mayor, and I said to you, so maybe you could say it on TV, whether you had met with the mayor and just what that experience has been like, because you guys have obviously been at it on both sides.
And that happens during campaign season. You'll have the back and forth action, but then the election is over. It's time to safeguard a place that we all love, and that's New York. And that's what we did. We had a great conversation. We're going to turn over a transition document with a lot of information. My team, we have already been meeting with his team, the mayor-elect, and to make sure that he got the smoothest transition as possible. And that's my job.
How many times have you met him? A couple times? You talked to him a lot? What's going on?
We communicated several times the modern communication way now through text messages, number one. Number two, we had a great meeting at Gracie Mansion. And actually, I met the man and his dad prior to him running for mayor. We had a great conversation then. And, New York I have a New York state of mind. That's it.
Are you optimistic about the city?
Cautiously. If he gets in office, and as many of us do realize the complexity of running a city of this level, we'll navigate some turbulent storms. Some that we see, and some that you don't see. But if he allows the agenda of the Democratic Socialists of America to be the platform of the city, we're going to be in for some real problems.
Let me ask you a separate question. Because you took to Instagram and some social media and the like when he came out and said that he was going to stop the sweeps of some of these tented camps around the city. We then had Kathy Wild on the broadcast, and she tried to suggest that actually he wasn't going to do that. What do you think is going to happen there? Because it gets to the issue of security and just life around the city.
Well, yeah, I mean, you're right. It's more than, first of all, it is a security issue. January, when I became mayor in 2022, I went and visited those camps. Stale food, human waste, drug paraphernalia, schizophrenic behavior. And so we need to understand that not only is it a humanitarian issue, but also as a business. You don't want to walk out your business and see someone sleeping in a tent. We look at what's happening in other cities, and it was a humane thing to do to get people indoors.
So what do you think he's going to do? And have you talked to him about that, or his team about that?
When we sat down and spoke, I told him how important it is to make sure that we keep the encampments and homelessness under control. That's one of the top things we hear from New York.
So what was your takeaway from that conversation, given what he said publicly about this?
Well, I think that he has a team of people he's working with. As I stated, many people don't know of the Democratic Socialists of America. They should read their agenda. They don't believe there should be any prisons in our city. They don't believe that you should do encampment enforcement. What they believe in decriminalizing prostitution after all that we've done. If he follows that agenda, we're going to be having some real quality of life issues in our city.
In recent weeks, you've signed a number of executive orders in a seeming effort to sort of stop Mayor-elect Mamdani from enacting parts of his agenda. Is that the right characterization of what has gone on, trying to bulwark the city against what he is trying to do?
No, not at all. I'm protecting the legacy and protecting New Yorkers. I was really surprised to see how many people talked about my executive orders. And I look back at some of the stories when Bloomberg left de Blasio, when de Blasio left for me, no one talked about the executive orders. I don't control my campaign finance board. Those are all de Blasio appointments. I don't control the CFCO's conflict of interest board. Those are de Blasio appointees. And so this is what happens in government. The incoming mayor must deal with whatever was put in place by the previous mayor. So I'm just making sure New Yorkers are safe and the legacy is safe, like on the RGB board. If you tell small property owners for the next 4 years, no matter what the economic outcomes are, you could never be able to increase their rent. Small property owners, 18 units houses, they're going to hurt in the city. I'm protecting New Yorkers in my legacy.
Let me ask you a different question. We were talking at the top of the broadcast about what happened in Australia, Bondi Beach, and what's clear anti-Semitism, if not terrorism, in those murders. And there is a conversation in this city happening right now about Jews. I'm Jewish, by the way, and about anti-Semitism and the conflation oftentimes of anti-Zionism, which is something that this mayor has talked about to some degree, and whether you think that people understand what is a very nuanced position in some cases about folks who disagree with the policies and politics of Israel versus the folks who disagree with folks who are Jewish. And how you think about that today and what is about to happen in this city?
That's a great question. And look at Sydney right now. Have you heard the Sydney government, have you heard them talk about anti-Semitism in this attack? Have you heard them since October 7th, 100,000 Jews in that country? Have you heard them stand firm? No, you haven't. And that's troubling. And if the leadership of a country or a city is not willing to point out when a particular group of people in their country or city are being harassed, harmed, threatened, standing in front of the synagogue, calling for globalized intifada, if we're not willing to stand up as the leader of the city and say this is wrong and it's not going to happen, that is what's troubling. Anti-Semitism has been normalized across the globe in general, but specifically here in New York, and that's what Mayor.
Let me ask you about this next mayor then.
Yes.
So what do you think his real position is? By the way, he came out to his credit, I think, yesterday, put out a statement about not just what happened at Brown University, but what happened, at Bondi Beach. And I just wonder what you think it portends for the city.
Well, he has to corral his supporters. And when you go into office with your staffers, your supporters, and their philosophy is the destruction of Israel, and translate into what you verbalize and what you show here in your city, that's a problem. And he must corral his supporters to send a very clear message, not only about what he say, but it's in action. Don't dismantle the IRA definition. Don't dismantle our Office of Combat Anti-Semitism. Keep doing the groups sessions that we're doing with communities across the city to bring us together. So you can't say in one breath that Israel does not have a right to exist. Then you have so many Muslim countries that have Muslim leadership. I've been to Saudi Arabia, I've been to Oman, I've been to Jordan. They are clear Muslim countries and they have a right to exist. I expect their right to exist. Israel has a right to exist. Our only partner, when you think about it, you know, they're against ISIS. ISIS hate America. They're against Hamas. Hamas hates America. They're against all these other terrorist groups who hate America. I'd rather align with those who love me than those who hate me.
Let me ask you a separate question. Commissioner Tisch, who runs the NYPD, she worked for you. She's going to work for him. Do you think that she is going to be in that role a year or 2 or 3 from now?
We hope so. Look what we've done with crime. 25,000 illegal guns off the street. We had one period over last week, 12 days without a homicide. We're seeing record level of safety on our subway system, where the employees of the companies that watch the show.
The reason I asked the question, though, is having spent time with this next mayor, though, do you feel confident that he's going to give her the independence to make the decisions that, by the way, clearly she has views that are different from his?
That's a conversation that the two of them, I'm sure, they had when they sat down together and she made the determination what she's going to do next. I know she loves the city, and I know that, like my other commissioners, Commissioner Sewell, Caban, and now her, there's been a consistent decrease in crime. Our city is still the safest big city in America. More jobs in this city in the history broke the record 11 times, more small businesses. AA bond rated. This city is on a good plateau that we can't allow safety to harm.
In terms of what you're looking forward to in 2026 and the concerns that you may have, we were discussing in the break that we, as New Yorkers, will be able to fare whatever comes pretty well. We're very fortunate, but there are many in New York who aren't, and they're the people who, in large part, voted for Mayor-elect Mamdani. In terms of the policies, where are you the most concerned in terms of the policies not necessarily serving those who are the most vulnerable, whether it be in educational funding or safety in the streets?
That's a great question.
Where are you worried?
Okay, 2 things. Number one, those weren't the New Yorkers who voted for him. Let's be clear. 49% of New Yorkers did not vote for him. 49%. 50.3 or 4 did. So many New Yorkers are concerned. But here's my areas of concern for New York. Public safety. He wants to release 3,000 inmates from Rikers Island. They're going to go back to the communities they played on, the Brownsvilles, the South Jamaica, Queens, etc. He wants to decriminalize prostitution. We did a great deal of work to tell these young girls and boys, don't sell your bodies on the street and be exploited. We're going to go backwards in that area. You can't tax communities based on their ethnicities. You can't tax white communities based on their ethnicities. We saw that what's happening now with African Americans and Asians and other communities are being taxed based on where they're located. You can't do that. And you can't run millionaires out of the city. 51% of our taxes. So we're in a financial ecosystem where the guys that drive the limousine should have a good pay, and the guy that sits in the back of the limousine should pay his taxes. So if he continues the GSA policies, it's going to hurt working class people. That is my concern.
It's a different question.
Yes.
Given your concerns about this mayor,
yes.
This is a personal question for you. You dropped out of this race. There's an argument to be made that you should have dropped out a lot earlier. That if, in fact, you really wanted to prevent this mayor from winning and wanted somebody else to win, in this case, Andrew Cuomo, who I don't think you were a big fan of either, that you needed to have dropped out much earlier in the process to give him a chance, and whether he would have had a better chance to win otherwise.
Think about that. See, think about how ridiculous that question is. I'm the sitting mayor of the city of New York who stated, I'm not going to run in the primary. I'm going to run in the general to go head to head. And many people said, Eric, that makes no sense. And then all of a sudden people realized how wise I was, because head to head, we would have had a fair chance to win. I had many conversations with the governor and said, Governor, just look at this bill. You had the primary. Let me now go.
So you're arguing that he should have dropped out, and then you would have won.
Without a doubt, you know, sitting mayor, we were able to put together the operations to have a serious campaign, and look at the outcome. 49% of New Yorkers who didn't come out to vote. Many women didn't come out to vote because of how they felt.
But the polls did not seem to reflect that and I think one of the reasons that you dropped out was in fact that you weren't going to win.
No, the reason I dropped out is because we could not have a three-way race as other candidates dropped out. I did what was best for the city, not what was best for me.
And where I'm going with this is, wouldn't it have been best for the city to have dropped out a month or 2 or 3 months earlier? That's where I'm going with this. I mean, in retrospect, you know, everything's, you know, it's a lot clearer afterwards, so I get that. But when you look back at it now, and again, if we would go to lunch 5 years from now, would you say, you know what? Maybe I should have.
No. Maybe I should have done what I was sworn to do, to run for office, run for re-election as the sitting mayor. Remember what I'm saying here. I was the sitting mayor, the second African-American mayor in the history of this city. I'm the sitting mayor. If I would have said after the primary that I'm going to abandon right away, that would have been the same foolish thing to do when people were calling me to step down while I was navigating the city in the right path. I made the right decision then. I recovered our economy. I brought down crime. I built more housing than any man in the history of the city. I improved our education. Just as I didn't listen to those who were saying, step down, step down, step down.
I give you actually an enormous amount of credit. I actually think that you've done an extraordinary job, and the city has prospered during your time here, no question. I also think, for whatever reasons, and I apologize for saying it to you this way, but because of some of the scandal and baggage and relationship with the situation with Trump, you were considered a flawed candidate. By the way, Andrew Cuomo was also considered quite a flawed candidate.
Curtis Lewa was considered a flawed candidate.
I'm saying that there's a lot of flawed candidates here.
100%. You had a 49 to 50.3 or 4. Everybody was a flawed candidate. So the goal was to follow the plan that Eric laid out. Hey, guys, run in the primary. I'll do this in the general election. We will have 2 bites at the apple. So my plan wasn't flawed. It was flawed when you had people like Curtis Lewa, who I still believe was working for the Zoran campaign. You know,
you think he was real?
Without a doubt. A number of things. He never raised money like this before when he ran for office. So what was all those contributions coming from? Number 2, he clearly knew he had no chance of winning. He clearly knew that, but he stayed in anyway. And then do an analysis of who he attacked. He didn't attack Zoran. He attacked Andrew Cuomo. He attacked Eric Adams. So his whole strategy, you need to question and look at. And I think history is going to reveal his role.
Okay, I got a different one for you. So there's a lot of business folks who are going to be watching the podcast.
Yes, and they're going to say we love Eric Adams as mayor because Eric returned our economy.
They may very well, Mr. Mayor. My question to you is, I think there's a debate going on in the business community, among the larger businesses, about whether they should try to embrace this mayor and try to get in the tent with him, or they should be adversarial, if you will, publicly and privately. And I'm curious, as somebody who's been on the other side of this, what do you think the real answer is?
No, they should love New York, and they should.
But by the way, you can love New York and have whatever perspective. You can love New York and get into the tent, and you can love New York and say, you know what, I don't like with this part of it, and I'm worried that if that it's going in the wrong direction, I need to be outspoken against it, if that's the case.
That's exactly what they should do. And I said the other day,
what's exactly
that they should work with the mayor when they can work with the mayor. But if the mayor is not doing what's best for the city, they need to make sure they use their abilities as leaders. Like the partnership, like Rebney, like Abney, and they should use their ability as leaders to state where the mayor's going wrong, like they've done for me and they've done to others. And so we should be clear, the role of our business community is to continue to thrive, continue to grow, and the people in these buildings here, those are everyday working class people that live in the communities that want to ensure that we're safe, that don't want encampments on the streets, that want their children educated. So sometimes when we look at the business community, we forget about the secretary, the accountant, the AI professional. these are working class people. When they get on the subway system, they don't want to see homelessness. They want to be able to swipe their Metro card and go to their location safe. They don't want prostitution in front of their child's school. They want to walk out to see a clean environment. And so if the mayor doesn't continue what we have successfully done, they need to raise their voice and not be silent.
Mr. Mayor, I want to thank you for your service. Thank you for the interview, for being with us. What's the next plan for the mayor? What are you going to do next?
Smoke a cigar, have fun, enjoy Jordan. You know, I've been doing this for 40 years.
Yeah.
40 years. It's time for me now to sit back and just enjoy life. I want to travel again. I want to write a book. I want to get my PhD. I want to do some stuff across the globe and here in this city. I'm not going away. I love this city, and I'm going to make sure that nothing hurts the working class people of this city.
Well, we look forward to seeing you again soon, sir.
Thank you.
Thank you again. Appreciate it.
Up next, the AI-driven chip rally was dampened by Broadcom's cautious outlook. This board shows chip stocks in their 52-week lows and highs. All of them well off those highs right now. We'll find out which names should be in your portfolio for 2026. We'll be right back. Let's take a look at the chip sector. Green arrows across the board, at least right now, pre-market. Joining us, Chris Case, Wolf Research Senior Analyst. Chris, great to have you with us.
Good morning.
What happened with Oracle, with the OpenAI delays, with Broadcom? Has that changed at all the way investors should look at the sector?
We don't think so. And the Broadcom report from last week was really quite good. They're still upside to the numbers. They're looking at doubling their AI revenue next year, and with the potential of doubling the year after that. I think what is really the question on the mind of investors now is that
all these orders that have been placed in the chip companies, will the money actually get spent? And really, will there be enough monetization on the part of these on the part of the end customers to justify the purchases? And our view has been that, especially with the rise of agentic AI coming next year, if you're not spending the money next year, if you're not in the capacity, you're just out of the race, and we just don't see that happening.
I mean, you cover chips, but you got to take a look at the hyperscalers and also take a look at Oracle in terms of deciding whether or not that money will actually be spent. In your view, is there a chance that the upwards of $400 billion projected to be spent in the next 12 months by Amazon, Google, will that actually be spent, or do you think that gets dialed back? Because investors are increasingly looking for hard proof that there is an ROI to the spend.
Right, and we've done some analysis ourselves, and it does show that these deployments are getting a positive ROI. I think the concern is just the numbers are getting so large right now. But again, we think over the next 12 months, if you're not spending, if you are whomever, whether it's OpenAI or Anthropic or Google, and deciding we're going to hit the brakes on spending right now, and your competitors aren't, you're going to be left behind in the race. So, I guess there's two things here. One is the monetization and getting the ROI in the near term, and the second is just the cost of participating in the AI race now requires you to put that money to work.
Right. And then can you walk us through your thinking on competitive TPUs? I mean, with the rise of Gemini, the success of Gemini 3, there was some thinking that Google's TPUs, were going to be competitive to NVIDIA, and that's going to threaten NVIDIA's business. How do you view this?
And they really are. And we kind of see it coming down to, from a silicon standpoint, there's two major platforms. There's the NVIDIA platform, which works with everyone, and then the Google TPU platform, which largely has worked with Google in the past, and what's changed over the last couple of months is Google has started to look at expanding that to some others, such as Anthropic. The reason why those two platforms are the two most prevalent platforms is because they have the most performance. And now AMD with MI450 later this year, looks like they'll be a participant as well, although smaller scale. But the difference with the custom projects, these XPU projects like Google, is that they don't work with everything. So, we kind of look at the market that about 75% of the market will be these merchant solutions. That includes NVIDIA and AMD, because they work with everything, because they have the software support. The custom solutions like Google, and at this point, Google is really the only one that's on its 7th generation and is able to scale right now, handles a subset of the different workloads, and that's why we think it's important, we think it's competitive, but we think it stays at about 25% of the market. And even some of the numbers that Broadcom has been throwing out about their it supports that number.
All right. Chris, great to see you. Thanks. Chris Kasem.
Thank you.
Up next, iRobot having trouble cleaning up its act. That story and other headlines from today's show that will be in focus on Wall Street. Be right back.
Breaking on Squawk Box this morning, iRobot, the maker of the Roomba vacuum cleaner, has now filed for bankruptcy protection. The CNBC All-America Economic Survey showing the high cost of goods having a large impact on the Christmas shopping season. Meantime, the survey also showing 41% of Americans will spend less this year than they did last year. The data shows New York State factory activity declined in the December reading after 2 months of increases, but the outlook for the next 6 months is optimistic. Take a quick look at the markets before we hand it over to our friends in Squawk on the Street. Dow up about 250 points, S&P 500 up about 37 points, NASDAQ up about 180 points. Melissa Lee, thank you for hanging out.
Pleasure as always, Andrew, to be with you.
Always,
See you
always.
tomorrow.
We'll see you tomorrow. Make sure you join us then. Squawk on the Street begins right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. We kick off the final full week of trading of the year this week. Futures pretty solid and winding some of last week's decline. We'll catch up on some eco data this week. We'll get some jobs, some retail sales, 10-year around 416. Our roadmap begins with the state of the AI trade. Oracle's coming off those double-digit weekly losses. NVIDIA coming off 4 straight down days. And a big downgrade for one major AI chip player.
Plus, President Trump says Kevin Warsh is at the top of his Fed chair candidate list. This is JP Morgan CEO Jamie Dimon reportedly signals his support. And Goldman Sachs making a bullish call on one key area of the market. It's rallying right now. They're saying investors have not priced in growth in this sector for next year.
If our screen looks a little bit different today, that's because CNBC has introduced an updated logo design. The peacock may no longer appear beside our name, but everything you can count on from our reporting remains the same. This upward tick anchors the new logo and hopefully reflects our commitment to giving viewers the chance to achieve their financial goals and ambitions. Jim, kind of rhymes with the upward chart graphic design that we've designed.
A lot of people ask me what would be the big change when we move over, or we are moving over to Versant. And I've said over and over again, nothing. And I don't think it matters at all because the program is the same. I mean, David, you know that it has always been kind of an afterthought, necessarily, who you work for versus doing a great job.
Yeah, no, it's not going to change anything we do or the way we do it. I may talk a little more about Comcast in a way that maybe,
I was going to ask you, that's one of the reasons I brought it up.
Not that, frankly, to be fair, Comcast has never, and I always have appreciated, not once in the entire time, ever said a word to me about my coverage of the company. And I greatly appreciate that. But
And remember the days where we would play Hallelujah whenever we mentioned GE?
Back in those days. So, but it will be fair to point out that we will be completely unassociated with the company that has been our parent for a long time. And then, of course, we are going to be talking endlessly about the virtues of Versant. VSNT, for all of you out there, soon to trade, although not here.
1:25? It's a tough ratio.
Yeah, well, we'll see. Yeah, but it's going to
ratio for
maybe it'll trade at like 5 times EBITDA.
I'm just saying that if we're not us, I would say that was a bad idea and someone should have gone over it. You don't do that kind of ratio.
Why?
Because there isn't anyone who gets it from Comcast who would think about not selling it.
I see.
It's a natural to sell.
There may be some dislocation in the early days, but we'll worry about that in a couple of weeks.
We'll let it settle.
Fair enough.
Let's get to the markets as we start to wrap up this year. We're on track to open higher as we kick off, as we said, the final full week of trading. Next week, of course, will bring us Christmas holiday, New Year's following that, Jim. But we'll see whether we get some kind of Santa Claus rally.
Wait, look, I think that there is I'll tell you, I did a piece for the club this weekend. People say, well, there's an AI bubble that's going to pop. It popped. What the hell are they thinking about? The collapse of NVIDIA is rather stunning. There's been absolutely, whatever Jensen says has meant absolutely nothing. In the same way that whatever he said meant nothing on the way up. The disrespect that I see for NVIDIA and the fact that they're so caught up in a China trade and whether China's good or not, all I can tell you, I mean, the chart's bad, whatever. This is a stock that wants to go down, so to speak. And I think people just want to associate that in Oracle with the overextended ones. And they're very, very different. NVIDIA has some products that are coming out. These will be huge products. So it's going to distance themselves from everybody else. We're not going to be talking about Google's chip. We're not talking about whatever Amazon's doing. We're going to be talking about a chip that Jensen has said will be the reasoning chip. And I don't understand. I'm not saying disrespect. I'm just saying that if you look at this, the idea that it was still going up, you had we all act as if all that's happening is that NVIDIA stock keeps going up, what a bubble. Well, no one wants to touch this damn thing. I mean, this thing is so toxic. It's toxic. Now, I like it, and I told people to come to buy it. I feel very alone. I think it's headed to 150. I can see that. I'm not an idiot. But I will tell you this.
Well, let's start there. Why do you think it's going to go down another?
Because everyone thinks, I think the zeitgeist is that everybody spent too much, OpenAI is in big trouble, that Oracle's in big trouble, that when they come out and have Disney and Disney gives them $1 billion, well, maybe that's the paperwork that we need. But it's not business to business, so therefore it's no good. Although OpenAI will raise the amount of money that it needs. They will. They will. Why? Because money raising is still easy. NVIDIA, on the other hand, has to deal with the fact that it got too caught up in China rhetoric, the polemics of China, and the AMD made a move. That obviously Broadcom behind the scenes made a move, and NVIDIA's got a product cycle. When that product cycle comes out, I think people are going to say, "Wow, this is the end of hallucination." Because right now, hallucination is key. When you go and analyze what the big holdup is, why these stocks, why the whole AI move is stunted. It's because too many mistakes.
Well, to your point, it is a game of ping pong, right? And right now, others are ascendant, and that'll flip, and then flip again.
But then flip again after that. Right, and I think that I'm just saying that people are overlooking a gigantic new product cycle, which you typically don't do.
NVIDIA, where's the stock trading right now then?
What a multiple, we don't even know, because I think it's going to be so much better.
You think the earnings on the out years are going to be so much more, perhaps, than are being anticipated?
I think so. I mean, what people want to buy right now is Micron. Now, historically, when Micron gets to a multiple where you're talking about 12 times forward earnings, that's because what's going to happen is somebody's going to tip the balance in the DRAM. So there's going to be one more DRAM machine made, a capital equipment made, which will make see that's when look, I love Sandra Morocha, but that's the dangerous stuff.
That's why this downgraded Texan over at Goldman to sell today is so interesting, because they do see excess capacity.
Yes, they do. Now, that piece is very negative about how Texas Instruments has run the company. Really to the point where I can't believe that analyst is willing to go out with it. No more than I can believe that an analyst is willing to go out and put a sell in service now. Jackson area.
It is interesting. I mean, Texas Instruments, we talked about a lot earlier this year when, I think it's what's in this year, when Elliott took that very large stake. Hasn't done much.
No, it is not.
And their pressure campaign, to the extent there was one, hasn't really changed much.
No, and look, I think the company's conference calls are indicative of how hard it is to go after them, because their conference calls are opaque. But I look at SanDisk, look at Western Digital, to Micron. These are, well, Micron does have a high bandwidth, does have a part that is proprietary.
Yeah.
But every time you've ever gone into these stocks at these levels, you've got your head handed to you. Meantime, the people who are most worried right now are the proprietary ones, which would be NVIDIA. And look, I just think the NVIDIA message has been muddled by whether they're really selling to China or not, and they're forgetting that China's not in the numbers. Jensen said that 100 times.
Bonus opportunity.
Yes, exactly. So let them come in and buy it.
Yeah. And the stock didn't move on it either.
Not at all.
Of the allowances, so they put it into China. 25% of the revenue is going to the U.S. government, but still with the margins that NVIDIA has, it's still profitable.
But I just think when you watch NVIDIA in the last few weeks, and you say, "Holy cow, there's a bubble." That's the bubble, the air coming out of the bubble. That's not the bubble. We have to remember 2000. And 2000 is not this time.
No,
and you have Alphabet, by the way, for spending the most. Alphabet's been the winner.
Well,
They spent the most.
now you're getting into what some critics of the current environment say, and that is the boom and bust of .com was not fueled by debt. And right now, you got tech companies issuing more in a quarter than they did in any few years.
Two companies, Oracle, and I think that Larry Ellison should come out and say, "Listen, I don't know why people. I'm buying the credit. I'm selling. I'm shorting the CDS. He should be shorting the CDS."
Carl's point's right. Although the companies that are issuing the debt are typically amongst the strongest companies we have.
Well, you met some.
I mean, you're right. There was very little debt issuance in .com. It was all largely equity, but it was also equity from companies that were.
Okay, but let me ask you something. Goldman comes to town. He meets what, the Atlantic. He meets what, New York Times. He meets the elitists. He meets the people who don't determine anything.
Yeah.
Who does he want to meet with? Who does he want to meet with?
What's your point?
If you decide that your focus is on the intellectual people who used to determine the narrative in this country, you go after those companies. You sit. I love the Atlantic. You know why? Because it's a great break from business.
So your point is what, though, that he's not calling on the business community in some way and or the financial community?
Yeah.
I thought it was interesting, his final comment on Thursday when we had him on, when I asked him about would you ever consider, almost as a public company, putting out your revenue projections and everything else, given how important you are to the ecosystem. And he said, yeah, we thought about it a lot. He wasn't sure how they'd do it, if they would do it, but...
You know how you do it? You wake up and you put it out.
You just do it.
You put it out.
Yeah.
Look, I don't think that the standard that he's being held to is one that he needs to be held to because, frankly, everybody thinks that he is behind the scenes is destroying the paradigm. Now, maybe they do
called it OpenAI the Achilles heel.
Well, now they claim they have the $40 billion, and we know that Oracle's deeply linked. I'm just saying that it's not Meta that's causing the problem. It's not Alphabet that's causing the problem. It certainly isn't Microsoft. It's not even Amazon Web Services, which I've gone up and down. Can't understand why people don't like it because it's very profitable. It's two companies. Two companies have taken on a lot of debt. We all sit here and react as if everybody's taking on a lot of debt. No, two companies, and two companies that I think, look, I think OpenAI, there's fascination.
Obligations.
Right.
Oracle's taking on that debt.
Okay, but
on behalf of them. I mean, in many ways, it's companies using their own balance sheet to help OpenAI, because OpenAI can't take out a lot.
But I remember when I started the street, American Online. Remember it was
I do remember
paid me a fortune versus evaluation. And one day, he came in and said, now you have to pay me a fortune, of which I had to. Disney should have gotten $1 billion from OpenAI because they gave away the most important intellectual property they have.
They didn't give it away. It's licensing.
No, you're right. They paid him $1 billion for it.
Well, no, and they're getting paid for it.
You do that
They
when you
are
say,
doing that
I want Faber to shut up, I want Kramer to shut up, I want Carl to stop asking Kramer, because you know what we'll come up with Disney, and then we're going to do 5 more of these. Five more.
I am the expert on whatever it is that's in your head, on your brain. I'm trying to understand. I feel like you're starting to soften a little bit. You're very critical of it. You softened a little bit, and then over the weekend something happened to you. Who'd you talk to? What happened?
No.
About the Atlantic.
Did you came back?
It was about
You just came back.
It was David Remnick. It's about David Remnick because there's no. It's Oppenheimer. It's about Oppenheimer.
It's a nice doc.
No, it's about Einstein. Einstein's on the
Half NewYorker.com. Which one is it?
Oh, I look at that too. There's some good books for Christmas. You gotta give me a break here. What I'm saying is there are many announcements like that because they sense the long lives are up for them. They don't want to be like what happened to Jensen Huang.
No, all right. I want to come back to your overall point, which is a good one, which is the bubble. What bubble? I mean, Meta trading below the S&P this year in terms of performance. Amazon well below a 3% gain versus the S&P at what's 16%. Microsoft below the S&P's performance for the year.
I just rested my case because you made it for me.
I know. And by the way, Apple, which has absolutely nothing to do with AI, is also below the S&P.
So everyone's going to end up begging them. Because they can't distinguish
So as we head into the new year, do I want to actually own these stocks? Because I think we're going to
You want to be really cynical and say that OpenAI will raise just as much as it needs to silence the critics. And Oracle will come up and they will short the CDS and laugh at the people who are trying to drive the stock down.
Those things could absolutely happen. OpenAI could likely find another area, another
Defenestrated by OpenAI. Will be defenestrated. Because you see, they went to New York, they went to the thought leaders.
Well, it kind of brings us to
I've seen this so many times.
Some forecasts for the new year. B of A, Savita this morning on Squawk, year-end 26, 7,100, and that's largely because of what she believes will be multiple compression at the expense of AI, and that's why she's overweighting, say, staples versus consumer
I
discretion.
talked to a company this morning that was gleefully not involved with the scrum that is in the data center. And that's going to be the new thing. Because right now, OpenAI has not announced the 5 contracts that we need.
No, but when you said Friday that you thought maybe a third of committed data centers never get built.
They won't. There's too many of them. It's not just electricity.
This is now, the idea that there is speculation outside of sort of the core, that Fermi, for example, which was down on Friday. And I talked about this company when it went public, with their one big tenant potentially, it's all in the come, and of course they said no thank you, and Fermi was down 40+% on Friday, the stock. There are elements of it that do have a bubble.
Did you see the Wolf report today on electricity?
Yes.
The point is that a simple query to ChatGPT uses about as much energy as it takes to light a light bulb for 2 seconds. If it's a reasoning question in the eras to come, it's that same light bulb for half an hour.
Well, look, they haven't figured out how to be. I mean, look, it's not going to be that there's going to be a gigantic build out of these machines using natural gas. It'll be that they figure out how to make it so it doesn't use so much power. That's what Jensen's biggest
You get
mission
more and
is.
more efficient. Yeah, but what is it, Jensen's the paradox? I mean, it'll just keep getting used more and more.
I think that there's a way to be able to fix this. First of all, you don't burn all this copper. They've got miles of copper. I mean, copper is not the future. Okay, fiber is the future.
There's a lot of hoarding going on right now in copper.
Well, those are idiots because fiber's coming out faster than you realize. Hoarding can come up with something tomorrow and it would just blow away the copper market.
All right, but that has something to do with the efficiency of chips and using less power.
Well, you put copper in this chip and then you decide how you use about a quarter of the power. And that's coming. No copper in the chip. Fiber.
Right. You've mentioned this a couple times. The great big hope for chip efficiency, energy efficiency.
It is. You don't
I'm not
need.
following. You mean in the data center?
When you open up a chip,
The chip is microscopic. What are you talking about?
No, it's connected by copper.
You're talking right. You're talking about the larger
Yes,
server.
but that's all going to be gone. It's all going to be it's all going to be fiber. It's going to be fiber very soon. Look, this thing is shit. Everything is moving much faster. We get much clarity in GTC with Jensen Huang just leads the world, right? We haven't heard anything about him other than China and the 25%. Let's get away from that. Let's think bigger.
Yeah, you're very much not distracted by the horse race, but you're still wrestling with large unknowns.
Why is you start telling me when we're going to actually see this stuff show up in the enterprise and introduce real efficiency that we can measure in terms of return on invested capital? When's that going to be?
I got to go to the key thought leaders, the key opinion leaders. I hope so.
I really got on it, but it's skipping.
I'm coming with a populist rap today. That's why I'm coming with a populist rap. Say like America. Populist rap.
I hear you.
I need 5 more contracts. 5 more contracts. 5 more people giving them money who should be taking money. Which is brilliant. It's alchemy. It's the Houdini.
Yes. Watch futures pretty solid today. We'll get to all the upgrades this morning. Dollar General, KLA, IMAX, Marriott, Hershey, Masco, as well as a handful of downgrades when we come back. Futures reversing some of the weakness that we got late last week. We'll watch, see if this withstands the open. By the way, don't miss a live interview today with Fed Governor Myron on Money Movers, 11:30 a.m. Eastern. And when we come back, Kramer's Mad Dash, we'll count down to the opening bell in just a minute.
It's me. I'm here. We've now entered the resistance channel. Why does it feel like something dropped? Smell. Oh yeah. Boom!
Welcome back. 7 minutes before we get started with trading here. To begin
7
the
minutes.
New week, one of our final weeks of the year. Of course, I like to keep an eye on the calendar. Let's talk a little service now for the Mad Dash.
First, they came after Adobe, and people said that's okay. They have particular characteristics involving advertising, and just kind of overall too late to perhaps, let's just say fancy, too expensive versus cheaper. Then they came after Salesforce, saying that Salesforce did not have anything proprietary and the growth is slowing. This morning, this is radical.
Let me hear it.
Key, a guy named Jackson Ader, puts a sell on Surface Now.
So this is an analyst at Key. Okay.
Yes, it's more of a narrative call. I like that. But the narrative potential is still real. And he's talking about that Microsoft will be coming after him. It's also, there's more substantial risk than people realize. This is that death of the SaaS service.
Yes.
Software as a service. Well, we think about it as software, about Adobe, about Service Now.
Right. Well, we talked about these names being under threat from agentic, so to speak, of AI, even though certainly your friend Mr. Benioff in mine talks about agentics being the key for the company.
Yes, it is, because that's a big grower. That's a big grower.
I feel why investors get somewhat confused. Like, well, which is it? Are you threatened by AI or are you benefiting from AI?
I mean, this is IT support headcount down for consecutive years for the first time. That's supposed to be helping IT. You know, once you get the seats down, once you get a slowing in IT, then you might have a slowing in service. Now, I am saying this is one of the most controversial calls I've ever seen.
All right, the stock has already had a...
You're taking on Bill procurement. You're saying that
it had a very bad year. What do you got anything? What are your thoughts next year? And I can never count Bill McDermott out. I can't. Unless Bill McDermott doesn't repeal anymore. I do not know that. I think he's very committed. I'm saying I don't bet against Bill McDermott, especially down 28, with the Jackson Air that does really high quality work. Okay. Software as a service, David, has been just the pit of the pen. Tough place to be. I've got an opening bell, what do we got, a little less than 5 minutes from now. And by the way, you can catch us anytime you listen to and follow our podcast. It is called the Stalking the Street Opening Bell Podcast.
$685.95, brother.
How big a role do you want to personally play in the decision by the Fed on interest rates?
Good reason.
You know, I've made a lot of money. I've been very successful, and I think my role should be at least that of recommending. You don't have to follow what I say, but we're going to be choosing a new Fed person in the pretty near future.
Yay!
I certainly should have a role in talking to whoever the head of the Fed is, or the Fed. I don't think that, you know, in the old days it used to happen. Nowadays it's sort of, they think it shouldn't happen. But I've done great. I've made a lot of money. I've been very successful. I think my voice should be heard. But I'm not going to make the decision based on that. I'll be making a decision over the next few weeks.
As the president on Friday asked about being consulted on rate policy, Jim told the Journal he does think he should be consulted and that he thinks rates should be in the 1% range as opposed to 3%.
Oh! The intro didn't happen.
Both industrial, more than it has, and will obviously ignite inflation.
Oh.
David, I do think that the president has
I'm going to put my coffee on the watch here.
building a lot. You might want to speak to builders about what they're thinking.
And we know what they like. They like lower interest rates.
heck yeah we do. You got a problem with that? Sorry, we can't hear you, Jim. My name is Washboardjim. I am behind the thinking strategy of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. We're at the 50 SMA. I got to add something new to my little strategy here. Real soon. Right now we're at the 50. The 63 is 684.88. We're at the 200 though on the 1 minute. So I mean this is a... Can Jim be fooled again? Oracle's kniving. God, that looks nice. We got a breakout on PLTR. I can't. So we're coming down to support. See if that holds right there. Today's the 15th. $68.80s. Oh, we went below it. Hmm. 68.40 maybe. There's a SPY. We're now at that first support channel that I had. 684.05. First support channel. The 685s. Tweezer bottom on the 5-minute. I missed the trade, but it was at 102, went to 117. There's the VWAP. And /ES is above the VWAP. We'll break out on AMD. Apple pulled back to a double bottom from yesterday into close. Apple. We got tweezer bottom on the 5-minute on the /ES. Tweezer bottom. So that's kind of established support. And it just now went below it. And here comes the 200. Jimmy's allowing some patience. Tilray pulled back. So we're at the 200 on the 5-minute with a tweezer bottom. Oh. Put that right there. I'm looking at TSLL right now for somebody. Oh, we got a little pullback here. See, that looks kind of bullish, but that was under the 200, so it's close. Raises 68s to 68, well, I'm 68.80s. If it starts to reverse, it'll be nice. 68.75s. Not in it, nothing. There's a fallen wedge. Or maybe. Can't get this thing to bit of fallen wedge, but this $864s calls. Not very bullish. Oh, I didn't put my coffee. I'll be right back. Just not trusting it yet. We're getting ready to squeeze, but I think we can squeeze down, have like a knife and bounce back up, but maybe not. Two kind of flags. Fudge. What the heck? Well, glad I waited. Yeah, definitely to the 63. SPY just went to 87. 684s. It's like double confirmation at support. I think we're going to know any second. What's going to go down? Are we ready? 684s. It's got a hold right here. We're going to find out. Stick around and find out. $684s. That was the bottom of my support channel, which, let's go to the 5-day, because I'm going to jump in these things, I think. Got a little bit of play, but not much. My name's Washboardjim. $684s. If we're going to reverse, this is where we're going to do it. This is our third touch in the triangle. Spy calls. We're going to find out. $0.83. $81. Boom. I think we're definitely sitting here. $0.79. Still staying in that flag, but It's number 4 now, new low. We're at 68. $74. Looks like our first candle outside the triangle finally. We're going to find out. New low. It says no. Well, it broke below support, which was the 200, the SPX. I have a feeling I'm going to hit a big one here today. Patience. 68.20. Huh? There's a Head and Shoulders right there. Well, I'm going to get rid of that too far out of the money one. 68.50s. Or the 68.60s. We're going to see how this holds up here. I'm pretty tight with that number. 6860s. I got 68132 on the SPY. 68132. 681 low support. 68132. There it is. Oh, yeah. Here we are. We're here. Now let's see if who's dangerous. $681.32. $681.32. Okay. Crowd's going wild here at the sports arena. 681.32. The 6860s. Here, let's make this a pretty color. We're going to make it yellow. Make it red. Beautiful. Oh man, look how pretty that is. Did anybody take it? $681.32, baby. I don't know how to, oh, my coffee's been sitting in there forever. Well, that was a fucking SPX, you idiot. 684s. How dare you? I already had it up here. You idiot. Anybody ever hear me call myself an idiot? SPY, the 684s at 55 cents. He doesn't know how he does it, but he does it. Uh-oh, here we go back down. Oh, watch out, you stupid. We're at 54 cents now. They're at 53. Well, we got out of the, it's kind of a sloppy one, but it hit that support level, my lowest support, with a hammer and a tweezer bottom. We broke out. Now we pulled back. I'll get my coffee. That'll add another 500 to it. $0.51. Should I do it? There's 53. No. Double bottom. Hmm. $0.46. I think it would be proper for you to see a nice little reversal here, please. $0.45. Let's see a big old miracle. Mister's down. Coin is down. No. Go get my coffee. I got to get 50 out of my spies. Uh-oh. This ain't looking good. Tesla finally broke out. All the naysayers on that one. Oh boy. Ooh, look at that. AVGO taking slapping. That's real bad. That's not good. Google got slapped around too. I mean, that's a nice little setup right now. Amazon. I forgot that number I gave Randy yesterday on SPY. Need a little bitty reversal here. QQQ had a pretty good little sell-off. We're at 43, 42. Open's cheap. $6.35 for open. OCG at 1867, 18 cents. We're getting a little carried away here on Amazon. I don't think it's that bad. Well, AMD was happy this morning. Knife. It's a knife.
That we're going to get a combination of some November data as well as some October data. So really parsing through the data and looking at what's important is going to be very important.
It's going to be very important.
A little bit of a mixed picture. The unemployment rate is expected to tick up to 4.5%. So if we do see further weakness in the labor market below that ticking down to 4.5%, or maybe fewer than the 50,000 jobs being added, I would expect that there might be a little bit of weakness in terms of yields moving lower tomorrow.
Yeah, I mean, Friday jobs day on Tuesday, not to mention the added confusion of which month are we talking about, because obviously we're dealing with the back.
Everything's bleeding.
As well, so plenty to keep tabs on this week. Hey, Michelle, we've got a week packed full of central bank action as well, from the ECB to the BOJ, the BOE, throwing in a few PMI reports into the mix too. What are you going to be watching out for? I mean, how consequential will all of this be for global markets?
Yeah, there is a flurry of central bank meetings. It's likely to highlight the divergence between the Fed and central banks elsewhere. The Bank of England is likely to cut, but they might be close to the end of the easing cycle. The ECB is likely done cutting. The Bank of Japan expected to hike rates. And so the Fed might be an outlier in terms of the large developed central banks and continuing to cut rates next year. So that could keep downward pressure on the dollar and boost international stock returns. In terms of the PMIs, we get the preliminary December PMIs later this week. And it could show growth remaining resilient, particularly in the Eurozone.
Oh?
The Eurozone composite PMI rose to the highest level in 2.5 years in November. So credit growth in Europe is also rebounding, and we could see a rebound in economic growth in Europe next year.
And just keeping in mind with regards to what Michelle just laid out there, where all these global central banks are up to with regards to their rate cycles. I mean, you've got the BOJ that's hiking, you've got now talk, at least some speculation in the market that the ECB could potentially even have a rate hike on the cards next year as well. I'm just wondering how you're looking at sort of global fixed income in that context, particularly when you look at the bond market here.
Yeah, so if you look at the global fixed income market, I mean, obviously 2025 was a pretty good year for most fixed income returns, but that especially applies to international as well as EM. A large part of that was because of the decline in the dollar. So if you look at total returns, it tend to be a combination of the income you receive, the price you receive, and then also on the international front, changes in currency. So given that there was some downside on the dollar this year, that really was a positive for 2025 fixed income returns on the international front. Now, I would not be too surprised if we continue to see a positive returns for international bonds going forward, given that there is potentially more downside on the dollar. So we do think that they can be in areas to focus or to pay attention to in 2026. overall, Sam, we do have a positive view on what's happening in the fixed income markets next year. I don't necessarily think that it'll be as good as what we saw this year, but there is still some return to squeak out into 2026.
For opportunities in fixed income and potentially international as well, with of course that weak dollar. And Michelle, you've spoken at length about some of the opportunities internationally for the stock too. So obviously something to look out for. Thanks so much for that, guys, this morning. Cooper Ballard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, and Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Appreciate your time. Coming up in time for the morning trade, we'll take a closer look at Tesla today. Morning trade live.
Tesla.
Trading Schwab.
Tesla and NVIDIA.
Giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning.
NVIDIA hit my support level.
Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching
Schwab.
and start learning today.
I'm going to look at the video option here. The
From the most
19th.
iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories,
180s.
and markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
The stock is up more than 15%.
Tesla.
120% from its April low. Tesla stock hitting its all-time high on December 18 last year. Shares are 3% off that mark in Monday trading.
Starting to see some recovering, but I'm not sure.
And change on Tesla, so that's the focus of the morning trade. For a closer look now, it is my co-host, Marley Hayden. Very good morning to you. Happy Monday, Marley.
So we're talking about Tesla because of one man, Dan Ives. He's projecting that Tesla will hit a $2 trillion market cap.
I need SPY to reverse.
Monster year.
We're at 40 cents.
Yes, he does say it's going to be a monster year for Tesla, Sam. He's a longtime Tesla bull. So no surprise here, but some of the numbers are pretty huge. You mentioned that $2 trillion market cap. He's actually saying in a bull case scenario, it could be
Still hasn't
$2
really
trillion
broke.
by the end of the year. All of this
But
coming
it's
out
past-
in a post on
It's above the
Dan Ives
21
posted,
now.
Heading into 2026, this marks a
Which we
monster
haven't
year
seen
ahead
that
for
in a while.
Tesla/Musk as the autonomous and robotics chapter begins. We believe Tesla hits a $2 trillion market cap in 2026, and in a bull case scenario, $3 trillion by the end of 2026 as the AI chapter takes hold at Tesla. Now, this conversation has been ongoing, right? The company has been pushing its efforts to develop and push its AI programs to improve some of its full self-driving, move itself away from being thought of as a car company and into this autonomous space with robo-taxis, et cetera. And there was some other good news that came out that could be driving some of the move to the upside we see. In addition to Dan Ives' note today, that $2 trillion market cap, though, does represent about a 30% upside from where Tesla is currently trading right now. But let's talk about some of that other good news, because there is some reports that have been confirmed now by Elon Musk that Tesla's robo-taxi service in Austin was driving without a safety monitor. There was video posted online of the cars driving around without a human in the driver's seat. Now, the robotaxi service, since its June launch, has had a human monitor in the car at all times. That's been required by regulators. But there's now these videos, at least 2 different cars were caught without a driver on public roads. Now, it is
Jimmy called a reversal on the video.
That vehicle was supported by a chase car
An
or some
AMD.
sort of remote monitoring process. That's
Meta's
very
fallen
important to
along.
this scenario, whether or not that's happening. But Elon Musk did confirm that, quote, testing is underway with no occupant in the car. And he did say about a week ago that Tesla would start removing their safety monitors from the car within the next 3 weeks. So that timeline is tracking with what he said. But this
SPX is about to hit
because Tesla's valuation
hit
premium
resistance.
right now hinges on the idea that autonomy can become a high-margin network business for the company, potentially
Showing a little bit of
changing
courage.
what Tesla earnings
Still
even
bearish,
means,
but
moving away from this idea of it being an EV maker and fully into this autonomous robotics AI space. So if it can achieve this milestone, Sam, that would be a huge potential game changer here for the company. I do want to note, though, that Morgan Stanley has a differing view and actually downgraded Tesla to overweight, to equal weight from overweight, saying that the high expectations around
let's say for this thing to really be tough, it has to break 68.30.
They did raise the price
Another
target to
10
425,
points.
so still bullish, but a little bit more neutral than what we're hearing from Dan Ives. Some interesting perspectives here, but this whole robo-taxi thing could be a game changer for the company.
Yeah, it sounds so dramatic, doesn't it? A court without a driver, it sounds like a nightmare or something. But as you say, it's so heavily tied to the valuation of this story and this stock. And so, yeah, it's a positive. So we'll have to see about those reports.
At 21
so much for breaking down the note and some
on
of
the
the
1 minute.
responses today.
You get to 177,
Over 3% right
176.91.
Stock strategist Prosper Trading Academy.
Maybe a
Very
little
good
bit
morning.
more than
Happy
that.
Monday to you, Charles. How are you
90.
approaching your example trade for this one?
Well, they're certainly very bullish off the Dan Ives comments.
98 maybe?
Through a key resistance point today, right around this 474, 475
Yeah.
price. So that draws in
Jimmy says
the
99.
488 price, and that's not where I believe it's going to stop. I believe they're going to try and make a run for $500 at the end of the year. So I like the December 26, 480, 490 call spread. I like to get it at 350 or lower. Now, I don't want to risk too much because I don't want them sliding below 467.
681.32, not working out for Bobo.
The risk is only about 30% on this contract. But again, if it does break out and make that push for that 500 mark, we should see gains exceeding 50 to 60%. This is a way to play the upside with some protection, but still taking advantage of the move. I believe that,
Baba's
the notes
down.
are correct. It really, for me, depends on the
GSM
robo-taxi
down.
situation. This is where they can make a ton of money in the future if this actually becomes something in fruition. Obviously, it's only in Austin right now. They're pushing for Vegas, but if they could ever get a major city like Chicago or New York or LA on board, that's going to be a total game changer for Tesla. And they're correct. They become more of an AI robotics type of play as opposed to just a EV car company.
Yeah, absolutely. And I mean, that chart just shows us that, how much of a wild ride shareholders have been on in 2025. And, some analysts are pointing out that, it's hopefully going to be less of a bumpy road next year. But let's wait and see. Hey, Charles, just before we let you go, I want to get your thoughts on the market today and some of this positioning as we're in the final full week of trade for 2025 and ahead of all of this data. What do you make of it?
For me, it's more about the earnings report from Oracle and AVGO and the subsequent responses. That's weighed heavily on the markets, especially on Friday. We had a pretty straight line spill to the lows. We're seeing something very similar today. So, we're seeing a lot of the AI plays, especially the data center plays, really taking quite the hit over the last 2 days. But again, this is more of a speed bump than anything else. It's going to lead to some great dip opportunities. I believe the market's going to remain bullish. I believe that we're still on target to hit that 7,000 mark that a lot of analysts are calling for the end of the year in SPX. So I would say that there are some segments, especially tied to AI, that you have to be a little cautious on. That they're showing some pretty strong weakness in the near term, but I just believe that they're going to be great buying opportunities as well.
Yeah, a few of our guests have been talking about that. They've been sort of dipping their toes in, taking advantage of some of the pullback in some of these big names, you know, your Broadcoms, etc. But we continue to see that rotation into other parts of the market. Appreciate your thoughts today, Charles. Thanks so much for that. As always, Charles Moon there, stock strategist, Prosper Trading Academy. Coming up, we will take a closer look at UK markets ahead of an expected rate cut by the Bank of England later this week, and we'll bring you the latest you need to know from other global markets as well.
Well, it's been an hour and 9 minutes. Jimmy's waiting for the Big Daddy. I mean, I like where Amazon is right now, but it can't get to 220.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab.
Walmart's down.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marla Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Butters, coming to you live from the New York Stock Exchange. So joining us now is Richard Flynn, Managing Director, Charles Schwab.
Come on, reversal.
Thanks so much for joining us today, Richard. So we've got the Bank of England.
SPX at the reversal line again.
Talk us through the expectations there.
Yeah, morning, Sam. It's highly priced in. I think analysts have around a 90% likelihood of a rate cut this week on December the 18th is the meeting of the Bank of England. But it's by no means unanimous. I think that the 9-person member committee, people are expecting a 5-4 split, as was seen last month at the last meeting of the Bank of England MPC. But it's likely to see a 25 basis point cut, which will be welcomed by the markets, but possibly just as important will be tomorrow's inflation read. So you'll be dropping from 4% to 3.75, again following the direction that the Fed took last week, showing again the kind of commonalities of the UK and the US when it comes to economic policy.
Yeah, I was going to say, I mean, so what data has been pointing to at least the expectations? What sort of supports the best now for that rate decision come later in the week? Because obviously we've seen that GDP came off, that has obviously been dragged down by some of the services, construction I was looking at too. But then we have an inflation print coming out just before that decision. Is that likely to sort of move the needle in any way, or I mean, expectations, hoping for that to sort of confirm the trend into that meeting?
Yeah, I think the main driver is the GDP numbers from last week. Obviously, the economy contracted 0.1% the last quarter, which last month, which was a bit of a surprise. I think people were expecting / hoping for a bit more growth, and that's probably moved the needle in terms of the expectations. In terms of the inflation numbers coming out tomorrow, I think it's generally food and services which people will be paying close attention to within those CPI numbers. Certainly it's Christmas party season here in London, and when you're paying more than £8 for a pint, the practical implications of these food inflation prices can be significant in the pockets of people. But definitely the MPC will be looking closely at those CPI numbers tomorrow, which will factor into their thinking, and you can expect to see some commentary around that. But generally,
we need a big breakout.
The key driver behind this potential cut will be the lack of growth, which we're all trying to find a solve for.
Richard, the price of a pint in London is always a key barometer for how things are going right now. But I'm just wondering,
and consumer sentiment in general, Sam. Yeah.
Absolutely. IPOs. What's been going on in 2024 over there?
Not much on that one. There were 12 IPOs in the UK over the course of 2025, and the government has recognised this has been a major issue for a while, attracting companies to the UK, but also attracting successful UK companies to move away from being private and to become public. Those 12 listings in 2025 had mixed results and didn't raise a huge amount of investment. I think in the first half of the year, there's been about £180 million from 9 listings. So there has been listing reform. The government for a long time has been trying to put in some regulatory reform around the rules of listing. I think a lot of tech companies in particular were more attracted to the US, not just for the liquidity, but for the rules around share ownership, and particularly founder ownership. So there have been some changes. One interesting change which was announced in the budget a couple of weeks ago was
we're now 53 cents
for the first 3 years for IPOs. Over here in the UK, retail investors and institutional investors have to pay 0.5%.
We're at the VWAP.
And of course, the US is 0, and most other major markets don't charge tax to buy shares. So I think that may have an impact, certainly for retail investors. You see more retail engagement with IPOs. But the government is certainly aware and doing as much as it possibly can to try and attract people to invest in IPOs and to interest companies listing here rather than the US, which, given the US had, I think, 20 times the number of IPOs, I think about 250 IPOs in the US market last year, it's an uphill task for sure, but a very important one for the UK and for the City of London in particular.
Okay, let's hope that 2026 brings a better year for the IPO pipeline over in your neck of the woods. So, Richard, really appreciate it. Thanks so much for getting us across that and a preview of what the BOE is likely to do later in the week. Richard Flynn, Managing Director at Charles Schwab UK. Asian markets under pressure to start the week as the rotation out of tech into value continues to play out globally. Shares in AI exposed names like SoftBank continuing to sell off there. Sentiment in Asia also weighed down by, as we've mentioned, disappointing data out of China, highlighting the deepening economic slowdown. Retail sales had their worst month outside of the pandemic. Industrial production hit a 15-month low, while fixed-asset investment further contracted to the lowest level since 2020, the onset of COVID-19 dragged down by the struggling property sector. And the real estate concerns continuing to be fueled by further today by the property developer China Bunker's efforts to try to avoid a default there as well. Something to watch. Now, fresh data out of Japan also showing that sentiment among the big manufacturing businesses hitting a 4-year high. That's according to the Tankan survey, which measures business confidence. The data is being closely watched ahead of the BOJ's expected rate hike this week. It showed a third straight quarter of improvement, which is reinforcing the best central bank will raise rates on Friday. The yen also firming up in the session. And it's a big week, as we mentioned, in central bank action from the BOE to the ECB. Markets are pricing in an expected rate cut by the BOE, as we just discussed.
SPY got real close to the VWAP.
While the ECB is expected to hold rates steady, there's some speculation in the market that a rate hike could be on the cards though at the ECB next year. Alright, well, coming up, it's time for Inside Out. We'll take a closer look at Netflix and bring an example for that name when one trade live.
Oh, Netflix. Forgot all about her.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value.
I'm about to go make me a lunch.
Best of all, you can ask questions by
I'm at 46 in my calls.
It's interactive learning at its finest.
If we break the VWAP, these things can get really.
Head over to schwab.com/coaching.
Get up here.
Start learning today.
real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at Schwab
Come on, 684s, do it. Break the VWAP.
Back on the morning train line, it's a battle for Warner Brothers in the streaming space. 10 days ago, Netflix announced that it had reached a deal to acquire.
I think last week's Monday was pretty rough. I mean, it's not bad, but not like last Monday. As long as you're on the right side of the trade. I'm up $8 contract.
Let's go inside out on this name. Joining us now is James Janowski. Thanks so much for joining us, head of Emerging Tech Consumer Choice Centre. So what do you make of all of this sort of soap opera drama that's been playing
50.
out in the media world?
Good.
Yeah, thank you for having me. I think that it's a fascinating development watching the battle unfold over the last week now between Netflix and now Paramount looking to go and acquire Warner Brothers Films and the broader company in the case of Paramount.
Disney, what's she doing today?
That is looking to go and continue to
She's all high and mighty last week.
We've seen it go and do this in live sports and gaming over the last several years and certainly improve on its ad tech platform. And on the content creation side, Netflix has always been doing this, but really if they were to get access into some of the IP that Warner Brothers does have, I think that opens up a whole new avenue of opportunity for them. And that's why they were looking to acquire the company. Paramount saw an opportunity here to go and I think consolidate further and offer to buy the whole enchilada, if you will, and get all of Warner Brothers plus CNN and everything else. A concern that was certainly shared by the president in any sale. He wanted to see CNN go down. So very fascinating battle that we're seeing unfold here.
You know, on the Friday that we heard that Netflix could be sort of the front runner here, or at least in the lead in this bidding war, and sort of managed to get across the line, it was sort of, you felt like you were hard pressed to kind of find someone out there in the market who actually liked the sound of this, because you had the market selling off. I mean, Netflix shares was down. You had Hollywood sort of coming out with these statements that they were worried about what it would mean for their industry. And then you also had the Trump administration who had come out, and I believe the line that morning was something to the effect of, you know, there was some speculation coming out of the White House, skepticism, I should say, getting my S words mixed up, but skepticism coming out of the
Don't
White
be
House.
doing that.
But it sounds like there could be some opportunity here as far as what you're saying.
Yeah, absolutely. I mean, at the end of the day, like, the concerns that are there potentially on an antitrust level could be resolved through a myriad of remedies that are out there. That's something that we have yet to go and see play out. Obviously, first things first, we have to go and see which bid ultimately wins out here between the two titans kind of clashing of Netflix and Paramount. And then once we get past that, then
okay,
the regulatory scrutiny of whether or not
just break out so I can make a lot of money.
Domestically. And really, I don't think that they're my primary concern, at least when it comes to regulatory scrutiny. I think they also do have to consider international regulators, certainly from like the EU, for example, that might also go and have a hand in what this outcome might look like here. So that's what I'm also keeping an eye on.
You know, it's interesting because they haven't been going down without a fight. That is Paramount, and CEO David Ellison was here in the New York Stock Exchange about a week ago, sort of laying out his case for why, you know, this is a superior offer here. I mean, talking about $17.6 billion more cash to shareholders, saying it's bad for Hollywood, bad for consumers, and particularly when you combine the two, you know, big streamers here, you know, he could potentially the death of the movie business. I mean, there was a lot of reasons, and I mean, it's detailed in the letter that he sent also. How do you see this actually playing out now? I mean, what do you think the outcome of this battle is going to look like?
Yeah, it'll be a fascinating one to go and watch unfold. It's not going to go and have any resolution for at least the next 12 to 18 months, and then after the deal gets consummated, we'll still go. And this is a multi-year kind of thing I think we're going to see play out. So lots of ebbs and flows that we're going to see kind of play out in this conversation. But at the end of the day, I'm not necessarily as concerned about the threat to consumers, if you will, that Mr. Ellison was highlighting. I think that really there's an opportunity and an inflection point in the entertainment industry that Netflix is trying to kind of capitalize on, and I think that at the end of the day, that's what I'm most excited about. I do think that producers and actors and consumers alike will benefit from having a more flexible kind of environment. We've only seen Hollywood do certain types of things over recent years, and I think that if it's underneath Netflix, you can certainly go and see some more creativity get unlocked there, and even underneath Paramount as well. There's just a lot of opportunity out there if the right people are in charge for this product when it gets sold.
Okay, and I suppose the next sort of installment of this story is that, drama that's been playing out is going to be obviously the valuation when it comes to Netflix, but we just have to see how things play out over the next coming months. Thanks so much for your time, James Janowski, the head of Emerging Tech Consumer Choice Centre. Appreciate your time. So let's break down with Tom White, host of Fast Market. So Netflix, of course, under pressure today. This battle continues for this bidding war between Paramount, now for Warner Brothers. What's your example trade for Netflix this morning, Tom?
Yeah, I think on this nearly 30% pullback that we've seen from those all-time highs this summer, there's been a lot of people trying to catch this falling knife. So I looked at a strategy that takes advantage of maybe getting into the stock at a lower price point, and if it doesn't go any lower and kind of stabilizes here, you can still be profitable on this one. So I looked at the cash secured put. I went on to the January 2nd weekly cycle. It's about 18 days expiration. And this is one of those strategies you can pick a strike or pick a level that you think the stock's going to remain above and continue to do this over and over on a weekly or monthly basis. On here, this cash secured put. So going on to that January 2nd weekly options, we're going to sell the out of the money 93 strike put. You're going to collect roughly a credit of about $2.10.
That triangle now.
If the stock stays above 93 over the next 2.5 weeks, you just get to keep that $210 per put that you sold on this. Now, it does take your break even to the downside just below the 91 level, $90.90. You collect the 210 credit. That would be, if the stock falls below 93, that would be where you would be buying the actual shares at a discount of over 3.5% below the current share price. So you've got that cushion to the downside. It is capital intensive because if the stock does fall and you stay short that put, you're going to have to buy the shares if it's below 93 at expiration of the next 18 days. But at the same time, if you put a $90.90 bid in on the shares, you might not ever get filled on Netflix if it doesn't fall. This way, this type of strategy allows you to actually still profit if the stock stabilizes, goes higher, or even goes a little bit lower but remains above that break even of $90.90.
Okay, Netflix shares under pressure to the tune of about 1% right now, trading at 94 and change. Thanks so much for the example trade for us today, Tom White. Really appreciate your time. And of course, that will do it for us here on Morning Trade Line as well. I'm Sam Barnes. We've got Trade 360 coming up next with Marlene Hayden. Have a great rest of your day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage means expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going in earnings.
So that would be a further downside area to watch.
Slot insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any stream, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Seth Lattis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Tesla is a monster. $488.54 yearly high.
Good morning. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Kate, coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. In our 360 Spotlight, we're going to talk to the team from Calamos, discuss the state of the market, and get some bold calls they're making going into 2026. Today's disruptor is Akamai after KeyBank double upgraded shares and admitted it was wrong about the cloud stock. And then in our 360 round, we will recap the year that was for Tesla and what we should be watching for in 2026. Before we get to that and more, let's take a look at where the markets are as we're into the trading day now. The S&P trading
We sure are, baby.
at 68.20. The Nasdaq trading about 0.25% lower, 25,130.
She got her blood
On the Dow, we're trading about 10%
bath
lower,
dress on.
48,405. And the Russell 2000 down about 0.5% so far this morning, 25.39.
Marley.
Taking a look at the 10-year, we are lower on the day, 10 slower, back to 4.17. The dollar is at 97.85. Gold trading higher, up 0.5%. This will be the highest level we've seen in weeks here, 43.4810. Crude oil is lower, more than 1% lower, 56.81 on a barrel. And Bitcoin has fallen below that mentally.
Well.
Down more than 3%, 3.75% this morning, 87,070. Now, I do want to get to our first story of the day, bringing our first guest, Alex Coffey, of course.
I'll be right back.
That will be joining us here in studio to talk about a double downgrade that we're seeing this morning for Texas Instruments.
Yeah, Goldman's been putting out their 2026 outlooks, and as part of James Schneider's semiconductor outlook for 2026, Texas Instruments getting double downgraded, as you mentioned, Marley, going from buy all the way to sell. So flipping the cards over, going from a price target that was once at 200 down to 156. So as I mentioned, this is part of the 2026 outlook adjustments. They do still really like the hyperscaler artificial intelligence spending, and they see that continuing to move higher. They've got driving tailwinds to digital, memory, and storage next year. And they also see a gradual industrial automotive recovery driving cyclical tailwinds in analog. So you start reading there, sounds pretty bullish. However, they do cite that Texas Instruments has a lackluster execution throughout this cycle, and they see the less larger than the peers in the upcycle as its primary reasoning for the double downgrade. A little bit of pressure today, about 8.9% for the stock. You look at it compared to some of its peers, some of their peers that have this name already. It's pretty mixed. About a third of the analysts in the buy camp, just under a half in a hold equivalent camp, and now close to 20% in the sell equivalent rating. So you look at that compared to some of its peers in semiconductors, I would say probably about as mixed of any name.
And it's really interesting because Texas Instruments holds almost even larger market share in what it does than NVIDIA does. It's the largest maker of analog chips. I think when I was taking a look, it's like they have 95% of its revenue coming from semiconductors.
Yeah, of all the names, this is about as cyclical of a name as you'll find within this space that it seems like is a hyper-growth sector, but it has so many ties for legacy technology businesses, automotive, etc.
But ironically, you see a gradual industrial and automotive recovery being cited as a tailwind for analog in this note, but it's just the execution hurdles and mishaps from Texas Instruments being what they see as a setback. So maybe if they outperform on some of those things, there is opportunity. You can see this is a stock that's under a little bit of pressure, but quickly recovering after the open.
Yeah, it seems to be bouncing off of the initial on this, but still down about 7 tenths. Alex, appreciate you breaking that down for us. Alex Coffee, our senior contributor here on the network. I do want to welcome in our next guest for a more broad look at the markets. Joining us this morning, Ted Thatcher, president of Bright Lake Wealth Management. Ted, great to have you with us as always. Love to get your thoughts on how we're starting off the week. I was hoping to say either a mixed picture or a lot of green on the board, but unfortunately I'm looking at the big board and see a lot of red.
Absolutely, Marla. I think the markets are just digesting more of what we saw last week. The AI trade selling off, the constant question still kind of perpetuating about whether or not these mega cap companies are going to be able to monetize in a way that keeps being discussed around this trade specifically. It's actually sort of in contrast to what we saw last week. A lot of actual positive economic data points for the consumer. The last several months, we've gotten real choppy data for the consumer, and last week we saw more job openings than expected. We saw the continuing unemployment claims tick down further. We got, of course, that relief with the Fed lowering rates. We got updated GDP expectations increased for 2026 and lower inflation expectations for 2026. And despite all that positivity, here we are looking at red this morning.
Yeah, and how much of that, you mentioned the Fed, how much of the red that we're seeing and some of the really choppy action we saw last week as well is tied to the Fed's rate cut decision, and even more importantly, some of the other information that we got out of that meeting, both the division and the tone that we got from Powell.
Yeah, it's a real good point. The truth is the Fed has been really divided here. And it's hard to point the finger too far here. We've been flying blind when it comes to economic data because of the government shutdown. The truth is we're still working our way through that data. This week is chock full of data. We're going to get CPI updates. We're going to get retail sales for October. We're going to get retail sales for November. We're going to get updated PCE, GDP expectations, all kinds of data, consumer sentiments coming out on Friday. And so I think that it's a lack of clarity that the Fed members are constantly dealing with. They don't want to commit to a certain direction too quickly because the truth is they are right to say that it is still a little bit fuzzy despite this series of real positive points we did see last week.
Yeah, and you mentioned the data blackout effect, the data that we're getting. This is going to be a big week for data, albeit some of it delayed data still because of the shutdown. But as far as the labor signals that we're getting a bit of a mixed picture in the labor market. We've got initial jobless claims jumping, continuing claims fell, we have job openings tick higher. What does that tell you about the true health of the consumer right now?
It's a really good question. I think when I look at the labor data that we're seeing, it is choppy. We saw 3 continuous weeks going into Thanksgiving of those initial claims sliding down. It was a real exciting thing. And then, of course, they spiked back up last week. And then, again, those continuing claims actually dropped off much more than expected. I think that the truth is, at least this data specifically, I chalk it up more to the holiday volatility. We see, of course, around the holidays, extra job openings for that holiday season, and we see, of course, at times, some of those, job releases at that point, too. So is it going to give us a clear picture of the job market for the consumer? I don't think so. Of course, we are going to get the updated unemployment rate. I expect that to be still at 4.4%. My real hope for the consumer is really what we're going to see in terms of sentiment later this week and retail sales. What I've really had my eye on with the retail sales as it pertains to the consumer is really diving under the hood. This week we're going to get, again, more of that data, and hopefully it can inform some of that K-shaped economy discussion. Are things still as broad as they have been, or are they narrowing at all?
All right, let's talk about some of your picks that you sent over for 2026. You call Alphabet the value
I'm back.
of the Magnificent Seven. What do you think makes Google uniquely positioned for the next phase of the AI cycle compared to its peers?
Great question. When Google is such an interesting story.
Great questions.
Google halfway through the year,
Meta reversed.
Going to take their lunch. And of course, the opposite has been true the second half of this year. Google has been on an absolute tear. And it's because their performance, their Gemini models, of course, has
The video reversed.
their performance is outstanding. But really, the growth story for Google
Double top,
2026
head and shoulders.
centers around its entire stack. They control the stack from A to Z. They aren't entirely beholden to NVIDIA's chips like everyone else. They have TPUs.
AMD reversed.
They have a fantastic model in Gemini that we've already discussed. And most importantly, Marley, they have distribution. There are 230 million paid subscribers.
Apple's the only one that really didn't recover.
And of course, pretty quickly when you talk about business distribution, you know, that marketing, that
When you're talking about it.
users is ultra important, and Google is absolutely primed to be able to take advantage of its user base in 2026.
That's the hour on
Another pick that I would say maybe some people want
Tesla.
to or try
Tesla
to write
doing
off
real
there
nice.
as well. In Meta, you've got them as your applied AI leader pick for 2026. Why do you think that monetization and not model superiority ultimately decides who the AI winner is going to be, and how does that play into Meta being your pick?
Another good question. You know, so much of the discussion Friday and this morning is just around AI and the monetization of it. And I think
SPX is at the 200 EMA.
Well, you know, of course, maybe they don't have the premier performance model. Their Llama model, of course, is open sourced. It's kept them competitive on the model front. But where I love Facebook in 2026 is how quickly they're going to be able to actually monetize their AI. Of course, you think about ad targeting with their ability to monetize on that front. You've already seen higher CPMs. You've already seen better targeting. They've overcome a lot of the barriers that Apple put in place this year because of their improved targeting, because of AI. And in 2026, what I'm really excited about is actually what they're doing on their ad platform for small businesses, for large advertisers, not only to be able to target well, but to actually be able to create content and create ads within the Meta platform itself.
All right, your last pick here is Costco. You describe it as the ultimate hedge against the K-shaped economy. Tell me a bit about that thesis.
Yeah.
Well, of course, this K-shaped economy story has been widely publicized. You see the headlines everywhere. And it comes back to the kind of consumer that Costco serves. So, first of all, they have increased their membership pricing, which we're actually going to finally see take full effect in 2026. So we see a lot of tailwinds from the revenue there. And again, you know, obviously, you think about the AI story, you think about how much upside there is. But of course, for investors, not only are we looking for upside, but we're also looking for downside protection. And because average Costco member families are
Nobody thought about that.
$125,000 a year, and because of the pricing changes that Costco has made, I think they're really poised to serve the upper end of that K-shaped economy in a much more strategic way than maybe some of the other retail names that you see in the space.
Well, Ted, we appreciate you joining us this morning to walk us through some of your picks for 2026. That's Ted Thatcher, president of Bright Lake Wealth Management. And we've got plenty more
He's scary looking.
today on Trading 360. Next, we've got the big three stocks, 3 charts, and 3 trades. Richard Cat will walk us through the technicals. Scott Bauer will take us through the trades for Boeing, ServiceNow, and Uber. That's next on Trading 360 on Fox.
Those are the three, huh? Boeing would be a good one. Doo-doo. Tesla needs to hold his support level here. Doo-doo. Doo-doo-doo. Da-da-da-da. There we go. Put it up there. Drop another candle.
From the most iconic favorite trading floor in the world. This is Opening Bell with Nicole Pedalades, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's way. Take a look here, please. But there's a Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, the CEO of Prosper Trading Academy. Great to have you both with us. Scott, I'd love to start with a big picture thought on this market action that we're seeing to start the week. As I'm checking the board, we are still entirely in the red.
Yeah, I mean, you guys were just discussing all the eco data coming out, and there's still so much more. And I think there's just a very cautionary kind of overhang on the market right now that, the data is not going to be very good, that the Fed is lowering rates even though there's that dissension, because maybe under the hood things aren't so great.
Oh.
So I think that's why we're seeing that caution. We are finally seeing a little bit of a VIX pop today, which we didn't see last week really at all. So we'll have to see what plays out here.
All right, so then let's move to your first pick for the big three here. We're talking about Boeing. They're having a good year so far. Did just see some headlines about a delay of Air Force One again, but doesn't seem to be weighing on the stock too much today. Walk us through your pick on Boeing, and is this a long-term or short-term play?
This is more short-term, and if you look at charts technically, we're up to kind of that 50 and the 200-day moving average area, and at an area where the 50 is coming down to cross over the 200, which typically is a very bearish type of sentiment. So if the stock rallies another $1 or so, we're going to be right there. So I'm looking at that as some serious resistance, at least short-term. Now, option implied volatility is very, very inexpensive. So I want to buy some time with that. So what I am doing is I am buying a calendar put spread. So I'm selling next week's 195 put. I'm just going out to the end of January, buying that 195 put, paying $2 for that.
All right, Rick, so as you look at the charts and the technicals here, are you also seeing some bearish signals or potentially bearish sentiment here for Boeing?
Well, for a while it seemed like Boeing just couldn't stay out of the headlines in the wrong way. It does seem like things have improved here, but we have had a bit of a decline. If we were to look more closely at that area 195, I had the same area highlighted right here, 195.51 to be very specific. That's because that was the low point that we had.
Come on, Spy.
The upside that we saw
Blake.
right here. So now we have our short-term trend line in blue that has been broken.
We're at the VWAP.
Medium-term, I guess you could say longer-term, relatively speaking, trend line is still in play here, kind of going across the highs.
Can the Spy get to the 200, or do I sell them at the VWAP? That's the question.
Haven't really done so just yet. But once we do start getting a little bit higher, the 212 level really stands out. This was
Jim, you're up. You're up $6 a contract.
That was also the low point before we had our gap down. That was the start of our
You're up $8 a contract.
$9.
9.
We also have a matching
You're up
ceiling
10.
about here,
Whoa.
226. Pretty far away, not tested as many times, but that would be another
You're up 12.
area to be on the lookout for if things do start to improve. So if we were to look at our moving averages that we follow, everything's kind
Now this is where I
right
usually
here between
mess up.
198 to 205 or so, 204.
I get out of the trade,
Sideways moving averages
then I
that are
go,
grouped
oh
together.
Jim, it's at $1 now.
Directionless trading because
You know how
of
much that would have been?
or because things have been chopping around.
And I'd say,
the way
well,
that, the moving
40
average
times
can't really find
$40.
kind of a mix of these two situations here coming in.
my
But regardless, price is starting to move above all three of them at this point. but we haven't really seen a strong breakout, especially today. We're kind of just rather listless trading. Notice as well that RSI was rejected at our
Jim?
longer-term trend line here. Green trend
I'd like to ask you a
broken,
personal
above the 50
question.
midline, but not making a,
Do you ever put
a strong
paprika
breakout
on
like
your
you might hope if you were bullish.
cottage cheese?
Finally, volume profile, we can see that our volume nodes that
Oh,
we
that
have
is kind
to
of
the
personal.
upside, our point of control comes in right there near
But
about
yes, I do.
215 or so, our thick red line.
When I'm having a
That would be
gourmet
the
meal like I
potential
just had,
congestion area to be on the lookout for to the upside.
with 2 sliders
Well,
and
things really start to drop off
3
here.
tablespoons
We
of
get
cottage
below our moving
cheese.
averages and below that 200 level once again.
Yeah, and right now trading at 204.90, and on the year so far in the last 12 months, Boeing shares up about 20%. Your next pick here is ServiceNow. Now they are
Okay, we need
under
a breakout.
quite a bit of pressure today. They have their stock split that's happening. They're down about almost 11% so far
There's
this
that
morning.
stupid 862.68 I was yelling about earlier.
It's an amazing company. It's a company that I want to own for the long term. So this is a little bit of a trade.
Tesla at
And if it
478.55.
winds up being this way, I don't mind owning it for the long term. So it's down on the news that they may be buying a cybersecurity company for about $7 billion. And I love these types of speculative events when they happen in the marketplace here. When we see some news come out, a stock drops for one reason or another. In this case, you know, the street is obviously not liking this potential transaction. I love it. So I am selling a put spread here. I'm just selling a simple put spread going out to next week. I'm selling the 780, 770 put spread, $10 wide. I'm going to collect about $5, maybe even get a little bit more than that right now because the stock dropped a little bit further. At worst case,
SPX has just now broke out of resistance.
765 at the end of next week if this thing goes down lower. If not, it's a pretty hefty
Very
premium
good.
that I'm collecting here.
Now I'm at 53 cents. Jim, have you ever thought about selling your contracts?
Obviously some big gaps
You're
up
at
here in
$13
this
a
April area
contract.
around tariff day and the recovery there, and now we're seeing a downward sloping channel. You know, walk us through some of the technical observations you're making.
Right, so the trading question, we'd be looking for price to stay above this general area here. That's the same level, once again, that I had highlighted because we
How
had
dare you.
another gap back here. That was the high point before we had our gap up on earnings. And
oh.
also, you could group it together with our worst close that we saw from back here.
Excuse me.
721. That gives you this supportive zone to consider. It's
Had
a
an
pretty big
accident.
zone here at this point, but that would be some areas of interest to the downside. But for now, 776.63 is where that gap came in that I mentioned earlier at our dark green line here. So that would be a point that the bulls would be probably pretty interested
Spies
in.
wearing out, Randy.
If we were to keep moving to the upside, another gap here, 857.91, was where things kind of ended here for our small uptrend. That's where we
Well,
had
I was
our
expecting
gap
a much better
so
grade than
now you can
that.
also say we have a downward sloping trend line. You
That was
can
an
see
unexpected
lows
burp.
and
Those will usually
extrapolate
generate
that
more
to
money.
give some idea where you might find further support.
More
Certainly
likes.
Not a guarantee it's going to work out, but one tool you can use to try to project potential support here. Now, when we look at our moving
Is
averages
there
in
anybody out there on
here,
YouTube that
we're seeing them cluster
would like to
together
grade
in
my
this
burps
phase,
from here
but
on
now
out?
You can see that they're starting to diverge a little bit.
Please
farther
stand
apart
up.
from each other. Prices below
Identify
all three.
yourself.
So look for price if you had a more bullish outlook to start crossing back above those and starting to drag the trajectory of the slope of those lines from negative to positive once more. One thing as well, even though we did break through our trend line, our green trend line, we are not in the oversold area just yet either. So that would be something kind of interesting if we did
Identify
manage
yourself.
to remain above this gap area and not slip into that oversold area. That would be more of a positive sign for the bulls as well. Finally, we can look at our volume profile study to identify some important trading areas. We have slipped below the closest one to current price right
Okay.
here, about 820. So that would be the point where the bulls would want to recapture and move back above that line. Notice here as well, -1 standard deviation channel, 1 standard deviation below our
Problem
teal
here.
linear regression line there. That's about where we've stabilized so far today. So even more emphasis.
Now that
on
we're
that
above the
level,
VWAP,
776,
I
77,
do believe we're going to go
77,
higher.
excuse me, as a potential supportive area.
Yeah, and ServiceNow year-to-date trading
I'm
down
gonna
about
go into the kitchen
27%, of course, more than 10% coming off of
and
that
drink these
news
2
of a
things of
potential
water.
acquisition dragging them down today. Let's move to your last
kind of been
pick
a
here. We're talking about a company everybody
wait and
knows
see
that
kind of
most
day
us use
today.
On a near daily basis, at least if you live in a major city. We're talking about Uber here.
I've been
Scott,
holding these
what's your
calls and
favorite
I've added
Uber?
on
I'm moderately bullish.
I'm looking pretty good on them right
Moderately
now.
bullish. And the stock just dropped below its 200-day moving average, which has been support in the past. So moderately bullish.
Slash ES needs to get up here and have some mustard and get up to 6906.
Inexpensive. It is very, very cheap. So I am buying some time. I'm buying a diagonal call spread.
You understand? That's about a 10-point bounce. Let's do it.
85 strike call. I'm going to go out to just regular January expiration and buy the 82.5 strike call. So moderately bullish diagonal call spread, buying me some time.
Okie dokie. Tesla, Vegas has been all over this one.
Recovery in Uber here. I know it dipped below that 200, but I think it's going to grab it pretty quickly and then bounce up from there.
All right, Rick, so as we look at the technicals for Uber, and Uber also entering this robo-taxi space now in Dubai, so another potential driver for them in terms of growth possibilities. But I do see some crossing lines here, so walk us through the technicals on that, because this is not
I'm
something
gonna go
we can
check, make sure I turned off my cookers.
To supply those autonomous driving vehicles here.
I just had those two last burgers there with George Foreman.
Bottomed out twice recently here. If you were to backtrack, this was once again an important area because we had this high point here. So we've tested
about one of the very first ones that came out.
Since then, we've held on so far. If we were to move lower, the 77 level, our lighter green line here, that was around when we
Very
topped
good.
out repeatedly here.
Okay, we're at
and then
50 cents
retested
again.
after the breakout to the upside. So again, a bit of a wider span between these 2 points.
Come on, let's break
Those
it.
are what sticks out
Give
in
me
terms
about
of
70.
horizontal levels to consider. Our trend,
I would
blue line
love
here
70.
has kind of progressed into a steeper trend line with our
You can do it
white
here.
line
Break it.
So,
682.68 needs to break. I've said it once. I've said it twice, and I've said it 3 times.
Level. So remains to be seen if we can recover and get
Do
our
it.
head together and use surge here to the upside. Moving averages, our purple 252-day near 85.41 is our closest. That's our longest term moving average and thus our most significant.
Now 53
to break
cents.
back above if we were to move beyond.
Randy, we
here.
need to break this
The
one.
Longer term, the moving average, the more significant it is in terms of crossovers. RSI still moving lower, below the 50 midline, downward trend line still in play, but perhaps a bit of a bullish divergence here. Notice price is making a lower close. RSI is actually above that level, so perhaps not quite as bad as it seems here. Could be some steam building up in this name. Volume profile shows we are on the verge of slipping below our node that we are nearest to. That's kind of centered around the 84 level. If we were to move further, the point of control, this heavy area, around 90.65, that's the mark to break above.
And we're hovering right near that bottom you highlighted a couple times at 82.81 right now for this one. Now, Scott, just as we were walking through your big three, the markets did a bit of a turn. The NASDAQ and the S&P.
Figaro, are they coming?
Line. You know, I'd love to know with all the data that we've got
In
coming
the
out
sky,
today, what do you think has the biggest
in the
potential to be
sky.
Boy, we get the big jobs number tomorrow, and I do think unless it's a massive outlier, we'll probably just take it and say, okay, this is a little piece of the puzzle that's been missing, but we've got to move on from there. We do have some earnings left. There's some AI overhang, especially last week, big tech with Oracle and AVGO, and I think the market's looking for anything it can to kind of hang its hat on to maybe put some of that at ease. One of the good things that came out of last week and the last several weeks is a little bit of the broadening of some of the rally that's been going on. We'll see if that can continue. But I think these data points, we have to be able to just say, hey, there's a lot of catch up here, not to get ahead of our skis here. So I would actually like over this week here to see things calm down and then set the stage, set a nice score up for the last week or two of the year to maybe get that Santa Claus rally.
Well, Scott, we appreciate you being with us this morning. For the big three, that's Scott Bauer, the CEO of Prosper Trading Academy, and of course, Rick Ducat, our lead market technician here for breaking down the technicals for us. Coming up next, we're going to spotlight the current state of the market and get some bold calls for 2026. Trading 360 will be right back.
They're now at $2.54.
Sometimes, you could have done better. Same goes for where you invest.
We got the 200
Level up and invest smart.
SMA.
Morning movers.
in the 1 minute
Find out what
for resistance.
market action. Tech check, options corner.
That should be an exit idea.
Technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Sleigh bells,
Webcasts are designed to help
are
you
they
broaden your knowledge
ringing?
of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the state of the market and look ahead to 2026. Joining us now in studio is Michael Grant, the head of Long Short Strategies, PM at Calamos Phineas, and the Long Short Mutual Fund they have their CPLSX at Calamos. Michael, thank you for being in studio with us. We love having guests in
Tesla
here
new
with us.
high.
Now, I was walking through your recent note about 2026, and you framed the year as less mania and more maturity. What specifically tells you that the market is moving away from this hype phase that we've been in and into something that focuses more on fundamentals?
So I think the word mania is very important. There's a tendency to use the word bubble in speaking about AI today. And I think that's wrong, because bubbles have a boom-bust connotation with the economy. The economy looks like it's still going to be resilient this year. But the mania is going to unfold very slowly, and we think the AI infrastructure theme will be very gradually but surely derated next year. And that's going to allow an opportunity for investors to broaden into other parts of the economy that will benefit or other parts of the stock market to benefit from a resilient economy.
And what do you think is the clearest signal right now that we've moved past this speculative excess, for lack of a better word, and into what could be a more disciplined market regime?
Well, first of all, several of the key leaders like NVIDIA and Microsoft are not going up.
I'm done eating. I'll be right back.
Business like NVIDIA dramatically increased its fundamental outlook, so that's an important data point. And then, of course, the reaction to Oracle is very intriguing, because investors are beginning to realize that their spending cycle could be open-ended. And as the market shifts towards funding this with more debt and less cash, that is a real constraint. And not all businesses will be able to spend at this pace. And I think you're seeing this theme emerge in the stock action.
So if this is a maturity phase, does this mean that we're going to see lower
Marley.
returns overall, or is this just now a different or new playbook for generating alpha?
I think it's a new playbook. And our investment lives have been dominated by this outperformance of a small group of mega cap stocks. And increasingly, it's looking like those businesses are changing their color. They're
You got a problem?
More capital intensive, less cash flow generative, and historically, that is a problem for equity investors. So I think there's a very good argument to say, even if AI unfolds according to the optimists, the stock prices will no longer win like they've won in the last 50 years. And that implies investors need to shift their attention.
So if investors are shifting, as you mentioned, you think AI is moving into this infrastructure space, that's going to be the focus. Where do you think investors are underestimating any of this infrastructure play? Is it the length or how expensive the build out really is?
Well, unfortunately, the answer is very obvious. We still have no mass market product to fund any of this. What the companies have is not defensible. There's no moat around it. And therefore, the ROI is very much unknown. If we take the hyperscaler infrastructure spending that has happened and is planned, it implies $600 billion of amortization expense just by these hyperscalers. That's larger than what those companies earn today. So we have to go back to the fundamental question, how will this be used and how profitable will it be? And it's not that these technology is not transformative, but the key qualities of it, it is generic and it's non-proprietary. And historically, to scale a commercial opportunity, you start with something that's complex and proprietary, and that's not what we're seeing in the core technology.
So when we see this shift into infrastructure, who pays that bill first? Is it the hyperscalers? Are governments paying? Is it enterprises?
So far it's the hyperscalers. And these hyperscalers are the most
big knife.
profitable cash-generative corporate entities on the planet. And this is why the step up in spending this year was possible and why it could happen so fast, because the cash was just in the bank. Going forward, it's going to have to be financed, either equity financed or debt financed. And that's just a harder constraint to keep all of this spending going forward.
And the other big theme that we talked about for most of the year in AI, whether you want to include the word bubble in that conversation, is all the geopolitical aspect that we've been seeing this year. And we've had geopolitics matter so much more than I think we've ever seen, especially the last couple months here. How should investors be thinking about them as it relates to their investments, particularly in the international space, because we have seen outperformance there?
So that's a great question, because everyone is very exposed to these mega caps and this AI narrative. And it's a source of anxiety, because we've never seen such a small group of stocks dominate global portfolios. So
got a lot of great questions.
Is to look to diversify. Do I go abroad internationally, for example? I think that's very hard. I think that the geopolitical world that we're now in, which has become a patient containment of China, implies that the globalization is closing, not opening, and that makes it very hard for the non-US economies to work well. The hard reality is that it's the US economy that's doing well. It's the US economy that is reflating. There are possible winners from that abroad, because reflation benefits cyclical value opportunities. But the point is that even abroad, these opportunities are led by American reflation. If a problem there emerged, the rest of the world's economies are far too precarious to be a genuine source of diversification. So I think if anything really happens to the US market, and the mega caps in particular, there will be no hiding, even internationally.
Michael, we appreciate you joining us in studio today. Really interesting insight there. We really appreciate your insight on that one. That is Michael Grant from Calamos. Thanks again for joining us here in our Chicago headquarters. Coming up next, we've got the disruptors. Alex Coffey joins us to take a look at Akamai, which was a double upgrade over in KeyBank. He'll break down the call and give us an example trade next on Trading 360.
Woo!
Meta's flying. Nvidia pulled back to the 200.
hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
SPX is kind of in between. We got a 1, 2, 3, but it dipped below it.
Our technical analysis webcast series breaks down different charting techniques.
We got support there.
Analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest.
68, 15, 74.
On demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Kane here at our Chicago headquarters. Let's head up to the New York Stock Exchange for a check on the markets. Welcome in Nicole Fed Ladies, host of Opening Bell and the Watch List. Good morning to you, Nicole. We're 2 hours into the trading day. I was hoping to ask you about the turnaround we had seen just about 15 minutes ago, but we've given up those gains and we're firmly back in the red this morning.
Yeah, we do have some red arrows here today. There's a lot of things going on all at the same time. Of course, it's looking like the 8th winning month in a row for the Dow and the S&P, and we're still not that far off from record highs. Right now, you can see the S&P is down 0.1%. But what's weighing on the market overall are names in the energy and materials category, and that's where energy in particular is seeing the worst bunch. And you do have some of the Mag 7 names like Microsoft, Apple, and Google with down arrows, so that's worth noting. Names like Exxon is down 1.5%. Chevron's also lower, just to give you some of those energy type names. Also, we look
SPY just below the 9 EMA.
Now talking about the Fed should be cutting 50 basis
It's gone back and forth.
Thinking that maybe some of the data really is showing some softness. So he's been in the 50 basis.
I have to break the 9, and then the VWAP, and then the 200.
I'll go through that in a moment. Other names that have been in the news and some good news overall. We've had some up arrows for some of the, some of the names that are in the tech sector, for example, are seeing up arrows like NVIDIA. So that's a winner there. That is the big picture, I would say. Micron got a nice call from Wedbush. That's up 2.5% at one point today. And the guests are still feeling like we're moving to up arrows rather than selling off.
Yeah, and you mentioned Tesla, they're a top performer on the S&P 500 right now, following a really bullish note from Dan Ives, who's been a long-time bull, but this is one of his biggest calls I think he's made to date on Tesla. Can you walk us through what he said?
It comes from a successful robo-taxi launch in Austin, Texas, and saying that this could be a monster year. He sees a monster year in 2026 because of this successful robo-taxi launch. The full self-driving adoption, also accelerating cybercab deployment, and that will help to move Tesla into the next realm when it comes to AI. In fact, he sees $2 trillion market cap. His bull case is $3 trillion, which would be an $800 price target if he gets the bull case there. At $477 today, a $600 target, which is sort of his base case, and an outperform rating. That shows you upside potential, and those would be some new highs overall. Expects that we'll see this in over 30 cities next year. And as we advance in the AI revolution, this deployment of robo-taxis is a game changer for the company, and that this is the next phase of Tesla, and that this will be a pivotal year. So this accelerated rollout here of full self-driving and just the autonomous vehicles and everything that goes along with it is just optimal, and he sees that $3 trillion market cap. I mean, I'll also note we're talking a lot about Elon Musk's SpaceX and the likelihood that we will see an IPO next year. And, will Elon Musk be regarded, I'm throwing this in as a question, really highly? Everybody wants to be in the SpaceX IPO. It's going to be back to that big visionary genius type. I know a lot of folks have gone back and forth on sentiment on Elon Musk, but is this the year of Elon Musk? And just, the genius and visionary that it is. They want to buy everything. They want SpaceX, they want Tesla, they want everything Elon Musk.
So we'll have to see. But in his words, Dan Ives is just saying this is the golden goose, and also that he sees a monster year ahead for Tesla.
The answer to that question you just posed, Nicole, is whether or not Tesla and SpaceX will be successful next year, too. So I wish I had a crystal ball to answer it for us. That's Nicole, ladies. Thank you for walking us through Dan Ives' latest call on Tesla. And now it's time for the disruptors. Alex Coffey is back with today's company. We're talking about Akamai. KeyBank double upgraded the shares this morning to overweight from underweight. They also apologize for being wrong on this one.
Yeah, this is analyst Jackson Eder over at KeyBank, as you mentioned, the double upgrade to overweight from underweight. Again, a part of one of those 2026 sort of sector refreshes as they get their outlook out to the street ahead of the new year. KeyBank has a preference for small and mid-cap software over large caps heading into next year. And then, as you mentioned, admitting to being wrong on Akamai. The company's revenue has the opportunity, they say, to accelerate as more of the business shifts towards compute. This being told to investors within the research note. Interestingly enough, if that were to happen, it would snap what looks like to be a streak of sort of lackluster sideways revenue growth over the last several years, kind of stuck in the 4 or 5% range. They could really upgrade that for next year. That would do a lot for investors here. But joining the majority of analysts, or creating a majority of analysts, I should say, is now you got 14 of the, let's call it 26 analysts compiled by Bloomberg. That's 53.8% in the buy equivalent rate rating. 9 or about a third of the analysts in the whole camp. There is still 3 sells, including JP Morgan, Goldman Sachs, and Morgan Stanley, but those have not been updated since early November. So we'll see if any of those soften their stance into the new year as well. But all in all, a nice move here today, bucking the overall kind of tech weakness today, as it's up 1.5%.
Yeah, they are bucking. You mentioned some of the analyst coverage here. 21 analysts revised their earnings upward for the upcoming pyramid. Price targets are between 69 and 135, so puts this new move, on the upper end. They were the street low though before this upgrade to 115. They were at $66 at KeyBank. So Alex, when we look at Akamai Technologies to try to do an example trade here, how might we approach this knowing that they're really underperforming the market year to date, down almost 9% on the year, down more than 12%?
Yeah, whenever kind of they're tied to news headlines like this or a story, I try to tie the trade to that narrative.
Google has a triple bottom.
To Jackson over at KeyBank's narrative around this particular stock, and you feel, hey, it has a lot of potential now because, hey, maybe we were wrong. And you talked about the underperformance. And so the double upgrade, the really aggressive adjustment in the price target, I looked at an example trade that carries risk definition, but goes out to the middle of January, the January 16th monthly cycle. That's that big leap expiration, typically one of the busiest expirations of the year. And it's the 90 call, just buying a call. And so this strategy, maybe not the highest probability of success oftentimes, but if you have a bullish or bearish outlook, if you have a bullish outlook in the case of the call, and you're looking for a move as a result of that, this is a strategy that does not have cap upside. So it has the positive of having cap downside. You know your risk going in, but if you did get that move, say quickly to 115, where this price target is, although they do typically carry a 12-month price target, but say things really shifted over the next month and you saw a big move, it wouldn't be capped out. Now, you will need help from the market. You'll need about a $6 move to just break even. Say you spent $3 on this, that would be $300 in risk, but your break even, you add that debit to the long haul strike, which is 90. So in this case, that's a 93 break even. So you'll need help from the market by expiration, a rally. But risk definition, uncapped gains, and if you're very bullish, like this KeyBank analyst is laying out, perhaps there's a strategy that can help accomplish that if you got the move.
And right now, Akamai trading at 87.08 today, up about 1.4% on news of this double upgrade. I want to thank Alex Coffey, our senior equities contributor, for being here for our Disruptors segment. And coming up next, it's time for our 360 round. We'll continue talking about Tesla, take a look at the year that it was for them. We'll recap their up and down 2025 and look ahead to 2026 when we return on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools.
IWM new low.
400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on the Schwab Network. Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to recap the year that was for Tesla. Joining me now is Carl Brower, Executive Analyst at ICCars.com, and Garrett Nelson, Vice President and Senior Equity Analyst at CFRA Research. Carl, we'll start with you. Thoughts on Tesla's volatile year that we've seen so far, albeit it's up more than 4% today.
Yeah, the stock price versus what's going on with that company in the past 12 months is always a quandary, but we've certainly seen a lot of turbulence, as you mentioned. Everything from the sales challenges and the fact that I think it was over a year ago, October 24, that Elon said growth would be...
The video off the 200
25 for Tesla sales
turned around a little bit, a little cup.
Down year for him, to political turbulence and involvement in places like Doge, the Doge Department, and of course increased competition from China that is really starting to dominate a lot of global markets for electric vehicles. So a lot of ups and downs, some might argue more downs than ups for Elon and Tesla in 25.
And Garrett, Carl just hinted at some of this disconnect we've seen between the stock price right now and some of the actual data that we've gotten from Tesla. You have a sell rating on Tesla, $325 price target on shares. What do you think the biggest disconnect is between how the stock is trading and the underlying business right now?
Yeah, thanks for having me. I agree with everything Carl said. This has been really a roller coaster type year for Tesla. But the stock is basically back to pretty much exactly where it was a year ago, trading, hovering, right at record highs. The reason why we lowered our rating to sell in September was just this increasing disconnect. So if we look at estimates for 2026 and 2027, we think the consensus numbers are too high. Based on our below consensus numbers for 2027, we have Tesla trading north of 175 times our 2027 EPS estimate. Historically, the stock has traded about 112 times forward earnings, and our $325 price target is based on 120 times. So another thing, we haven't really seen the full impact of the expiration of the federal EV tax credit at the end of September. We've seen some monthly sales numbers in the U.S. Showing that Tesla's EV sales hit close to a 4-year low in November. And so we're going to get those numbers for Q4, their sales, just after the new year. And we're not really optimistic as far as what the sales numbers are going to show. So there's that in terms of a near-term challenge for the stock.
And Carl, coming back to you, I'm looking at the chart here, and a lot of the rebound that we're seeing here coincided with when Elon Musk really recommitted himself back to Tesla and exited, stepped away from his Doge role. How much does the leadership focus and credibility still matter to Tesla's story? I was just talking to Nicole Petalidis about, is this the year of Elon Musk versus Tesla, and how important is he to the success of Tesla?
Ooh, Marley.
To the brand and the visibility that he's able to achieve with the brand and the belief that he's got a real long-term vision for success of a company like Tesla and a lot of other companies like SpaceX. So he's key, and that's why I think his various political involvements over the past 12 months was detrimental to the stock, because if you're not a fan of Elon, it's hard to be a fan of the things he's managing, and he's so critical of that. But he does also seem to have backed away from that, as you said. He's kind of recommitted to success on the corporate side and less on the political side. And I'm hearing incredibly optimistic things from lots of analysts about SpaceX and its ability to generate power out there, free from the Earth on using solar panels and launching satellites into space that would give you a lot of power that a lot of these AI companies are going to need going forward. A lot of people feel like he's got the biggest advantage there. So that makes an interesting future potential for at least SpaceX.
All right, and Garrett, my last question is coming to you. We got this news of the Model Ys driving around Austin without a safety driver, potentially signaling the robo-taxis for Tesla, maybe moving into the next phase of not needing the safety driver in the car, which would be huge for them. Does that in any way meaningfully change your long-term view, or is it too early to move the needle on that one? And I guess the follow-up here is, what does Tesla also need to deliver in 2026 to avoid this multiple contraction that you're forecasting?
Well, give them a lot of credit in terms of their technological development and innovation when it comes to full self-driving and in other areas, AI, robotics. We give them credit for that. What they've done has been very impressive. Our issue is more with, I think maybe they've guided too aggressively in terms of how quickly they're going to expand.
Would be a trip.
Markets.
Sitting in there with someone else, no one driving the car.
And a lot of potential liability related to that expansion to other markets. And so I don't think it's going to be as fast as they're guiding to. Furthermore, they've also guided for volume production of the Cybercab in 2026. As we know, Musk has a long history of sort of disappointing relative to expectations and the timing of when new models might be available. And so we're a little skeptical of that.
Guess there'd be no tipping.
Products they're guiding for. So I think there's a high risk of disappointment in the near term. Longer term, we continue to be amazed how investors are just focused on what the company's earnings might look like a decade and 2 decades from now, sort of brushing off the near-term challenges that they clearly face. But we do like that Tesla's focus on
The space between cards is pretty accurate.
robotics, autonomous driving, and so forth. And,
Driving on them.
If investors continue to give them a pass on near term, and I think another
I mean, that's a pretty good distance.
was guiding for a few months back. Then the stock can continue to work in this environment. We just, as fundamental analysts, find the stock valuation very tough to justify here, and we view this risk reward as unfavorable.
Thanks so much for being with us, both of you. Carl Brower from iccars.com and Garrett Nelson from CFRA to talk through Tesla, the year that was, and the potential they've got going into 2026. Shares are up 4% for Tesla today, trading at 477.61. I want to thank all of you for joining us on Trading 360 today. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on SchwabNetwork.com. I'll be back with Market on close at 3 p.m. Eastern.
This PX hit the 200.
Stay with us. Fast Market Good Time. King Hall is coming up next.
Pull back to a shoulder line right here.
Schwab Bank Investor Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row.
Very
With Investor
interesting.
Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance. I'm not saying we're going to change on PDFs.
Follow the biggest headlines,
I'd say-
live analysis,
I'd take it as a sign.
news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant that I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab
Okie
Network
dokie.
app and stream live coverage wherever you are.
It's now 12 o'clock Eastern Time in New York.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It is noon Eastern here at the New York Stock Exchange, and after starting the session higher, stocks are pulling back as the tech sector feels the heat. Let me give you a check your scorecard. As we hit the lunch hour, the S&P 500 is now flagging a little bit. It is off by a tenth of a percent roughly there. The Dow has some pressure, off by a little bit more than a tenth of a percent. Nasdaq 100 lower by 0.2%.
That's just a little bit below flat.
I want to quickly circle back to the S&P 500 across sectors. You have weakness in energy really weighing on things, and that's followed by some weakness in information technology. It is being softened by gains in healthcare and a little bit of consumer discretionary and a little bit of utilities there. Here's the roadmap for today's show. We'll look at example option strategies for ServiceNow. Plus, the team from Lightfolio will be along with new sentiment data on Uber. And Texas Instruments is also on our radar today after a double downgrade. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts and trading veterans. You've got Tom White in our Chicago studio, and Kenny joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, we've got a fade happening after that pop at the open. Tom, what do you make of this? This is just kind of a regrouping happening?
Yeah.
A little bit. I think, I think investors.
Yeah, a little bit.
If we're going to actually have this Santa Claus rally, maybe some of the headline risks that are out there, the rally that we've already seen in markets for the last 2 years, also putting a little bit of weight here. You've got some push in different asset classes. I don't feel like investors are completely getting out of the market. I think there's some rotation going on, but it seems like every time there's a little bit of momentum to the upside, it feels like the bears are coming out. I'm not sure if this maybe is the case.
I feel the same way.
Maybe some tax loss harvesting before the end of the year. At this point, but if you take a look at it, we're still not that far off of those all-time highs that we saw just last week.
Exactly.
The S&P, the Dow, and Russell 2000. The NASDAQ a little bit weaker as we continue to kind of fly through this rotation out of the big tech names. But I think this week is going to be based on maybe a lot of the data that's going to come out, some of the earnings events that are due this week as earnings season kind of wraps up here. But yeah, it's just a little bit of nervousness here when typically, especially the last couple of years, we've seen some pretty massive December rallies, and I think that has investors on edge at this point.
No, we're in Santa Claus when you need them. We need those, those sleigh bells ringing. And, at the start of today, Kevin, I was with you, I would have thought that we'd start seeing that now. But I also wonder if some of that, I saw the CNBC report where there's a little bit of pushback potentially on Kevin Hassett in terms of his candidacy as the next Fed chair. And I wonder if that's something that's at play in terms of rattling investors. What's your take, Kevin?
Good morning, Doug at the top. I think that either one of the Kevins is going to be fine. If Kevin Warsh were to get the Fed, the chair of the Fed, I think the markets would really like it. I think either one of these guys is a great choice. Now, from the trading perspective today, I'm looking at the 1 minute chart. We gapped open, sold off, rallied up again, and then sold off, and now we're firming up here down about 0.1% on the S&P. And the real question is, how far can this market go without information technology, which has been down all day, and without communication services that have been heavy? Throw in the fact that energy is very weak because crude oil futures are down. There's some rumors on some progress on the talks between Ukraine and Russia, so that's weighing on crude oil futures. But this is a market that I don't know if it's bullish or bearish right now, but it's choppy. I mean, the rallies are getting sold, but the sell-offs are getting bought as well, Diane. So it's always important, I felt, to identify the market that you're in. And this market just looks choppy more than anything else.
Okay, great point about identifying it. We know where investors are bullish today. It seems like it's Tesla. They're gaining some ground. Now, it comes as Wedbush Dan. I put out a note saying that 2026 will be a pivotal year for the electric car maker. He says he expects to see an accelerated robo-taxi launch. That's interesting to me, especially when we think about, what the expectations were for this year. He sees various tailwinds. We know he is the biggest bull on Wall Street when it comes to Tesla. Tom, what's your take when you look across Tesla?
Yeah, I think, the optimism from Dan Ives and others on the street. Remember, this is one of those bifurcated stocks. Some people are still rating the stock, like Wells Fargo. I think they're in the low 100s as far as price target because they're still basing it on the stock's value as the EV maker. But Dan Ives and others have stated that, hey, if we get that rollout, they expect to roll out to another 30 cities. They're doing further testing on the robo-taxi or the cyber cab where there doesn't need to be a driver within in the seat. Also, Dan Ives put the $600 price target as his bull case for the stock.
600.
He thinks it's going to hit $2 trillion market cap this year, $3 trillion by the end of 2026 in the bull case scenario. So if a lot of the promises come to fruition, I think that's the biggest thing you've got to look at if you're a Tesla investor is, they're going to roll out more, robo-taxis across multiple cities, but when does that take place? They're supposed to ramp up production and bring more of these robo-taxis online in April. Does that happen? That's what you've got to kind of bank on if you're going to go into a stock like this that almost hit those all-time highs earlier that we saw last December, earlier in the session. We pulled back about $5 or $6, but a lot of this is based on optimism and hope for moving into 2026. Deregulation, I think, was one of the key things I read in his note out of Dan Ives is it's going to be more beneficial makers and these autonomous vehicle makers in 2026 as regulations going to come off. But everybody's expecting that. It's not just going to be in this particular sector. It's going to be broad-based across multiple sectors within the market.
Okay, I do think that's great breakdown there, Tom. I think there's something to be said for viewing the company as an AI company, and this is, coming from an agnostic perspective here, because to me, it is beyond just being an EV maker. But it's a great point about, like, how do you value this company? Kevin, what's your take when you look across Tesla?
When I look at Tesla, skeptics want all these rollouts to be timely, right? They're
Timely.
anxious for them and they get frustrated. When I look at Tesla as more, their rollouts are inevitable. I think a lot of investors, the more bullish investors, don't look at Tesla as the hard dates. They look at the trend, and the trend in robotaxis, the trend in robotics, they're coming, Diane. And the people that are getting Tesla wrong, like Tom mentioned, are looking at it from the headlines about EVs. That is the wrong way to look at this stock. The future of this stock is not going to be in EVs. They'll be part of it, but the future that's going to transform this company is going to be in these other parts, in AI, robotics, robotaxis. All these other parts are going to transform this company into the future. It's nothing short, shy of fascinating to watch this unfold. And now some of the discussions about, Starlink, what it's doing, about SpaceX, what it's doing. I mean, remember, Elon Musk, when it comes to Tesla, he has deliverables. He's got to hit thresholds to get this massive pay package that's in the future. So I think his eyes are on the prize, Diane. I think this is a good thing for Tesla.
Okay, all right. Let's talk another member of the Mag 7, this NVIDIA. That has, it's gaining some ground.
We just bounced off the 200.
There's a couple factors that seem to be at play. One seems to be that Reuters report that's out that NVIDIA is weighing ramping up production of those H200 chips to China because they recently got that green light.
SPX, we're at kind of flagging out.
What's your take?
Yeah, some
SPY, we're at the 60, well, what is this? 63. Flag it out again. Meta did real well today. Apple did not. NVIDIA bounced up and down. And AMD is below the 200. NVIDIA is above the 200. SPX is under the 50 and the 63 and the 9 and the 21.
or pushback from the Chinese government, but if these chips, and remember, these are not the strongest chips that NVIDIA makes, but if they're stronger than the ones currently being produced in China, there's going to be demand for them, and it's going to be a windfall for NVIDIA. So I think today's price action is more indicative of the dust settling, the doubts being removed, actual orders and names of customers starting to be named, and I think the overall price action in NVIDIA getting a little more bullish than I am.
Okay, all right. Let's talk about the rally that we've been watching in the metals today. Gold flat right now, but it hasn't been climbing for the highest level in 7 weeks. Silver is still higher, tagging a massive rise, up more than 2% right now. Copper is also on the rise right now, up more than 1%. So that's giving some lift to some of these, the miners as well. Tom, what's your take when you look across metals and miners?
Yeah, we talked about this on Morning Movers, Diane. I just think it's more of a diversification, not issue, but what we're seeing as far as rotation in some of these names. A weaker dollar has definitely lent some support over the past week or two. And then, central bank buying as far as gold goes, those industrial uses for copper and silver, maybe putting a bid back into those are getting a little bit stretched on a technical basis at this point, but it feels like, as I mentioned before, there doesn't feel like a rotation out of the market in general. I think they're just reassessing where they're going into the markets. These are hard assets. I think that's part of the concern, the central bank buying that I mentioned. That's lending support, a little bit of geopolitical unrest. Also, do we get a resolution to the Russia-Ukraine war that talks again overnight overseas? So that's also a concern. And I think this is just a diversification type of play because the push into some of these other asset classes, a little bit of a head scratcher. You've got Bitcoin down 4.5%, so maybe that's also lending some support. They're getting out of that digital gold and going back into some of the areas within the metals. And I think that it's not a bad thing if investors want to maybe reallocate a little bit more funds to some of these metals. But on the silver trade, on the copper trade, maybe getting stretched here a little bit. Even gold pulled back. It was up over 1% earlier on in the session. Maybe getting a little bit
It could be a 1, 2, 3, but
silver continues to move to the upside near record highs.
We're at the bottom.
You still have trading to higher. You got Newmont higher right now. You got Freeport McMoran. What's your take, Kevin?
I think if you look at the 5-minute charts the last few days on gold, there was a pretty violent sell-off in gold on Friday.
Yeah, it was.
The trading day started. Overnight Sunday, this morning, it had gotten up pretty close to, back at 43.80. It was up significantly this morning. Now it's back down. It's sold off about, I'd say, $55 to $60 from its highs today. So, and then again, it resumed its kind of sell-off. So, listen, there is some tailwind behind gold with the lower U.S. dollar, but that relationship has been strained lately as gold only goes up lately, and now you're starting to hit some inflection points on gold. These metals have had an unbelievable historic run. At one point, gold was up 56% for the year. That sounds like more of a bubble than some of these AI stocks. So watching them very closely and not surprised that they're getting
watch it.
choppy at these levels, but some big price swings starting Friday morning and overnight Sunday and into today, Diane.
All right, great analysis, guys. We've got bull versus bear coming out. You guys get their example trades put together for service now. I have news of a potential acquisition and a downgrade is hitting shares. That's next on Fast Market.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to that market here on Schwab Network. Shares of service now are under heavy pressure today amid a couple factors that investors view as headwinds. One, that the company's eyeing a big takeover. According to Bloomberg, ServiceNow is in advanced talks to buy the cybersecurity startup Armis at a deal valued at as much as $7 billion. That's the market's largest acquisition ever. Wall Street doesn't seem to like that. Meantime, KeyBank is downgrading the stock to underweight and maintaining its $775 price target. KeyBank is flagging AI as a potential threat to traditional SaaS models. All right, time now for the bull bear tug of war. For that, let's look back at our co-hosts Tom White and Kevin Inks. It is bull versus bear time. So before we get to the example trades, we got to talk your take on ServiceNow, guys. Kevin, I'll start with you. What's your thoughts?
Yeah, the quote from KeyBank that downgraded it to underweight from sector weight. Here's the quote that really caught my attention. The death of service, or SaaS, the death of software as a service narrative could come for ServiceNow in 2026. Ooh, that is an ominous, and they lowered their price target and the stock went right to and through the price target. So, you know, this is a company that is right in the middle of AI, but using large language models. And boy, this was a big downgrade and a very cautious note that they put out. And so, yeah, you know, I thought it was interesting. On August 13th, if you look at the chart, they had a death cross where the 50-day went over the 200-day. The stock sold off to 863 right then. It had rallied from there, and now it's right back down from those. It rallied back to those highs, and now it's back down towards the lows of that move. So
now we're back down now.
If you're watching the numbers, it tried to rally off that cross, and now it's way lower than that now and back down towards those lows. So yeah, pretty ugly. I mean, the chart experts are going to have a field day with that picture. It's not pretty, Diane.
So the death cross, the deal that Wall Street does.
It's a little overbought for me, buddy.
What's your take?
Yeah, Kevin mentioned that fall. We're back to levels that we saw in late April during that big massive sell-off. So at 8-month lows here for the stock, and that kind of highlighted.
Google's almost to yesterday's low. Friday's low. Google.
For ServiceNow in 2026. You mentioned the Armis deal, $7 billion. That would be their biggest. This comes after that deal, $2.85 billion in March of this year for MoveWorks, and then in early December they announced a nearly over $1 billion deal for Veza, high growth identity governance administrator vendor. So they're taking that. Maybe that makeup that Salesforce had, where they're in the M&A space actively at this point. Bill McDermott, the CEO, their growth rate's been pretty good, but they're putting themselves into a precarious position by going after all these M&A deals, right? And then they're competing in the software as a service space with Salesforce, with Microsoft, and other big players in this name. And maybe that's going to contract some of their margins as they're outlaying all this capital to kind of keep up and expand their footprint. This is their first move into the cybersecurity space with the startup Armis. So maybe they're thinking that if they continue to expand their footprint, they're going to have more offerings for the clients they have existing. But if you look at their earnings have been pretty solid. Their growth rate's pretty solid. Valuation was always a concern for this company. And then on the 18th, they start trading in 5-1 stock split also. So we have that to look forward to. Also, but right now, you look at the chart, it's in no man's land. Far below it's 50, it's 200 and 100-day moving averages. Like $100 below its 50-day moving average, which is pretty significant.
And so that begs the question, is there light at the end of the tunnel, because we've got both the bull and bear view here. All right, let's get into the example trade. Kevin, let's start off with yours.
Yeah, you know, when you see an $860 stock sell off 10%, that should catch everyone's attention that this stock is it's moving, right? I mean, this news was not well perceived. Now, people trading it out, is the bad news out? Is this a dip that you can buy? I personally have no idea, Diane. So what I want to do is play for continued movement. And so when I looked at something in the opposite of a range-bound strategy, which is the long iron condor, I measured it out till December 26th. So I gave myself a little bit of time, about 11 days. I measured the expected move, which was about $41 about an hour ago. Now it's about $38, close enough, around $40. And so what I did, Diana, is I looked at a long iron condor where my short strikes were right at the expected move. So I bought, like I said, in the December 26th, I bought the 805, 815 call vertical. That's where if the stock would start to recover and you're off the bottoms here. And then if it doesn't, I also bought the 745, 735 vertical. So I've got verticals on going in both directions. I paid about $4.65 debit for both of them, both $10. It's trading closer to $4 right now, so you can get it even lower. It looks like vol has come down slightly. That's why the expected move has come down. But you're looking for a move of about $40 in either direction, either towards that $815 strike or that $735 strike. You've got 11 days, but like I said, this thing has already moved 10% today, Diane.
I'll go ahead and take it here, Kev. Yeah, December 26th weekly option. So just 11 days to expiration on this. And Kevin makes a good point about the pricing on this long iron condor. Price discovery warranted on this. Bid-ask spreads are pretty wide on this, so the prices are moving around quite a bit. But going out to that December 26th weekly options, you're going to buy the 805 call, sell the 815 call. So you're buying a call vertical, that's out of the money to the upside. And then on the put side, you're going to buy the 745 put, sell the 735 put. So $10 wide long iron condor, you're paying roughly. We've got 465 debit, as Kevin mentioned. It's come in a little bit because implied volatility's come in a little bit. But the debit you pay, if you pay $465, there's your risk, $465. You pay $4, you only got $400 in risk on this one. If you do pay $465, your break even to the upside where you want it to go above is 809.65, or you want it to go lower than the break even on the downside, 740.45 to the downside. So it sets up and aligns with that one standard deviation move. But this type of strategy that Kevin brought is one of those strategies where, hey, it's a bull-bear debate in itself. You either want this thing to rally or you want this thing to fall pretty significantly more than what the option market's pricing in. At this point on this type of trade, that's where you're going to get that expansion in either one of those verticals on the upside or the downside on this need-to-move type of strategy here with the long iron condor here, where you're paying a debit you pay is going to be your risk on that one, 11 days in that position. Now let's get back to my neutral to bullish example trade here, Kev. I went out to the January 2nd weekly options, and you mentioned the stock's up a little bit, so the price might be off on this one. January 2nd, so I give myself 18 days to expiration on this one, a little bit more time, where I'm going to sell an out-of-the-money put vertical for a neutral to bullish stance, sell the 740 strike put, and then buy the 730 strike put. So, it's don't be a hero type of strategy where you can still take a directional bias, but you're giving yourself a better probability of success on this one. sell that $10 wide short, put vertical out of the money to the downside by over $30. You're going to collect roughly, I got a 210 credit on there, trading closer to $2 right now, but the credit you collect is what you can make. So if you collect $210 is what you can make with $790 in risk. That's all the way below $730 on this trade. Kev, this one's got an extra week in it, but you've got a good probability of success on this one, but it skews your risk reward a little bit because you're giving yourself that better or higher probability, right?
And for our viewers, notice something, right? I'm long a vertical on the put side, as well on the call side, but Tom is short the vertical on the put side. And both our strikes are very close to each other, right? Why is that? Well, we're using that right column on the Thinkorswim platform to give us the expected move out to those dates. And then you go inside it or outside it, a little more aggressive. A little more aggressive, you collect more premium. A little less aggressive, you would collect less. But using those strikes in that right column and as your foundation, and then deciding you want to be a little more bullish or a little more passive with your strike selection. But that right column really helps you out as it tends to give you ideas about where to put your strikes on.
And the probability that that 740 strike will be out of the money at expiration, which is what you want on this type of strategy, about 71.8% probability. So that's why you've got so much risk versus the amount of reward you have in this type of position, because you are giving yourself that 3 out of 4 scenarios where you can profit if the stock goes up, stays where it is, or even goes lower, you're wrong. If it stays above that break even, of just below 738 on this example trade, Diane. So there you go. Bull bear on Kevin's and bullish, neutral bullish on mine.
And also short versus long. There we go, guys. We've got cash tags coming out. The team from Lightfolio will be along with new sentiment data on Uber. It's been an outperformer year to date. Keep it right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Landis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market Schwab Network. I'm Diane King alongside Kevin Deans over at the Steamboat. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Lightfolio, taking a look at Uber today. All right, Landon, Uber has been an outperformer compared to the S&P 500 year to date. So the question is, when you look across your data, is the green light still happening?
love that green light. Yeah, it's a good, strong stock. This over the last year, it's up about, 40%. It's off its highs right now. Some investors may not be super happy, but what is it, down maybe 20% from highs, but still, up 40% in 1 year. So doing well, and it's become number one, right? I mean, it's just crushed Lyft. It's always had a good lead on Lyft. I remember a few years ago, Lyft made a little bit of a run at them with consumer sentiment, I think because of the tipping, but Uber matched and they kind of left them in the dust. So Uber's definitely the leader, and they're doing well. I mean, when you look at their human delivery, if you want to call it that, it's up 20% on a year-over-year basis. Item delivery is up 25%, so they're getting into that game as well, doing very well. But and the data does look strong. I'll give them that. I think the big question on everyone's mind is, what's going to happen with autonomous driving? Is this going to help or hurt Uber? And that's a monster question. And you can kind of see here Waymo's at the top with the increase in consumer usage, web visits on a year-over-year basis. Uber fits nicely in there, right? I mean, it's a little bit behind DoorDash on the food part of it. Uber Eats is below, but Uber's still doing well, and you can see Lyft and Grubhub kind of struggling a little bit. But I think really the big question for me as an investor is, how does autonomous driving fit in? Is it going to help or hurt? For a long time, I was thinking that they've got the users, and that is super valuable. We talked about Meta the other day. When you've got the user base the size that Uber has, you can do a lot of very powerful things. However, there's also the disruption factor, and when it comes to ride sharing, if you're gonna compete, if Uber's gonna compete with a Tesla, who is looking like the rides are going to be anywhere from 40 to 80% cheaper than UberX, it's going to be very tough to continue to pay those drivers. So they have to get to autonomous, because that's who they're going to be competing against. Right now, Waymo's actually costs more than UberX. It's about 40% more. I'm not sure if that's going to come down. We'll see. They're about $1.36 cost per mile, whereas Teslas are about 80-cent cost per mile to operate those. So we'll see. And Waymo's doing well. They did, I think, 14 million rides in 2025, which is triple last year. But Uber's got way more than that. I think Waymo's got 2,500 units out there running around, whereas Uber's got 5 million drivers. So it's a massive leader, but you've got two very capable companies, and I'd say that Tesla's even more so the bigger one to fear, coming at them with a complete disruption strategy. This is not just a different way of doing things, a different network, and competing on price. I mean, this is obviously taking a big factor in changing it, where you're removing the driver. So Tesla thinks that they can get to 2 to 3 million units produced annually. And that's, like I said, Uber's got 5 million drivers. If you're cranking out 2 to 3 million units annually, you've got more than Uber in 2 to 3 years easy. So I think there's a big concern with Uber on what's going to happen on that side of things. Now, I will say the biggest, I guess, saving grace for Uber is probably going to be regulatory. I think it's really important for Tesla shareholders to watch and see how these elections go, because I believe that Elon Musk has half of the congressmen like him and half of them don't, much like the country. And if Democrats get elected, I'm guessing the regulatory side of Tesla self-driving is going to be harder to get over those hurdles than if Republicans are elected. So I think that's actually a big factor. But long term, all things being equal, I think Tesla's going to disrupt in a very big way. And yes, Uber's got a lot of users, but if you're talking able to say 40 to 80%, it's not going to take long for people to start downloading the Tesla app and start handling driverless cars. So we'll see how well it turns out. But overall, I am a little bit worried for Uber long term because of the Tesla factor and to a lesser degree the Waymo factor.
Landon, you and I and Tom have been covering this company since it was a cash-burning machine, and all of a sudden it evolved into this highly profitable machine. And, the stock has softened lately, even though the strength of this company keeps getting stronger and stronger. And you have a diverging chart there that you brought us, and that might be diverging because of the risks to the future, that something could disrupt it pretty easily. And you're right. they have to find their role in the next chapter of moving people and things from one place to another. And it might be, Landon, let's talk about the app, right? The Uber app that could help all these companies organize and make reservations and do it. The app is such a strong part of what they're doing. Is it the app that could, render them still needed out there? Because, wow, I mean, you made it. If it's 2 to 3 million a year, there's going to be a catastrophic change in this business, Landon.
Yeah, I mean, it's practically overnight when it comes to the size and scope of Uber. How long it took, think about how long it took for them to build up, fight off Lyft, and build, overcome the stigma of getting in a car with strangers, which is what you're doing with taxis anyway. But, just all of that, it took them so long to build up, and then, at the virtual flip of a switch, you're going to have millions of cars out there competing. So yeah, it's definitely scary. I do agree that combined with the total user base and the app, the routing, the assignment of cars to drivers, and the drivers to passengers, all of that is definitely a huge asset. And this chart that we're looking at is exactly
We've got the triangle.
Urgency, right? We've got the demand going one way, all-time highs, very strong numbers in that blue line. The stock's kind of softening. And if there was no such thing as automated driving, autonomous driving, driverless cars, then I'd say, you know what, this looks like a pretty good deal right now. I like Uber at $80 because of those two things going the other direction. And so this is far more than just talking about, is Uber doing well? Is it a good business? The answer is yes, it's doing well. It's the leader. It's got increasing metrics, significantly increasing, 20 and 25% on a year-over-year basis. That's huge. And so it's doing very well, but it's got this big unknown coming for it, and it's, Tesla has shown repeatedly to be able to do things that everyone said they couldn't do. Musk, in particular, has done things. If you include SpaceX in the formula, he's always done things that people say you just can't do. And so for him to say, I'm going to make 2 to 3 million autonomous driverless cars per year, we're going to compete with Uber, we're going to give people rides, and it's going to cost half of what Uber does. You can say he can't do it, but you'd be 0 for whatever 5 on the last 5 predictions he's made. So I would be very, very concerned. I think you're right. I think that's where that divergence comes from. Is we're no longer evaluating Uber based on its metrics on a year-over-year, quarter-over-quarter basis. It's not just what's its margin. It's what is this massive threat, this big disruptor that's coming. Is that going to happen, and how disruptive is it going to be? And is there an out? Right, like you said, maybe they can combine. Maybe one day we're talking about how Tesla's buying Uber just for the user base of the app, and then the seamless integration is just literally overnight. Maybe that's the out. I don't know. It's definitely a huge asset for them. But if you're talking about having a car that isn't programmatically doesn't know the roads ahead of time like Waymo does, but you can just unleash it into the wild, and it uses cameras to figure things out. That's a much harder math problem than Joe needs a ride and Susie needs a ride. How can we map the nearest car? So I think that Tesla can probably figure out the app pretty easily compared to AI-driven cars. So I'm not sure how valuable it is, but I could be wrong. I haven't built Uber's app, so I don't know. But I know that all the users that they have plus the app is an asset. But this industry is very disruptible. I mean, think about when it was all taxis back in the day, and Uber was just this weird thing that people did, and now it's the standard. That can happen very quickly, and maybe it can happen in 2 to 3 years once that flip is switched and those cars start rolling off the assembly line.
I do remember when my best friend first started taking Uber. She's always been an early adopter. I thought it was so strange, but listen, it is all, even when we're describing the list, sometimes we say, you're getting an Uber. All right, Landon, we'll leave our conversation there for today. That's Landon Swan, co-founder of Likefolio. Now, from the trading perspective of all things Uber, let's bring Tom back to the conversation. Kevin, we got a lot of insights from Likefolio. Quick thought before you guys get to the example trade.
Yeah, I think if you take a look at some of their data, it's starting to turn a little bit, but we're seeing that divergence, the pullback that we've seen in the stock since hitting those all-time highs is pretty significant. I mean, this stock was $102 basically just a few months ago, so down here at 83, below some key technical levels. But Kevin, you look at this one, they'll report earnings in late January.
We just had a breakout to the 200 here.
So Tom, the stock has sold off, and
On the SPX,
feels bullish about this.
and same as the /ES, we're about the 200.
That event that could be coming on the horizon.
So,
So I
yay.
think you stay relatively short term on this. And what
SPY's got to break the 200 or the SPX or the
They
VWAP.
came out November 4th, so I think the next one is February 4th.
IWM, the QQQ has hit the
I went
200.
to the January 9th expiration, so gave myself some duration,
Has
but
hit
not
it.
a lot of duration. And I bought an unbalanced call butterfly. So I bought the 83 call. It was right at the money. Yeah, it's pretty much right at the money, the 83 call. Then I looked at the expected move out to January 9th. It's about $6, just under $6. So I went 83, bought one of the 83s, sold two of the 88s, Tom, and then I bought one of the 90s. So I gave myself that $5 call vertical and then short the $2 call vertical. The debit's only $1.50 on this. So you're buying at the money, right at or a little inside the expected move, and then finishing out the butterfly with the 83, 88, and then 90 unbalanced call butterfly, Tom.
Yeah, let's break this one down. January 9th, weekly options on this one. So as Kevin mentioned, shorter term, 25 days to expiration on this. Buying the unbalanced call butterfly for a bullish take here on this example. Buy one of the 83 calls, sell two of the 88 calls. That's where you want it to go. And then buy one of the 90 strike calls. But even if it does go above 90 over the next 3.5 weeks, it's still going to be a double in profitability. You can see here for the risk profile, you want it to kind of creep up towards at or near that 88 strike over the next 25 days to get the max profitability out of this one. Kevin mentioned the break even where you need the stock to go. 84.50 to the upside. That's less than 2% above the current share price in there. So with 3.5 weeks in this position, and you only need about a 1.8% move above the current share price to get above that break even. You don't need a big percentage move. Almost, Diane, a controlled bullish trade here. You avoid earnings and short-term positioning, but you definitely need the stock to get above that break even of 84.50 on this example trade.
So you're avoiding some of the big risks there. Thanks, guys. We've got the breakdown coming up. We're taking a look at Texas Instruments off the back of a double downgrade today. But more fast market after this break.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or
Nice.
just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Money here on Schwab Network. I'm Diane King Hall live on before the big board. Before we get to the breakdown, let me give you a check on where market stands as we get closer to the bottom of the lunch hour. The S&P 500 right now is off by a little bit more than 0.1%. So we're still seeing a little weakness in markets. The Dow lower by just shy of 0.2%. Nasdaq 100 off by 0.25%. Russell 2000 lower by 0.5%. Double downgrade for Texas Instruments. Shares under some pressure today after Goldman Sachs cut the stock to sell from a buy and slash the price target. Move comes as part of Goldman's broader 2026 outlook for the semiconductor sector. Time now for the breakdown. Joining us for Insight is Sam Vadas, host of Morning Trade Live and co-host of Market on Close for a fundamental take on Texas Instruments. So This is the time of year where the analysts are busy with a wide range of view across different sectors. What's your take here?
Yeah, 'tis the season to make ratings adjustments, and that's what Goldman has done now. Diane, I know you and I dressed very appropriately for this segment too. The 2026 outlook on semiconductor chips now. So Texas Instruments has been a double downgrade from Goldman as part of their coverage here, and this has gone from a sell. From a buy, I should say, to a sell now, with a price target of $156, down from $200. So let's just be clear, of course, around Texas Instruments. It does have exposure to the analog chips, not the kind of sexy stuff, Diane, of course, but it does have exposure to the autos. It does have exposure to the industrials as well. There have been some concerns in recent months around valuation because of its heavy exposure to China as well, with some of its revenue around 20% that it pulls in terms of sales there too. So this is all stuff to keep in mind as to, how investors have been thinking about this name. But according to Goldman, basically the reason behind this double downgrade here now is because they do continue to see hyperscalers, artificial intelligence spending continuing to move higher. So think your Microsofts of the world, think your Amazons of the world. They say that is driving tailwinds for digital, memory and storage in 2026. They also do see gradual improvement here as far as industrial and automotive recovery as well, driving some cyclical tailwinds in analog, which of course this company is in the business of. But they say that the Texas Instruments, as far as the execution, is lackluster through the cycle and less leveraged than peers in the upcycle. So compared to, obviously some of the other players in this space, they are not positioned as well. So they've also cited that strategic capacity, capital choices this cycle will serve as an idiosyncratic drag here that will weigh on the company's margin and earnings recovery relative to its peers as well. They're also talking about how inventory has been at record levels too, leading to muted margin and earnings expansion in the upturn. So what this effectively means now, Diane, of course, is Goldman is turning more negative on this name as the big companies continue to spend big, but the other chip players are perhaps a little bit better positioned to capture some of that exposure now. Now that downgrade, you could say, sort of highlights what is happening in the technology space beyond the artificial intelligence trade. Obviously, we've seen this rotation, but if you look across some of the chip space today, just as far as a breakdown, you do have Texas Instruments on the back foot off the back with this double downgrade. You interestingly have the memory names that are higher today. Think your Microns, think your SanDisks. In fact, that's actually pulled back a bit, but your Seagates of the world that are higher off the back of more bullish analyst commentary. But you do have your big sort of names like your Qualcomms, your Intels that are all lower today. Interestingly though, if you look across the coverage of Goldman and what they're saying here as far as how they see things moving forward, there are a number of names as far as some of the picks and shovels in this space. Upgrades, downgrades, initiated coverage. And I think it's important to see, while we have seen this double downgrade for Texas, we've actually seen a double upgrade for Teradyne to buy from sell. So it's going in the other direction. And you can see that reflected in the share price today. Teradyne's up at 0.8% while Texas is down 0.6%. They say that they have in GPU testing along with the recovery in traditional customers. So interesting moves as far as the way that Goldman is moving around the chess pieces as far as their 2026 outlook.
Thank you, Sam. That's Sam Bott, host of Morning Trade Live and co-host of Market on Close, with a look across this Goldman note on Texas Instruments. Let's get Tom and Kevin back in here.
Hillary's got a triple bottom.
Perspective. So Tom,
Hillary.
Example trade in Texas Instruments, it's gone a whole lot nowhere essentially over the past year, or honestly over the past several years. What's the example trade approach?
Well, it's kind of weird. You look at this downgrade, it's a double downgrade. It puts the price target down to 156, which is, more than $20 below the current share price. But then they said all this good stuff. Tailwinds for digital memory and storage in 2026.
God, I want to jump in this so bad.
Gradual recovery driving cyclical tailwinds in analog. That's right up Texas Instruments' wheelhouse. But then they mentioned, I think the key takeaway from that note was
double bottom.
It's misexecution. Their earnings at the end of October were decent. They were mixed on EPS, mixed on revenue. But at the same time, they lowered this current quarter estimates for EPS and revenue. And that's probably what's hurting the stock. Stock's only down 0.6% today on a double downgrade. That's pretty substantial. That's not moving even lower on that kind of news for this name. So I looked at the strategy that, hey, if you agree with this, this analyst and you think the stock's going to go lower, I've got a strategy for you that takes advantage of that. So this example trades bearish, and it's basically buying something slightly in the money. We're going out to the January 16th monthly option. So 32 days to expiration. Earnings are on the 20th, so you avoid the earnings event, but take advantage of any downside from these current levels. January 16th, buy the in the money 180 strike put, and then against it to offset some of the costs on that bullish put purchase, sell the 165 strike put. So having a bearish $15 wide put vertical, you're paying roughly about.
I'll be right back, but I like where these are. 68.25 is worth $3.
Is going to be your risk on this bearish position. So you're basically paying about 1/3 the width of this bearish vertical.
Double bottom.
Texas Instruments, if you think it's going to go below that break even near 175.
Yeah, and how this worked out, how this came to be, right? Tom reads the note from the analyst with the double downgrade. Then he goes to the Thinkorswim platform, looks out to that January 16th, 32 days. What's the expected move? About just under $14. And so buys the 180, sells the 165, a $15 call vertical. People always ask us for ideas and how do you come to your ideas. There it is. You formed an opinion, you gave yourself duration for the move, and then you use that right column on the Thinkorswim platform to set your strikes at about a $15 move, Tom. There's the breakdown of how this trade came to be. Now, are you right? Well, you need a move. You're going to need a move, so you gave yourself duration. But this is the opportunity that you're looking for in a downside move on Texas Instruments.
And on a percentage basis, you don't need a big move to get to that break even to the downside just below 175 on this one. And I think one of the keys with these types of strategies is that you're not seeing a big down move today in the stock, and it gives you some of that flexibility as far as trade management. So you've got 32 days in this position, but if you get a move down to maybe 170, 168, 172, and this thing starts to expand in price, which it will if the stock goes down, and then you can maybe, if you buy multiple units, you can close a portion or all of it if the market's open on that. So Diane, this sets up with the analyst note on the stock end. You have some flexibility as far as trade management goes on this bearish put vertical.
That's some great perspective that you gave there, Tom, especially when you think about that it's double downgrade, but it's not getting hit as much as you would anticipate. But that's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage means expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
Investing. I'm Jenny Warren alongside Alex Coffey. And as we check in on markets to kick off the last full week of trading for the year, we are seeing some sluggishness, modestly at that, Alex. But I mean, it does feel like we are at the end of an earnings cycle, of course, for like major catalysts. And also, it does very much feel like this awaited Santa Claus rally. Well, we're not seeing it today, at least.
Yeah, I don't know that today is fully written just yet. We've still got 3 hours till the bell. It's been kind of a back and forth battle between bears and bulls. The rotation under the surface continues. You do have a little bit of strength in Magnificent Seven today, which I think is welcomed as we get into the last part of this year. But in the end, Jenny, I think by Friday, the tone will ultimately be set for how this year shapes up. It doesn't mean there isn't potential for movement in the other direction and that there can't be a surprise, but you have holiday disruption next week, you have a holiday disruption the following week. This is that last full trading week. You got Nike, you got Micron, sort of the end of earnings season, a ton of economic data. All that to be said, I think that the tone will be set by Friday for how this year is going to close.
That is a good point. You're right. It's far too soon. Of course, we're just getting this week, but to really to overall tone for the week just based on today's sluggishness, I agree that by Friday we will be able to say, this is how we recap the year. It does feel like the year absolutely flew by, but markets have been fairly resilient. Also, there Friday and to the overall just equity focus that we tend to hone in on our show. It's been a stronger year than I think a lot of the pessimism will let you think.
Yeah, I think that's it's an interesting word to use, resilience around it, because if you're looking at it just from a 10,000-foot view, surface level, we're like a day off of all-time highs. So it's like resilient from what? Like what battle have they been tested? But you think back to the beginning of the year. You think to the tariff tantrum and all the volatility that started the end of the first quarter, start the second quarter. You will also remember and think about all the disruptions, not only from the government shutdown, but the bifurcation between soft data and the survey and the pessimism you see from consumers when they're asked about it, combined with the fact that they keep spending, and then you see the strength out of some of these things, combined with the AI ups and downs. So I think it's been a pivotal year. I understand resilience as the word, but I would just say it's been a surprisingly strong year once again, and it feels like that's been the theme for 3 straight years.
That's very true, and it's like the way we discuss it, like the most hated, most disliked bullish momentum in this market. Every time we get upside, it feels like there is such a quick narrative to try to shoot that down, but Right now, we have seen at least some stabilization in like what's driven so much of the focus here, which is the AI trade. So we're seeing some updated coverage on analyst targets now moving forward into the, of course, end of this year, beginning of 2026, which we're going to have to get very used to saying very quickly. But we'll focus on a lot of these analyst calls throughout the next hour. We'll kick things off with some of these semiconductor and just overall consumer discretionary names and seeing updated analyst coverage. We will also then be charting and trading services now, as well as Adobe, and I mean actually KLA Corp as well as Adobe. On the back again some various analyst news, lots of analyst news to get through. Tesla also with a reaffirmation from Dan Ives as we did see a $600 price target, and for some various volatility to follow. We will also be diving into Micron and Wedbush's latest conviction on Micron as we do earnings still for that name Wednesday after the closing bell, as well as Cipher Mining. Lower amid some of the weakness we're seeing in the broader crypto space. So wide variety, but definitely a tech-heavy focus this week.
Yeah, no doubt. You want to talk some of these names that are on the move. So we're also in that time of the year too, where analysts are trying to get their 2026 outlooks out to the street. They're trying to get ahead of the holidays so they can have some family time. And it's like Analyst Monday today for 2026, and we got some updates from different ones regarding semiconductors. Texas Instruments being the name on our rundown here, Jenny, didn't get the nicest adjustment here from, I believe it was KeyBank as we go into the new year.
Yes, some conviction though, and I like some conviction. I not to say that neutral is a strategy. Neutral is obviously a stance taken on by many analysts, but I like the conviction here, the double downgrade from Goldman Sachs on Texas Instruments to sell from buy, reducing their price target to 156 a share down to 200. They do see adjusted ratings in semiconductor groups as part of now their broader 2026 outlook. And they see hyperscaler AI spending continuing to move higher, driving tailwinds to digital memory and storage in 2026. Basically, all the themes that have worked in tech throughout this past year. They do also see gradual industrial and automotive recovery that can help drive cyclical tailwinds in analog. But they did cite Texas Instruments' lackluster execution through the cycle and less leverage than its peers in the upcycle behind this double downgrade. Also did downgrade ARM as part of this note, also accelerating to their price target as well on ARM to 120, 160, again as part of this updated coverage. But I do appreciate that they mentioned a lot of these cyclical themes that have worked, like again, memory, digital, and anything related to analog. I mean, one piece of the AI trade, but it hasn't been a rally that's been felt equally, as we know, from some of the winners and losers of AI throughout the year.
Yeah, and this was James Schneider over at Goldman. I was getting confused with the Akamai KeyBank analyst. But yeah, Teradyne, though, a name that was upgraded as a part of this. You mentioned ARM being downgraded. So a couple things moving around. Is there some shuffling within the coverage, a couple new initiations from some lesser followed names as well. But I would say downbeat on Texas Instruments in particular, because you read through, as you did, sort of the rationale, it sounds like they're about to be optimistic. They're saying, hey, bounce back in some of the cyclical areas, still like a lot of the memory and stuff tied to AI, but then they're like, just our execution issues with TXN is driving some of that weakness that they anticipate. Let's talk Intel, because I've said before, NVIDIA stole the show, Tesla steals the show, Palantir steals the show. Intel's the stock of the year in my mind.
Intel's up 90% this year nearly, so I know we've pulled back, now about 7.7% so far in the month of December, but I agree. I think don't let the lackluster December necessarily dictate the entire strength that they've seen throughout this past year. Plus, with some news today that we are seeing reports they are in advanced talks to buy the AI chip startup SambaNova Systems for about $1.6 billion, including debt. And so this deal could close as soon as next month per these reports, but additionally, SambaNova could pursue another option and signed term sheets with other potential investors per Bloomberg reports on Saturday. So we know that this company has been around since 2017. It does build custom AI chips to compete with, I even say how hard saying to compete with, but to say rival NVIDIA. But this would be the latest, right now, string of Intel really trying to be a formidable competitor in the broader world of AI. Also notably, their CEO of Japan does serve as the chairman of Sanganova currently. Moreover, his venture firm, Wall International, did lead the $56 million Series A round back in 2018. So he has exposure to this company, of course, already.
Yeah, I think that's the key piece. That's what I was going to add, if you didn't get there, is the ties to the leadership of Intel. And sort of the familiarity, and then also kind of filling gaps. Intel's trying to subtly shift towards offense. They've been on defense for, it seems like, half a decade now. Perhaps we're starting to see a move towards offense as the stock has stabilized and started to move off of what had been, multi-year lows not that long ago. So nice move for Intel.
Got about Lulu.
Over the year, not necessarily
last
over the last few weeks, but you can't be a beggar.
Meta.
What did I say? Beggars can't be choosers. Intel's been struggling. So the fact that it's been one of the nice performers and has really turned the table just a bit this year, I think is certainly welcomed, particularly for long-term investors that have watched that stock erode. Dollar General. So we've talked a lot about this earnings in particular, sort of the nuance within retail and how names that are more exposed to value-oriented consumers have done a little bit better. Well, I think Dollar General not only is that, but it serves a unique subset of the American population, which is a little bit more rural, it's a little bit more staples-oriented, but whatever they're doing seems to be working.
I mean,
Kind of had a double bottom and then stayed
Dollar General is frequently thought of, I think, top of mind, especially just even in the broader
under the
world of retail,
200s.
but we've seen a string of good news really kicked off by a stronger than expected earnings season for a lot of these discount names. I mean, so many of the standouts have been Dollar General, Dollar Tree, TJX, Ross Stores, companies that do serve this very important need for lower or just more affordability, frankly, for middle America, which is, I mean, Dollar General has such exposure to most Americans. I think it's fascinating for that very reason. But we did see JP Morgan upgrade shares to overweight from neutral with a price target that was raised to 166 from 128. They do see upside to the company's now 2 to 3% same-store sales growth outlook for fiscal 2026. Given its exposure to the employed low-income consumer as well as the higher level of middle-income consumers that are now trading down. Walmart mentioned the very same, and that's a huge part of these companies' recent growth. But following a meeting with management, JP Morgan says that Dollar General is now back on offense. Words we actually were just using for Intel, but seeing favorability for price as well. I mean, this name continues to be a really standout performer. We're up now 76% on the year and 22% for the month of December.
Yeah, and I believe this is a street high price target as well. So you're seeing a lot of optimism from Matthew Boss. What a name out of JP Morgan into the new year for a stock that's done really nicely too. So this isn't a turnaround story necessarily. This is a continued success story. But really nice words from the team at JP Morgan as we round that final turn of the year. We'll see if Dollar General can continue its outperformance into 2026. And then finally, Caesar. So this was another Goldman adjustment, kind of full-on, 2026 outlook within lodging and gaming. You could have taken your pick in terms of the names that they looked at, but I like the framing. The haves and the have-nots isn't just us as people, it's apparently gaming companies too.
It's true. And so Caesars, unfortunately, here down 27% on this year so far, but actually seeing some favorability so far this month. We're up 3.5% in the month of December. But Goldman today did downgrade Caesars to neutral from buy. Price target was also cut modestly to $24 a share from $25, basically in line with where we are currently trading. But they did give adjusted ratings in the gaming and
kind of feel like I'm chasing it. If I jump in Tesla.
They expect now a mixed 26 for gaming and lodging with another year of the, to quote you, Alex, and to quote this note, have and have nots. But they find it too early to call an inflection and take a positive view, frankly, on gaming.
Nvidia.
They expect that U.S. RevPAR growth will accelerate from this year with some help from the World Cup as well as just overall stimulus. So as part of this note, we did see Wyndham Hotels was also downgraded, but then they actually upgraded names like Marriott to buy from neutral, Hilton also to buy from neutral, and Las Vegas Sands was also gotten an upgrade to buy from neutral. So there wasn't just all negativity in this note. There were some haves and the have-nots as very clearly stated.
Yeah, Wayne reiterated as a buy with the price target adjustment higher. So it does seem when it comes to the gaming sector, they're going for the higher end. And then when it goes to some of the other areas within lodging, kind of looking at scale. You think Hilton, you think Marriott as two names that got upgraded, I should say, is just scale. That's what I think of when I think of those two names. So going to be an interesting 2026 as these are some of the themes that I think many analysts and investors were kind of looking for in 26 or 25 rather, and it's almost became an extension of 23 and 24, which has been this AI-centric rally until recently, maybe over the last 3 months, it started to broaden out just a little bit.
Yeah, I do feel like within the broader tourism space, we've seen pretty strong still reports and pretty strong guidance. And the nice thing about a lot of the companies like tourism and gaming exposure is they do know some of their forward-looking metrics like next year and a half, but it hasn't really resonated so well with the street. But I mean, to their point, there are still names that just maybe provide more value with, I think, a more diverse type of tourism exposure, like say Marriott, the largest hotel chain in the world, and by a sizable margin at that. So interesting note here, but lots of analyst notes to get through, as we did mention on the top of the show. We'll leave it there, though. Coming up next, we'll dive into some more analyst calls today on Adobe as well as PLA Corp. So we'll be charting and trading those names coming up next.
Yep. Now 12:15 here in Missouri. Oracle. Try and break resistance again, the SPX. We're at the 200. It's its third time. So we're still, I think, if we break that, 68.30.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever
I think so.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest or trade on your own.
And if you want, they can even manage for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the
Man, 625 this morning really looked nice on open.
Welcome back to Next Gen Investing. It's now time for Chart Master. Today we're looking at charts of Adobe as well as
200.
analyst news. Driving not exactly the most optimistic of days, but some various opinions, of course, on Adobe here specifically following its earnings.
We're at the 200 on the IWM.
Rick, walk us through the Adobe story because, again, not a hugely optimistic note today, but we did get a nice pop backward.
No resistance breakers, all of them at the 200.
The only one here. We saw lots of other price target cuts from various firms recently here. So not the brightest picture here. But when we do look at our chart more specifically, this area, 332, our darker green line, that was a notable low point from back here.
1217.
Several more times.
I'm going to take my time.
We did
Looks like one of the end of the day kind of deals.
52-week lows here, 311.58. However, we have retaken that level here. That's about where we bottomed out a couple
Once we break these
so
200s.
for now, that remains a downside level to be on the lookout for.
In terms of our overall
Right
trend,
now, we got to break
you
the
can see that we
200s.
have this blue line beginning here with these highs, connecting the subsequent highs here and here. We have broken beyond that one pretty convincingly at this point here, but now you could say that we have our white trend line here connecting these highs. So that's about where we topped out recently. That could be another area to watch. 375, our red line here, that was a notable low point, our breakdown point, and then we retested it several more times as both support and resistance.
video.
So another standout level to the upside in this case. When we do look at our other studies here, our moving averages, we can see that our yellow 21-day and orange 63-day exponential moving averages are quite close together, near about 340 or so. That's the general point where they're coming together. So there's a supportive confluence there that's just above our 332 level that we highlighted as well. When we look at RSI, red trend line that was pointing downward has been broken after a brief foray into the oversold area. Now, though, our green line that was trending upward, that's also been broken here. So a bit of an interruption in momentum here for the bullish crowd. The bulls would want for the price activity to break above our trend line and break above our resistance level, and for RSI to break above the 70 level in tandem to push into the overbought area. So when we include our volume profile study, our point of control, our thick red line here, that comes in near about 350. That's about right where we are now. So an important point to hold going forward. We can also look at our +1 standard deviation channel. One standard deviation to the upside from our teal linear regression line, that comes in near 362. That's about where we topped out yesterday. So, or excuse me, last session. So that was another level to the upside to watch out for. Finally, volume picks up once again here near about 385.
Okay, yeah, and of course we did see, again, some strength to end last week, obviously a bit lower today by about 1.6%. So with all of this in mind now, as we think through trading Adobe here for example purposes, Alex, walk us through your thinking.
Yeah, I mean, the trend is, I think, pretty straightforward. This has been a stock that's struggled, and even with the recent earnings jump, even with the recent increase in momentum, it still has yet to break that downtrend. So going with that neutral to bearish call vertical spread, just going out to the end of the year. So it's a January 2nd expiration, short call credit spread, elongated Z risk profile. Basically, with this strategy, as we talk about all the time, particularly on the put side, you just select a short strike, you provide risk definition, and if it stays below, in the case of the call vertical, that short strike, you collect your credit. In this case, it's the 365, 370, so it needs to stay below 365 by the end of the year. If you do, you would collect that $100 and keep that. 366 the break even, 400 is the max loss. So 4-to-1 risk reward on the higher probability of success side, but most importantly, it is risk defined. So if the stock does make a breakout or a rally, you don't have unlimited risk. You know what that risk is going in.
Yeah, and I think a good way to really summarize, obviously being mindful of risk, but hoping for at least some modest continuation of the recent trend we've seen in Adobe. But now our next name today, KLA Corp, which is also seeing a more, not pessimistic, but even more cautious tone, although today we are actually up by 3.5%. So KLA Corp's credit, seeing a pretty nice session to kick off this week.
Yes, the broader picture, perhaps you could say, is more of a triangular shape here. We have our low points that we can connect here with our high points here, give us this shape of two trend lines converging toward each other here. So now we're near the upper boundary there. If we were to keep moving higher, 1284.47 was our intraday high, but our high close was just recently last week here. So a bit of a disparity between the closing high and the intraday high there. Typically the closing high is regarded as being more important, so that could be the mark to watch out for. In terms of our recent lows, 1185 is where we bottomed out here. You could also look here at another relative low near 1072. So a couple notable horizontal areas to consider. When we include our moving averages here, our yellow 21-day EMA lines up pretty closely with those recent relative lows that we discussed. 1195 is where that particular indicator comes in. If you were to look at our orange 63-day EMA, just a little bit below, pretty close to the trend line, the upward sloping trend line here, that comes in at about 11.30. So a bit more food for thought here as we attempt to find some supportive areas. When we look at our RSI study, our longer downward sloping trend line in red has been broken as price pushed above the 50 midline. However, our green trend line that was much shorter lived has now been broken as well. So price, kind of stabilized near our supportive level, and we did not break through the 50 midline on the RSI, but still we haven't really managed to claw our way back above that trend line at this point. Finally, when we look at our volume profile study, we can see some very clear, very distinct volume nodes here. First, we have this one here near about 1070. We have another one here centered around 1130. And finally, the one that's closest to where we are now is right around 1200 or so. So these are some notable potential congestion points to be on the lookout for if price does start to retreat. Meanwhile, our +1 channel, our standard deviation channel to the upside, a bit of a stretch here, 1347 is where it comes in at this point in time. Remember though, this is just a snapshot of right now. It'll be a moving target if price keeps going upward in the future here. Just an idea of where to start thinking about potential resistance.
Yeah, and I think that is, again, making a pretty nice move today outside of some of the weakness we've seen in the overall tech industry. So an aim to keep on your radar here is the trend has been pretty promising. All that to be said, though, now as we think through trading Paley Core, for example, purposes again, Alex, a different story today, especially just based on price performance, a different world, obviously, that Adobe particularly operates in, but what was the thinking for an example trade?
Yeah. Same strategy, but flipped over, so the neutral to bullish version. So short put vertical spread here done for a credit. One thing I should note, though, KLAC only has monthly options available, only has 10-hour wide strikes given the big price tag of this particular stock. So this is the smallest version of the short put vertical you can do in terms of notional exposure, but it's a big product, and so the trade's just a little bit bigger. That said, looking at the 1200 mark as a potential support point and anchoring the trade to that level in that January leap expiration, the January 16th of 2026. 10-hour wide spread, that's again the minimum
pretty close.
for this particular stock. If you collect 330, that would be pretty close to a third the width of the strikes, which we talk about as a rough guideline for these strategies when pricing them out. And if you did that, you could collect 330 as a max profit. Max loss would be 670, and then that break even 1196.70. So very similar strategy to Adobe. It's just neutral to bullish as opposed to Adobe's neutral to bearish.
Yeah, and leading into more of what we're seeing from today's price activity as we are obviously making a nice hop to the upside. But we'll leave it there for Chartmaster today. Coming up next, time to discuss another winner of the session, and that is Tesla, which got a positive note from Wedbush's Dan Ives, which is up almost 4% now on the session.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
Okie dokie. Triple bottom now. George. Well.
Bull. So this is not a new bull case scenario for him. It is a much greater long-term bull case scenario for him, though. He did supply some numbers. He doubled down on their long-term upside. He posted to X saying that he thinks that they could hit a $3 trillion market cap by the end of 2026 for Tesla. So that would be a bullish scenario thanks to the company's efforts to both develop and push its AI programs. He tweeted, quote, heading into 2026, this marks a monster year ahead for Tesla/Musk as the autonomous and robotics chapter begins. We believe Tesla hits a $2 trillion market cap in 2026, and in a bull case scenario, that's $3 trillion by the end of 2026 as the AI chapter takes hold at Tesla. And this has been the big discussion about Tesla, right? Are we still supposed to talk about them as an electric vehicle maker? Are they moving into this AI robotics landscape? And that's the kind of company that we should be referring to them as. Dan Ives really thinks that it's the latter. He thinks they're entering this pivotal period where its autonomy and robotics ambitions move closer to commercialization. He expects that $2 trillion market cap to hit regardless of the scenario. That's 33% upside from where we are. He has an outperform rating right now. He reiterated that $600 price tag. He also says that he thinks robotaxis will expand to 30 plus U.S. cities in 2026. And that bull case scenario would put the stock around $800 over the next 12 to 18 months. And that's how he framed it. But another part of this conversation that sort of supports this post that he made is over the weekend there were some videos that came out of some Model Ys driving around on public roads in Austin, Texas, without a safety monitor in the vehicle. So their robotaxis may now be riding without that human safety requirement. Elon Musk has since come out since these videos were posted and said testing is underway with no occupant in the car. Now this is very important because if they can achieve this, Waymo has been doing these rides with no human safety driver in play. And that's really been the distinguishing feature of the regulatory restrictions on Tesla is that they still have a human in the car in the passenger seat in case something goes wrong. If they are able to get over that regulatory hurdle, it would really unlock a lot of this power in this space that they are hoping to maximize on in this robotaxi play and help them catch up to some of the competitors who are farther ahead. But we don't know if there's a shadow support like a chase car or if there's any sort of remote monitoring going on or geofencing or anything in there. But any of those kinds of details would be very important because Tesla's valuation really hinges on the concept that this robotaxi and autonomous driving functionality is a big driver of growth for them and a high margin network business for Tesla. So to potentially change what that looks like to get the human component out of the driver's seat or the passenger seat, that raises them up to another level of safety in terms of the regulation. That makes them a level 4 in terms of their autonomous driving. That would be a huge deal.
No doubt, and I guess I should start. It is Tesla, so this stock has like a million things going on at once. Is there anything else that you have that we should be aware of? Because the other thing that's caught my eye here is this SpaceX news, and I start to wonder, we so many see an investment in Tesla as an investment in the mind of Elon Musk, and it's not about the valuation of the car company or robotaxi, but like exposure to what he's working on. If SpaceX is suddenly an option too, does that get some of that demand elsewhere?
It's a very interesting thing, and I think there's a catalyst mix here today. That's what we'll call it. I think this autonomous driving thing is a big deal, this robotaxi without the safety driver, because this has been a big headline, and one of the things really holding that portion of the business back in terms of being a major competitor in that space. We are also hearing about SpaceX having a potential IPO in 2026. Elon Musk has pretty much all but confirmed that that is in sight, at least, or something that they're hoping to do. And you raise a good point, Alex. Does that divert attention away? I think there's the flip argument to be made that it also brings some attention back on Elon Musk and shows how very focused he is on his core businesses. And we were talking about Tesla on Trading 360 today, and the big conversation was about how critical Elon Musk's focus is to the success of any of his companies or products. And if he seems focused, they seem to be successful, whether or not
1, 2, 3
matching was the argument that was made. There's also the Cybercab, the production-ready Cybercab hit a showroom floor in San Jose. They showed the upgrades, they made some improvements. This is that self-driving. It seems to be near production-ready. It does not have a steering wheel, which was a big question mark. It's an autonomous 2-seater. The photos are kind of fascinating. It looks like a partial car to me, but they're saying that they hope that it hits the production line in Q2 of 26. So this is potentially really coming, and I think Tesla has teased a lot of vehicles, but when you start to actually see them become a part of reality and actually physically have a vehicle to get your eyes on, that is another driver today. There was also
sure is
about director compensation that's driving a move to the upside today. So several catalysts, but I would say that the big ones really are around this potential bullish move in autonomy. But I say that with a caveat because Morgan Stanley downgraded Tesla from overweight to equal weight and said that their high expectations around AI innovation have brought the stock closer to fair value. Now they did raise their price target to $425, but that's about $50 below where we're currently trading.
Yeah, and I think that's like it's been somewhat brushed over because the optimism really from Dan Ives has been so much more of the frontline story today. But I do think there's still some skepticism when it comes to the timelines and the ability to deliver on a lot of the autonomy focus. I mean, there's a lot riding on Tesla's next year. I say that pretty much every year. But what we do know is deliveries for a yearly basis at least expected to contract for the second straight year, which is not a theme that you want to see continue. So all that to be said, as we now think through trading Tesla, again, for example purposes, a lot of conviction. We always say it's one of the most highly polarizing names, but today is definitely seeing a nice bit of upside and some positive commentary going forward.
Yeah, and I was just looking at the chart. If what I'm looking at is accurate, this may be, if we were to close here, the second highest close ever for Tesla. Now, we did have a day where it peaked up to 488.54, but that day it ultimately turned around and closed like sub 440. It does look like the day before that, though, it closed around 479.86. So, I mean, we're in striking distance here of an all-time high close, if not even an all-time high intraday if the market were to firm up alongside Tesla. That said, critical area on the chart for it to break through, if you think it's going to and it's going to continue to make potentially new highs into the new year, I have a coal butterfly here for an example that looks for a move basically right to 500. We talked about the psychological importance of those big round numbers, but also in the case of Tesla, you can just read the headlines now, $500 a share for the first time. If that were to happen by New Year, this is a strategy that could benefit greatly from that. It's a 485, 500, 515 call butterfly spread expiring January 2nd. And with this, it's $1.50 debit. So you have two break-even points. Basically, you want this to end up between 486.5 and 513.5. with it being closer to 500 being your best case scenario, that's where your theoretical max gain would be 1,350. So the first thing many would see is, oh, I'm risking 150 and I can make 1,350, like sign me up. But you need to be really, really right, guys, and it needs to be basically at expiration. So it's very, very uncommon to capture that full max profit, but for the conversation, we show it.
Yeah, and hey, Tesla now looking like one of our best performing Mag 7 names, at least on a month-to-date basis, as we've climbed out about 10.5% for the month of December so far. But we'll leave it there for FOMO. Appreciate it to our Educated host of the Schwab Network for that breakdown. Coming up next, we'll discuss Micron getting a price target hike ahead of its earnings Wednesday after the close. And we'll also dive into what investors should be watching in the broader video game space, which has faced a good degree of consolidation as of late.
MU.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss some of the analyst conviction here on Micron ahead of their earnings event, which will be Wednesday after the closing bell. Joining us now is Dan King Hall, host of Morning Movers, for some insights on this call from Wedbush today, which I will say is pretty optimistic, all things considered. I mean, price target raised to $300 a share.
It is. They're growing more bullish on Micron ahead of its earnings, and they're essentially seeing this results that a beat and raise quarter for Micron. They're raising their price target, as you mentioned, to $300 a share. That's more than 35% higher than what their previous price target was. Their previous price target was $220 on that one. So they have more conviction around this because they're expecting Micron to benefit from bigger than expected increases in memory pricing. So they're expecting DRAM prices to rise at least 30% in the current quarter. NAND prices, they're expecting that to climb at least 20%. So these again are on the low, the at least side.
So pretty nice. Double top.
They do point out the gains
on a
vary
weekly
by manufacturer, especially depending on product mix and contract timing. But They point out that Micron's guidance only is looking for high single to low double-digit increases, and they think that's understated, especially when you look across industry pricing. So they think that their Q2 results could meaningfully outperform where expectations land. The one caveat I want to point out, this is Jay Woods from Freedom Capital Markets, who his note on Micron is looking at the technical aspect of it. One, obviously, the stock has had a huge run year to date. One of the things that he pointed out is that shares have traded lower off the back of the last 4 quarters and 5 of the last 6 quarters. So, that's something that he pointed out that it could be a case of seeing shares rally into the event, and then sell off on the news. So, which we've seen that before, right, where investors sell the news. So shares are gaining some ground today, though those gains have been tempered throughout today's session, guys.
Yeah, and I will say that at least was looking, this is one of the stories of this year, but at least today we're slightly higher. I'm not making a huge move, we've given up some of that strength, but I think that it's been now up 184% in 2025, and it's been a really impressive story to follow alongside Micron and all that strength. So appreciate it, Dan King Hall, who's morning. We were exploring that breakdown. But now to shift gears into the broader gaming space and some of the trends we're seeing emerge from video games in 25 into, of course, the new year. I'd like to welcome in Michael Packer, Managing Director of Strategic Planning at Wedbush Securities. Michael, first and foremost, thank you so much for joining us on this Monday.
6820s.
Outlook here for the gaming world. What are you watching for now as we head into the new year?
Well, there's really not much left to consolidate. So, we lost Zynga and then Activision the last couple of years, and now EA is under contract to be sold to a consortium that's led by the Saudi Public Investment Fund. The only big guy left to buy is Take-Two. I think Ubisoft might get taken out just because they're a mess, but they're small and they're not particularly, they're not profitable. So Take-Two is the big profit center, and they're the only ones left. When I started back in 2001, I covered 11 U.S. public console and PC publishers, and I think we're down to 1 now. So they've all disappeared into bankruptcy or consolidation. Not a lot left to buy.
Michael, 2 questions. First one, relatively straightforward. Does Grand Theft Auto actually get released in 26? As that's been the big conversation for games. And 2, has the mobile adoption for these bigger companies and sort of the brand IP lived up to initial expectations, or has it been kind of a flop?
GTA coming out eventually. Those guys get a free pass. So if they decide that it's not done in fall of 26, it'll get delayed again. It's not like them to delay multiple times, and they have now. They delayed out of 25 into spring of 26 and then into fall of 26. I don't expect they'll delay again. They dated it. I think that they fully intend for the game to come out. And they're like James Cameron making a movie, and you know it's going to do $1 billion, you just let it go. As far as mobile, I think people really misunderstand mobile. Mobile is not an extension of console and PC gaming. Mobile is its own thing. So, think about that the way you think about movies and TV. There are franchises that cross over, but the vast majority of TV franchises are created for television, and the vast majority of movie franchises are created for movies. Console and mobile work that way. So think of console like a self-contained story ends in a few hours. And think of mobile as something that goes on and on and on forever. Hopefully, Candy Crush, I think, is 13 years old, 15 years old now, and is still top 5 game. So think about that, and they're just different businesses, which is why we haven't had a lot of cross-border success. Activision bought King. It's the only way they got mobile. Take-Two bought Zynga. It's the only way they got mobile. So there are plenty of mobile companies out there, none that are particularly large in the West to invest in. One I own, so full disclosure, I own a lot of this, is Playtika, and I think they're a really interesting company, and the reason I own a lot is they created something like a 4 multiple, and if they start to grow again, they'll trade at a 10 multiple, and I'll make a bunch of money. So hopefully your viewers will join me. I am talking my book, but I really believe it.
Okay, and so outside of the true mobile world, we're seeing from Roblox's new CFO is guidance that gives some margin compression concerns about their investments right now we're seeing to further their AI push. I mean, how is AI just reshaping this entire world? Because frankly, it's reshaping everything in tech right now.
Roblox was at 140 shortly after they went public, back in 2020 or 21, and then they dropped down to the 20s. I was an analyst covering them then, and we upgraded to 29, I think. Mostly because they were getting religion about not owning data centers, and they started to use third parties, and the margins started to expand mightily. So the stock ripped back up to the hundreds, above 100. Then CFO left, and the new guy came in, and I think he's doing what new people do, starting out conservative, and so he said, we're going to invest in data centers again. That is the all-time dumbest idea ever. They don't need to own data centers. The only reason to own data centers would be if there's nobody else to build them for you. And the fact is that not only is there somebody else to build them for you, this AI boom means everybody's building data centers everywhere. So there's tons and tons and tons of capacity out there. If anything, the capacity is overbuilt. That's why you're seeing Oracle slowing down on its data center deployment. There's a lot of skepticism on AI that they're over capacity, which means Roblox can benefit from just leasing whatever they need to do. As far as AI for the business, Roblox is, what's brilliant about them is they are a platform. So there is no game called Roblox. They don't make games. They've never made a game. They make an engine, a design, a system to build your own games. So think of them like Microsoft Word is for PC. They don't write anything. They just give you the tools to write something, and you compose on Word. Roblox is that, and developers come to the site and build games. AI is going to make it easier. So a team of 2 people who wants to make a game, let's say about travel, doesn't have to build a cruise ship. They can pull something down from an AI menu. The ship can be in any port they choose to put it in. They don't have to do anything other than instruct the AI, maneuver this, manipulate this image. And so it makes it really easy to make games. And Roblox, because their current structure is they capture 70% of the revenue generated on the site, they're going to get more participants, and more participants on the platform means more revenue for them. So they're a really well-positioned company to dominate in AI. You talked about Dan Ives earlier, my colleague, in his Tesla call. We have a fund that, the Dan Ives AI Revolution Fund. Roblox is in it because Dan sees Tesla and Roblox as beneficiaries of the AI boom. So yes, they're very, very well positioned for that. We just need the CFO to get a little bit more aggressive and say we can in fact expand margins, and I think the stock starts to rip again.
Michael, you mentioned consolidation, you mentioned the sandbox style, the Roblox, the Minecraft, and then also kind of that free-to-play microtransactions that we've seen take over the last maybe decade in games. What's the next big thing that we're not talking about?
Oh boy, we're right in the midst, in my new job, of raising money for a fund that is trying to do AI-generated games with 5-person studios. And the guy who runs this, Owen Mahoney, he started this when he was CEO at Nexon. They funded a studio called Embark, and Embark has now made 2 games that are big successes. One, the finals, and then the most recent, Ark Raiders. They ended up beefing up those studios to about 75 people each, but they literally spent $75 million to make those games, and those games combined are generating roughly $1 billion a year. So Owen's trying to do the same thing with us. We're raising a fund for him. The next thing is a Y Combinator form of game development. Let people have ideas, let them execute their ideas, and then put a panel of really smart, sophisticated game people like Owen on top to figure out what to greenlight and fund, and we're going to have hit after hit after hit. That's the future. Smaller studios, more nimble, and funding fund as opposed to funding franchises that have IP associated with them.
About $130.
Break down some of the trends we're seeing in the space. As you mentioned, it's a different world than when you first started really covering these names. There's a lot more to cover at the time, but really great insights before we close out this year and head into 2026 very rapidly. Would appreciate it, Michael.
68.20s from 3 to 5.
At Wedbush Securities. But now to shift gears into a space that's seeing some pressure today, that's the broader crypto world, and focus here on cipher mining. I'd like to welcome in Sam Vadas, of course, host of the Schwab Network. And so we're seeing some, of course, ties to Bitcoin. We're also seeing some analyst news. Sam, walk us through what's driving some of the pressure today, though, in cipher mining.
Yeah, look, cipher mining under a significant amount of pressure, as you say, Jenny. It is down in double digits right now, almost 13% lower, and so we are seeing a bit of a sell-off here, you could say, the least in this stock, but it's being felt across the whole industry right now. I mean, if you take a look really at the Bitcoin exposed space, you've got Iron, which is another Bitcoin miner, Australian company, down almost 10%. You've got CleanSpark is also down in double digits, almost 15%. In fact, that is feeling the most pronounced losses across the space. You've also got some of the Bitcoin treasury companies, of course, like Strategy down 8%, and Coin down 5.5%.
is down bad.
So this has really been felt, as I say, across the space, as we do see, obviously, cryptocurrencies, the price across Bitcoin, Ether, Solana, really all getting hammered today. We're seeing Bitcoin is back to levels of 85,000 and change. Now, the reason why we are seeing shares down so significantly, obviously, is because tied very closely to the price of Bitcoin, so that weakness does tend to knock some of that sentiment lower. Markets have been relatively speculative, I should say cautious around the speculative type trade as well. There is said to be a strong correlation here with tech stocks. Obviously, we've been seeing some of the rotation out of the more sort of high-flying names into other parts of the market. That's certainly been a trend that might be closely linked to what we're seeing as far as a bit of a pullback here. Not to mention, there's also talk of crypto sort of being related to, the whole popular carry trade too. BOJ is, of course, expected to hike rates later this week, and so there has been some speculation around some potential for an unwind of those positions, which are tied up to basically trade some of those more speculative names like Bitcoin and also technology stocks. So all stuff to keep an eye on. Also seeing some other reports that are related to crackdown on mining over in China. Obviously, this is something that we don't typically see, but there has been still a lot of mining going on in China, despite the fact that it's obviously banned. The fundamentals still look good in this company, but it is off significantly today, very much off the highs that we've seen. Look at early November, for instance, still up though, 220% year to date, guys.
Sam, when you look at a company like this, fundamentals aside, I don't want to oversimplify it, but in many ways, is this just a higher beta extension of Bitcoin itself, the same way that some of the altcoins or Ethereum, the correlation is so strong. If you're not bullish on Bitcoin, are you even keying in this stock?
There she goes.
Really interesting question, Alex, because while it's not a good time to be exposed to Bitcoin, if you're a company, obviously because the prices have been volatile, it is a good time to be adaptable and to prove to the market that you're able to see the writing on the wall when it comes to having been exposed just to Bitcoin. So we're seeing a lot of the companies like this one, for instance, that is not relying on a big chunk of its revenue or its sales or its exposure coming just from cryptocurrency and Bitcoin. In fact, it has managed to adapt. So it's also got this announcement of partnerships with AWS, a 15-year deal to provide data center space there. It's also got this leasing agreement with FluidStack as well, a 10-year high-performance computing lease agreement. So these companies that are able to be adaptable are very much benefiting from that. But yes, we do tend to see this correlation between that pullback in Bitcoin prices. But yes, we are obviously seeing this one down double digits, as we do see that strong correlation, as I mentioned. But just to look across the fundamentals, still, I mean, it was a beat across the board, but I think it was really about the announcements that it is managing to diversify some of its business just away from Bitcoin that has helped it in the past.
Yeah, I do think anytime you hear diversification is typically a good thing. Obviously, it depends on the performance of the broader asset class, but appreciate it. Sam Vadas, host for the Schwab Network.
Sammy girl.
That'll do it for Alex and myself for Next Gen Investing for this Monday. We have the watch list coming up next.
Yeah.
Schwab Bank Investor Checking, the checking account built for investors, named Hyatt.
Okay, here we go. Big boom. Finally. I'm here. Randy. $68.20s. Boom, boom, boom. Now, I'd say the SPX outrun the /ES this time. Big time. George, something's up. Okay. Yeah, something awful fishy going on here. /ES didn't move that much. It must be aligned perfectly. Well, we had 1, 2, 3 on the SPX and it bounced up. It's kind of just like a double top. I don't know. It's consolidating for the next resistance, which would be a two-headed snake at 68.30. Marley. And the Nvidia had a nice little bounce, and so did the AMD. All but Apple. Apple had a new low. Let's see here, 68.20 is already pulled back to 600. We're back to what was resistance is now support off the 9. So 1 minute.
downgrade that they got today from KeyBank, Nicole. KeyBank basically sent them to underweight from sector weight, lowered the price target to $775, Nicole. And here's the quote in their note that really caught my attention. It could be the death of the software as a service narrative could come for ServiceNow in 2026. This is the digital AI company, a software company, and remember, this stock traded almost $1,200 at the beginning of this year, the end of January, now trading below $762. So it's a big downgrade, despite the fact that they're also trying a $7 billion purchase of a software security company, or cybersecurity company. So there's a lot going on here with ServiceNow, and stock very heavy today, down 11.5%.
Understood. I mean, it's a big mover here, one to watch. What about the November jobs report getting data tomorrow? I know it's delayed, but what are people saying? What are they watching for?
So it's, this is a big deal. Here's why. Number one, it's delayed. It was supposed to come out, a week ago Friday, the first week of the month, the first Friday of the month. So it's delayed. It's also, remember, Nicole, we didn't get an October payroll number. So they're saying, what I read is they're going to combine the two numbers and put this out to combine the data. So what does that mean? Well, we'll find out tomorrow. It's kind of a little bit of uncharted territory there. Now, the expectations are for 40,000 jobs, an unemployment rate of about 4.5% are the estimates. Wage data up 0.3 month over month, and moving from 3.8% to 3.6% year over year. So obviously, this is the number one data point of the month that we get is non-farm payrolls and unemployment. We'll watch it tomorrow. It'll be a market mover for sure.
Understood. All right. Good to see you. Kevin, thank you so much. Really appreciate it, Kevin. Thank you. You want to listen to Barbara Goodstein next to get the big picture. Barbara's with me here, managing partner at R360. Thank you for being with us. Glad you were able to make it on this day where we saw a complete turnaround. And, we're seeing Google down, some Microsoft, Apple, but it's also some of these energy names that are weighing. What are your thoughts on the market?
So we are always placing long-term bets. We don't do anything quickly. This is a very affluent group of people. So the members at R360 have a monthly meeting. It's called our Market Opportunities and Risk Call. And we look at long-term opportunities. So this is a 20-year play. They're not looking to tap in their money anytime soon. They're investing for the long term.
Isn't there a minimum for this? To be a part of this group, what was that?
So it's $100 million in asset minimum, and very wealthy people, which is why they're
very wealthy.
In investment opportunities,
$100 million
and philanthropy and doing good for the world.
to join the club. Are you kidding me?
They are.
Are they still?
They absolutely are. And as I said, it's a long-term play, so people are holding this for 20 years or more. But crypto has amazing benefits. And crypto historically has gone down 20 times in the past 10 years. And the shift, when it goes down, is over 30% drop. So crypto is not for the faint of heart, but crypto is really a good investment for the long term. 10 to 14 years, it was the top performing asset class. So our people are still investing in crypto. Nothing's changing their mind. They're all in and going forward for the future.
So $100 million is the minimum to be a part of this exclusive group, and it's very special because they have really intelligent, long-term conversations.
Say $100 million or $500,000?
I mean, let's just start with the AI revolution. Where do they think we are? What do they say? Are they still seeing opportunities? What kind of opportunities?
So there are opportunities, but in the tangential spaces. So yes, we think everybody should own Microsoft and NVIDIA, but then there are tangential opportunities. So this is the middle layer of companies, the layer of companies that's into verification and security and governance, and we believe that those are the companies that are going to perform best going forward.
Interesting. What do they say about the current rate environment? I mean, there are folks who think that the rates could come down, then go back up to 4 or 5 for the 10-year, for example. Are they sort of watching that closely? What's the takeaway?
Well, because it's a long-term play in this case, nobody's making any fast moves. Everybody's invested for multi-generations. This is about growing wealth for the future. This is about growing wealth for your children. The average net worth of our 360 members is over $500 million. So they are very focused on what can we do, where are the huge opportunities in the future, and that's why Bitcoin always comes up on top.
What are some of the top stocks or top ETFs or indexes that they buy? I mean, what are their go-tos? I don't know if you give us specific stocks or ETFs, but what do they buy?
So in the Bitcoin space, we're looking at stocks that are using Bitcoin as their treasury. So there's a stock called BRR now. Naka is doing the same thing. So they're using Bitcoin as their treasury, and we think that the Bitcoin itself is undervalued. So basically, the stock itself is undervalued because the Bitcoin is at an all-time, a recent level. So we think that there's a lot of upside opportunity.
I mean, with Bitcoin, not right now, not even at 90,000, can't hold it right now. But there's plenty of people who say 100,000, 200,000. There are even those who say million. Do you hear million Bitcoin thrown around a lot?
Yeah, we do, and that will be someday in the future when the market stabilizes. Right now, a lot of the investment firms are recommending 4% allocation of Bitcoin starting in 2026. So Merrill Lynch, Morgan Stanley, Bank of America, if you're recommending 4% allocation in Bitcoin, that space is going to see a lot of growth.
What else would see a good amount of allocation? Maybe 4 or 5%, that's a pretty good amount.
Right, so we also tell people to invest in gold, and gold is another hedge against inflation. You use gold for different purposes, so gold is 1 to 2%, and then depending on what's happening in the markets, we can make adjustments from there.
Understood. What I'm getting at, I mean, in these discussions, are there also worries about big sell-offs? Do people put money in cash, or are they just stay fully invested?
Well, this group stays primarily invested, although just like Warren Buffett is willing to hold so much cash, we're willing to hold cash too. There's no reason to invest until you're ready to invest and you see a big opportunity. Warren Buffett might look at buying railroads someday in the future, so he's got to have his powder dry when that happens, and we have the same philosophy. If you find the right opportunity, you invest heavily in it, and until you find the right opportunity, there's no reason to jump.
How often are they interested in IPOs? Often, sometimes, or never?
Sometimes, and again, it depends on the company, and most of the time, people are investing in the spaces they know. So we have 20% of our members are very successful financial investors. They come together in market opportunities and risk call once a month, and they talk about their areas of expertise. So we have a top investor in commodities, we have a top investor in biotech. They talk about what they're doing, and everybody learns from them.
It's pretty amazing. I mean, you mentioned gold. I mean, do they look at the other metals like platinum and silver and everything else?
Yes, and silver's gone up. It's at an all-time high, and gold is outperforming, and it's also at an all-time high. So all of the metals are looked at. Our commodities guy is very sharp, and he's not only looking at metals, he's looking again at the ancillary businesses that support all of those commodities.
What do they say about the China story, and why is that important?
So China ends up being a bellwether for how the larger markets are going to do, and everybody pays attention because their impact can be enormous. Just like China in AI has been investing for a long time. They're not as determined as we are to sort of go forward quickly, but they've got AI built into all of their different systems now. And even if it's not the best case scenario where they want to end up, they've integrated it thoroughly. So we're looking at China relative to AI right now and trying to figure out, who's going to succeed in the end.
ETFs are definitely something they look at. You said you talked a little bit about ETFs. Can I hear a little about that?
Sure. So it depends on the asset class again. If you're trying to buy ETFs just to protect yourself and get in and out quickly, there are ETFs for Bitcoin, there are ETFs for hard assets, there are ETFs for every possible sector that people are interested in. We will recommend ETFs for infrastructure because we think that those are going to do well in the future. And that way you get a basket of products, and you're not investing in one particular stock, but you're investing in the asset class.
We're looking so much at this group here, a special group. When you're saying they have on average 500 million, is a lot of this generational wealth or more earned themselves?
This is, in this group, in R360, it's primarily entrepreneurs who have been incredibly successful, and now they're looking at how to preserve, maintain, and protect their wealth, while they also look at building legacies and philanthropies for the future.
And when they look about investing abroad, do they talk a little bit about that? Because I know you said there's growing interest abroad, just even in R360 to be a member.
Absolutely. And we have one value investor who was specifically recommending financial stocks abroad. So it can be anything global, any type of investment opportunity. We cover that all in that market opportunities and risks on a monthly basis.
And I mentioned some of the AI themes, and you talked about, for example, cybersecurity or things like that. You said some of the key companies that they're watching is Fair Isaac, which is FICO. Also ServiceNow, which we'll take a look at that. CrowdStrike, Palo Alto, and Siemens are some of the names that they're watching. I mean, any thoughts on any of those? Do they seem excited on any of those?
Well, we're watching all of the same companies, so everybody's in the same place. I think that is the middle layer that drives this whole space further. So everybody's looking at the same types of companies now, but it's the right way to look at this. There's a lot of upside still in AI, primarily in the stocks that are focused on AI, but there's upside in the supporting stocks as well.
Right, understood. I mean, ServiceNow, for example, has news today, so it is down about 11% today. So that is a name that's been hit a little bit hard today. Maybe a final big picture thought. I mean, where do they say the S&P or the Dow or something's going to be in 5 years or 10 years or 20 years? Higher for sure? I mean, do they seem certain or no?
Well, I think it's a relatively confident group in general. They've been quite successful. They're very strategic investors. But as I said, they invest for the long term. So it's a 20-year view. If you asked everybody, do you think that markets are going to go up in the next 5 years, I'm sure they would say yes, they would, but they're not moving their money anytime soon. So just like Warren Buffett, they make a long-term play and they hold that play.
It's so exciting. I remember the last time we spoke. I mean, it's amazing to hear, I'm sure everybody wishes they could be an entrepreneur. Thank you, Barbara. Wonderful to see you, Barbara. Thank you. Managing partner at R360. Thank you. Coming up, Options Corner, Tom White joins us to highlight our usual options trades that we're seeing here. They have a lot of news, names like Apple, Google, Oracle, Nike. We'll be right back.
Well, it looks like we pulled back. Man, that looks so sweet right here. 1:15, 2:15 Eastern Time.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down the different investing styles, including growth,
6820s.
and more. Best of all, you can ask questions by chatting directly with an education coach. It's
Just missed
interactive
it.
learning at its finest.
420.
Live or on demand.
No, it's
Head
at
over to
5.
schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
activity. Tom White, host of Fast Market here on Schwab Network, is taking a look. This is the last full trading week. People try to get their trades in. Let's hear a little bit about Alphabet, Google, one of the Mag 7 names that has been pretty exciting lately, but now you found a bearish trade.
Yeah, stocks rallied over 60% so far this year, just off those all-time highs by about 6%, Nicole. So it's had a great run, and this is on the back of a bunch of different things, but mainly that search is not going away anytime soon. They're still the leader. They still have 90% market share there. Advertising dollars are pouring in there. Then you throw onto it the advantage that they're having now with Gemini 3. Which has gotten great reviews, and it seems like it's gaining even more traction, pushing back against ChatGPT and others in this space. So that's kind of a double whammy for this company where they lagged a little bit at the start of the AI that these chatbots were going to take market share from them, but they've integrated Gemini into their search industry. Other segments of their business are doing well. Google Cloud grew at over 32% last quarter. And then you throw in YouTube also. Everything seems to be clicking for it, and that's why you saw the stock hit those all-time highs in November. Got a bunch of price target hikes. The highest one I think I've seen is about 350 out of TD Cowen. And then, they've still got some headwinds. They've got the EU. There's supposed to be a large fine that's supposed to be maybe coming out in the next couple of weeks. So maybe there's a reason for that pullback along with the rotation out of some of the tech names. But even after this big run-up, I saw some unusual option activity in here today. This is out in the January 16th monthly options. You're not going to get earnings on this one. Earnings are after this. But a trader bought 9,000 of the January 310 strike puts, paid an average debit of about $10.50 on these. So the break-even for this trader, they started the profits below $299.50
Very nice.
over the next 32 days. That's only about 2.6% below the current share price in Google Alphabet. So I don't think this is somebody that's maybe hedging an existing stock position just because they're paying a lot for these puts. They're basically at the money at this point, or basically slightly in the money at this point. But yeah, this trader thinks over the next month we're going to see some downside here for Google Alphabet, and we've seen that in a bunch of names that have done really well in the tech space, where they're down anywhere from 10 to 20 to 30% from their recent all-time highs. Alphabet's only down about 6% from its recent high. So yeah, this trader's betting on some downside here.
All right, well, thank you for that, because, everybody's wondering what's happening with these Mag 7 names. What about Oracle? When you look at Oracle now, huge story stock, and now you have a bearish trade. I'd like to hear more about that. It's down about 2% today.
Yeah, stocks pulled back over 45% from those all-time highs that we saw just in September, when the stock shot up to about 345. And this is on the back of all that surrounding their investments from OpenAI.
Missed that little triple bottom here.
That's supposed to take place over the next few years. Now they've already pushed back some timelines on that deal. The company came out after their earnings last week and basically said, hey, we're still on track to do all these this integration and partnership with OpenAI and some of the other partners that we have in here. The adoption of their OCI platform has been going really strong. Now their earnings weren't as good as the street anticipated when those came out, and that was a concern because what they're doing is free cash flow is not as high. Investment dollars were about double what they anticipated, about $10 billion. This quarter, and I think they only expected about $5.1 billion. So the street was lowballing that one. So we're starting to see some cracks in here. They took on debt last quarter, also $18 billion deal to help finance the build-out of these data centers for Oracle. But they do have all the partnerships. So this is one of those stocks down significantly from those all-time highs, and there is some bearish activity in here. Also, this is on the January 9th weekly option, so this is about 25 days to expiration, where a trader bought 10,000 of the 160 strike puts. So far, the money to the downside. Paid an average debit of only $1.68 per
There's your
put.
bargain again.
Break-even for this trader, they start profit. Is all
68.20s.
32 over the next 3.5 weeks. That's about 15% below the current share price. So this trader thinks we're going to continue to see some weakness. Now, because they're only paying about $1.68, this could be a trader that has a big stock position that just wants to hedge some or all of it, or it could be somebody just picking up some cheap puts with the expectations that, hey, this this downturn that we've seen in the stock over the last 3 months is not ending anytime soon, and they're betting on some more downside here in Oracle.
Okay, thank you for that. I mean, these tech names, people are loving tech, but you see a little bit of, rotation that's happening, looking to other areas, and as you mentioned, two bearish trades here, right out of the gate. Last but not least, let's hear your last one, Tom.
Yeah, Nike, they report earnings on Thursday after the close. And the
Nike.
kind of low on this one. Stock's off about, off about 10% so far this year, 2025. But rebounding a little bit, there's some optimism coming in with some of the channel checks from analysts.
What?
About 5% so far in the month of December. The bar is low. If you look at this one, there's the 1-year chart.
Lower it.
Nike that we've got up there, but you look at a 3-year chart, and this thing has just been in a downtrend for the last 3 years. And why is that? Well, sales, comparable sales have been decreasing, margins have been decreasing, their direct-to-consumer business is waning a little bit. Remember, they tried to pull away from some of the outlets like Dick's Sporting Goods and some of the others in this space, and Foot Locker, but then at the same time, direct-to-consumer was doing really well. That's a high-margin portion of their business, but at the same time, now it's flipped, where they're getting more foot traffic in some of these stores, but Nike had pulled away a little bit, so they're trying to fix that. CEO Elliott Hill has a plan that he's implementing at this time. Now, I mentioned they have earnings on Thursday after the close, option market pricing in a pretty hefty plus or minus 8% move in the stock, about $5.50 either way. So I think the street's going to be looking at new products, innovation in this space, how the running segment of their business is picking up, competitive pressures from On Holdings, from Hoka, and some of the others in there. And then you start looking at their international business. Are they continuing to pull back on some of the growth numbers there also? Because it's a big portion of their business and the impact of tariffs. So they've got a lot of things on their plate going into this earnings report. But we did see some optimistic call buy in here, and this is in the December 19th. Monthly options that expire at the end of the week here, so you're going to capture that earnings. That trader bought 4,000 of the 69 strike calls, paid an average debit of just over $2 for these, so the break even of just over $71 to the upside of the next 4 days. That's only about 5% above the current share price and well within that one standard deviation move that the option market's pricing in. But we've said this repeatedly over the last couple of years. The bar is low going into a Nike earnings report. That doesn't seem to have helped the stock much, but there's some optimism here with the stock up about 5% so far this month into that report on Thursday after the close.
Okay, Tom White, great to see you. Really appreciate it. Thank you, Everyday Options Corner with Tom White. And right now, we're seeing the Dow down 91, the S&P down 10. And then we'll turn our focus over to crypto. We'll discuss potential new phase in Bitcoin. I mean, we just heard R360. I mean, they're big in Bitcoin, but what's some of the ideas that people have and want to talk to our guests about? We'll be right back.
Very good.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risks. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Oh, God. Within play days today for me.
I'm Kevin Green, and I check options flow daily, identifying who's buying, who's selling, how it's going to impact markets. Watch live on Schwab Network at schwabnetwork.com.
Tesla flagging out. We got 33 minutes to close. I'm waiting for the big play of the day.
Even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Bettles, and we're live on the floor of the New York Stock Exchange. Here are a few movers for your watching shares of Tesla gaining ground today. It comes as Wedbush's Dan Ives saying 2026 will be a pivotal year for the electric car maker, saying he expects an accelerated robo-taxi launch and sees various tailwinds. In fact, he sees a $600 to $800 price target. That's base case and bull case. Morgan Stanley upgrading Hershey to overweight with a new price target raise of $211, citing several strategic factors contributing to the increased confidence in the consumer brand. All right, Alicia Painter is with us, co-founder, COO of Botanics Lab. Thank you so much for being with us. So much talk about crypto. I do want to get into some of the details. What are you thinking here? Is Bitcoin, stablecoin, all things crypto? Does it feel real? Is it here to stay? The evolution, where we are.
I think the recap of this year and the headlines are Bitcoin and stablecoins indeed. So Bitcoin has obviously emerged and become this risk-off asset for a lot of institutions and even governments to consider. And it influences things despite the short-term turbulence we're seeing, both the crypto market as well as all the broad markets. And with stablecoins, with the passage of the Genius Act that we saw, I think it's going to be here to stay. I mean, it's about $300 billion this year. We're expecting it to go to about $1 trillion next year. And that's a market that's going to keep increasing and expanding. And we're really excited about the movement both on Bitcoin as well as stablecoins.
Does Bitcoin become a preferred trade over something else? And if so, what?
Yeah, so we're already seeing this shift at Botanics with how companies, institutions, and governments start thinking about their digital asset strategy. So there's been a rotation from other cryptocurrencies or altcoins into Bitcoin, and that dominance within Bitcoin has continued to increase, especially over the past year. And that is the predominant thing that we're seeing. We're also seeing a lot of institutional ETF inflows continue to increase, from other segments of the market. And so yes, that the headline is that Bitcoin is here to stay despite the short-term turbulence, and that we were now going to be looking for more yield opportunities on that underlying Bitcoin.
Are we on sale, baby?
Is that it needs to be financialized more, and there needs to be more to do with the actual Bitcoin.
Go out and buy your Bitcoin.
And that is, I think, is going to drive a lot of the crypto adoption.
Better go out and buy your Bitcoin. Yeah, today's not a... Now these 6820s are back to 390 again. We just now broke... We're right in the flag for the breakout. Oh, I missed it. Watch it. Boom. There it goes. You can see the flag. I'm just kind of having a hard time. More or less perfect. See through that crap. Just like that. Oh. Hope I ain't coming down with a cold. $68.20s. $3.70. $3.70. Blanket. We're at $4.60. And just like that, we're back down to 370, 350. Market's still more or less flat, but more on the red side. Come on, hold on or you get out. See, right. Telling you. Nvidia went below support. Come on.
Whatever weakness we get, if you're nimble and you have some money, short-term money, you can certainly buy.
Understood. So when there is opportunity for 2026, what kind of sectors are you looking at? I mean, we're almost there, and some folks are waiting on the Santa Claus rally. But what do you think could work for 2026 and why?
So I think Santa's coming, and he normally won't come until next week, which a lot of people misunderstand that. It has nothing to do with December. Santa should be coming next week. Looking into 2026, I'm not bearish, but I do think it will be the worst year since 2022. I don't think we're going to have the fourth straight year
No way.
of returns, but it's still okay. I see it really completely.
Say what?
I am super bullish out of the gate. I think Dow, 4 years ago, I said Dow 50,000 before the bull market ends. Dow 50,000 in Q1. And then I think it'll be Q1 will be a risk on, Q1, Q2 will be a risk on, and then I think the second half of the year there'll be a pivot and things will change. It's a midterm election year, and markets sometimes struggle the second half of a midterm election year. I think this will be the case. So I would want to be more risk on out of the gate. I want to harvest my acorns for the second half of the year. I would be buying some of the out of favor sectors later. Like this kind of staples and REITs and utilities. I don't think they're plays out of the gate. I still think you can
There you go.
on. And look, since the April bottom, the tariff tantrum bottom, high betas led by an enormous margin. Small caps have beaten the S&P 500, and they've been on par with the Nasdaq 100. So I think small caps into 2026 are continue to be the story.
Right, understood. I mean, I know you have what used to be Schlumberger, you have SLB there.
No understood.
So I always I try to find these off the beaten path names. I don't need to give you Apple and Amazon and Meta and
Boom, there you go, baby.
So, Schlumberger, look, it's an amazing company in the oil sector, my view. You got a dividend to pay to be patient. If oil...
Pay to be patient. That's right. You couldn't say it any better. $4.60. Bring it. Ladies and gentlemen, I'm about to sell my calls. $4.60. To win them, 2 bits and a freebie. I don't know how he does it, but he did it.
All right, and then the small cap ETFs, I mean, when we think about what's been going on with the Russell and small cap, where's the play? Is there one?
There was there.
There is one. So first of all,
Now we're back down here again.
I think they're going to, the Russell outperform.
Okay. So we're back at the bottom. 330.
There are just momentum plays in small caps. I know people talk about the Russell companies that don't make money. These two ETFs I like because you're buying stuff that's already working, it's already doing well, frankly, in a market cap that's already doing well. So those would be my two favorites if you're going to play small caps on an index basis, ETF-wise, going into 2026.
Yeah, it's great to see you, Paul Schatz, President and Chief Investment Officer. Thank you so much at Heritage Capital. Thank you, Paul. Coming up, we're
Thank you,
talk
Paul.
about the year that was, Apple, and 2026. We'll be right back.
There it is. It's a spot. What time is it?
The final 90 minutes of the trade
Okay, crowd's going wild here.
From earnings shocks to
$3.
we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour,
No.
you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Deb.
Nothing nice. Well, this one's hard on you. Breakout. I mean, 1 minute you really think you lost it, but it creeps up above that trend line. No, they don't look good. Just playing head games with me. This candle work. Very strange. Boom. Very good. Now the way this market's going, you're at 350, 370. Could you break up, please? 380. Solid 380. That was very cool. We have 9 minutes till power hour. Less than 9 minutes. Randy. I'm waiting for this thing to break. There's 370. I'm in the SPX here. We're at the 200. That's our second chance. $360 boom. Uh-oh. Uh-oh. Ooh. Very good. Thank you very much. How do you do that? Say what? 460? Come on. Yay. Not boring no more. The one of them, 2 bits and a freebie, and we didn't touch yet. Boom. Thank you very much. Oh. Woo! 460. Ladies and gentlemen, the 6820s are now at $4.60. Thank you very much. How do you do it? Did I just witness a miracle there? Boom. That's right. That's right. Oh my God. What? Oh. 550. Ooh, boy. I tell you what. My timing's just splendid. Well, I'm telling you, this thing was tricky. This expansion pattern here into close. I mean, so what the heck? Now it's at 580. Yeah, 450. $6. Randy, did you say it was boring? You really think it's boring? 610. Uh-oh. Ding. Ding, ding. I don't want to look at it no more. 640. There it is. Oh, God. My gosh. We got a triple top up here. Right, $6. Head and shoulders. Oh, this thing can go much higher. You can definitely get its resistance level. Another buck. Well, that's one I wish I'd have stayed in. Huh. Well, it just turned right around. $7.40. I know it. Now it's at $8. So Jim, what's it feel like when you get in the bottom of a trade and you're up a couple $100 and you sell it? And if you'd have held on to that, you'd be up 1,000. On 2 contracts at $3. $8.70. You ought to be ashamed of yourself, Randy. /ES just now hit the VWAP. Spy just broke the VWAP. This is disgusting. They just halted the SPX. $9.40. That's $1,200. Almost $1,300. Okay. How dare you? Power hour. It is now 3 o'clock Eastern Time. Washboardjim is disgusted. Okay, we're back to support. Jim, do you got the balls to buy it here? Yes, I do. 68.25. Didn't hold support. You better wait. Oh, wait. Jimmy waits. Jimmy waits. So I might bring him back up to the 68.20s. Well, that'd have been a nice trade there if I'd have held that one. The one before this one. Hit the VWAP on that /ES. Boom. Just like that. $3 to 450, 460.
Testing that out in Austin, Elon Musk did confirm they were testing, but no regulatory approval yet to remove that safety driver. I want to flip to the other side of the best and worst S&P performers right now and go to the bottom of the list. We've got ServiceNow under some major pressure on notes and acquisition.
Yes, notes and acquisition, and so we did see reports from Bloomberg initially that they could be these advanced discussions with Armis in a deal that could be valued as much as $7 billion. But the deal may be announced in the coming days, and while these discussions are advanced, the report did say talks, of course, are subject to still fall apart. So important to note that we have not gotten complete confirmation yet, but KeyBank also downgrading ServiceNow shares to underweight from sector weight with a $775 price target. Actually, I know that today's repricing has, rewritten a lot of the recent narrative, but that would imply obviously upside from here. They did note there's signals
not by much.
Office employment data that raise the likelihood of this depth of software as a service that could be coming for ServiceNow in 2026.
Oh, that's crazy.
A downbeat note about Adobe as well, and I think highlighting some of the frankly challenges that software-exposed names have seen in the last year. I mean, ServiceNow was a vast underperformer on the year prior to a 10.5% move down.
Oh yeah, way overbought.
Coming up on a 5-for-1 stock split too in 3 days. So a lot of things at play right now, but we are seeing them as the worst performer on the S&P 500 on the heels of this report that they're potentially acquiring Armis, this downgrade also ahead of their stock split. But moving on to another one, we had KLA, although they're moving to the upside because they got an upgrade.
They did. So Jeffrey's actually a fan of this name. We did see an upgrade to buy from hold. The price target raised to $1,500 a share from $1,100. Saying that AI should lift semiconductor capital, driving demand across leading edge, DRAM, as well as just overall packaging. But specifically in the case of KLA, they said their outsized exposure to leading edge and the recent relative multiple is a reset and driving force really of this upgrade. And so Jeffries was not, as optimistic across the board on a lot of these names, but the outperformance of KLA Corp has actually been kind of astounding. And even today, we're up 3.5% on the session. Even greater than that now as it stands, and this name was seen as a long time facing a lot of tariff risk. They were going to have massive import and export taxes that they were not accounting for, of course, prior to April and some of the announcements from sweeping tariffs, but they've shaken off any sort of turbulence from that quite well and are actually looking like a pretty strong performer on this year, which again I think speaks to the haves and have-nots of AI. And frankly, anything with this memory, hard disk drive exposure, or DRAM, NAND is seemingly doing quite well.
Yes, certainly, and they gave them a massive upgrade in terms of their price target to $1,500 from $1,100. So considerable upside to even where they're trading right now for KLA. The last one I want to talk about is ARM. They got a downgrade down to sell today. This time from Goldman Sachs. We got a lot of analyst action today as we head into the end of the year, and we're releasing these end of the year, beginning of 2026 reports.
And you know what? This is, I know it's not a positive note by any means, because this was a downgrade to sell from neutral, with the price target that was also cut to 120 from 160. But I do appreciate the release taking on a conviction in one direction or another, and so they're saying, yeah.
Now did get beat up though.
Their ratings though in the broader semi-group as part of this again updated 2026 outlook. They do see
SPX is now at 540.
Drive overall movement higher, as well as specific tailwinds for digital memory and storage in 2026. They also do see this gradual industrial automotive recovery driving now cyclical tailwinds in the analog. And so they cited their limited leverage to the AI cycle, as well as traction across non-traditional markets and business model transitions behind some of the weaknesses they see with ARM. They did also give a pretty pessimistic tone on Texas Instruments that also got a double downgrade to sell from buying. That is a substantial re-rating, obviously, but some of these updated sort of targets and analysis for the coming year are so interesting, because a lot of these spaces, like ARM, for example, has just not looked to be really a beneficiary of any of the AI boom right now, but still has propped up tech for the remainder of 2025.
And even with their downgrading, their price target is pretty close to fair value from where they're trading right now, with being 120, we're trading at 124. So not too far off here, but ARM is down more than 5% on the day. Jenny, thanks for breaking down some of those top movers for us and some of that analyst action that we've got throughout the day today. I do want to check back in with Sam, though, and see what we have coming up in the show. Sam?
Well, Holly, we will look ahead to 2026 and where the Fed could go after last week's rate cut, plus we'll dive into the market on close. We'll be right back.
We're at the 9.
Hey, investors, you know the market moves.
Well, 12 after 3 Eastern. Yeah. Three black crows. $350.
hit a new high. 45% of Russell 2000 hit a new high. Those are the best ratings that we've seen in 4 or 5 months. I mean, one place I might push back, Dan, is the idea that we'll get profit warnings or we'll see weakness in. I'm just reminded of the kind of the old rule that governs my side of the business that things top on good news, not on bad news. So I do wonder if this will be more subtle than the very overt acknowledgement that
They're very tricky today, the market makers.
Everything was great. We were worried about the bubble, the whole run. People think that no one worried about it, but like I've got all this.
Well, how did I get you? I don't want you on here.
Coming off a bit off the back of the rate cuts at 9. Crude oil's been on the back foot. We are tracking lower right now, 1.3% lower.
They're still talking about bubble.
Bitcoin, as Molly mentioned there, has crossed below that key psychological 90,000 level. We are back at levels of 85,000 and change right now. And the 10-year yield, which of course has come up a bit, but to remain elevated, particularly off the back of what we saw with Gouldy's comments on Friday. So we're tracking a lot of Fed speak again this week, just to get an idea of really how divided it is right now. And as we look across the sectors, as I mentioned, we continue to see this rotation out of technology. So here we have
Calls coming in.
on that sector, but then look at discretionary, no doubt being helped out by one name, Tesla, 1.1% higher, staples are up 2/10, financials just fractionally higher, so communication services. So green across the screen here, all but technology, as I mentioned. And then we're also seeing energy lower, of course, off the back of some of the crude prices I just mentioned, tracking lower too, so 9-10% down. The rest are holding up, but utilities, one of the outperformers today, up almost 1% higher. So as I mentioned, it very much looks like that this rotation into a more valuable value type trade does continue. So let's bring in our next guest. Welcome back, Marley, into the conversation. And we have joining us now James St. Walden, who's Chief Investment Officer at Ocean Park Asset Management. Very good afternoon to you, James. Thanks so much for joining us. So it seems like there's a bit of push and pull in the markets that very much are being driven by two narratives right now, the Fed and the whole AI trade. What do you make of it?
That's right. I think there's a lot to consider heading into 2026 in terms of what the Fed's got in front of it, and that meaning the inflation, the sort of tension between inflation and a weakening job market. And then the whole AI narrative, how is that holding up under some scrutiny about where everything is being spent, where is the end user demand going to be? That will be the ultimate payoff. So I think as we close out the year, there's a lot to think about in terms of risk and reward right now.
And James, as you think about risk and reward right now as it relates to AI, who do you see as the winners here? Is it the big names that we continue to talk about that we have seen, under some pretty severe pressure over the last couple of weeks, or is it some of these secondary AI plays?
Well, I honestly think it's too early to tell. Obviously, the money and bets have been put on the AI hyperscalers, chip makers, the large language model providers. That's where a lot of the money has been going. But ultimately, in order for that to pay off, the downstream effects have to be in play. Meaning, what other part of the ecosystem is going to benefit? Clearly, power and utilities has been focused for the market in terms of the tangential benefit. But in order, again, for this to pay off, the AI narrative, you need to see the end user demand. Consumers and businesses using AI.
There's a little cup right here, kind of.
Daily lives, daily practices.
And the handle, boom, double top. Now we're at the 63.
That means business.
Okay, ladies and gentlemen, we're sitting at the 63. The 68.25s are now at $2.50. I'm going to make a business decision and buy 2 contracts, maybe 3. And what time is it? 2:19. NVIDIA.
Look at this rotation. Do you believe the broadening out has legs into 2026?
Yes.
I think so. I think investors are starting to recognize what I call the curse of high expectations in some of these names, like
the answer is yes.
And you see again the potential for AI to benefit the rest of the stock market. The
68.25s. We got the 200 EMA right here. $230. If I can get it. There they are. There they are. There they are. The crowd's going wild here at the sports arena. I don't think there's a problem there. Yeah. There's the 200 right there. That's the top of the support channel. We had the 1, 2, 3, 4. Oh, it's the 200. $140 off the 200. My risk. This is the 200 right here. No. Should grab more. Come on, baby. 175. Now they're at 185. Should make a business decision. It was $2. Oh. $33 more minutes. Breakout. There you go. $2. Thank you very much.
Directly into it. Reportedly testing these listings in a limited number of markets and only on mobile for now. But it is sending shares of several of these more real estate focused stocks down. Zillow, like I mentioned, down more than 7% today on the news. Of course, Zillow, a major website used to search for home listings anywhere. Real estate down 3.5%. They own brokerages like Corcoran, Sotheby's International Realty, Coldwell Banker, Century 21, and Remax also lower.
She knows her stuff.
Lower today on that report as well. The real estate sector on the whole, though, up just ever so slightly on the day. I do want to send it back to Sam in New York, though, to continue our conversation about the housing market.
Thanks so much for that, Molly. So let's turn our attention to the housing market.
Cat fight.
Next guest, so that's Erin McLaughlin, who's the senior economist at the Conference Board. Thanks so much for your time, Erin. We got the NAHB data out this morning, 39. I mean, it's an improvement, but it's still well above that neutral line. That's what it says on paper. What are you seeing out there?
Yes, the housing market is still suffering from a bunch of issues, namely mortgage rates have remained high. So although there is some optimism for next year, and perhaps one more rate cut,
The rates are still well above 6% for a 30-year mortgage, and as a result, it's really interesting. The age of a first-time home buyer has peaked at 40 over the last year, and it was 33 in 2019-2020. So that's just an incredible
that's an
difference
alarm number.
in a very short period of time.
Yeah, I was pretty shocked at that stat. I mean, particularly in such a short amount of time. There's plenty to unpack there, but let's just talk about that. What do you think is behind that?
Well, it really is about affordability. So housing prices have doubled in that last 6-year period, and at the same time, over the last 3 or 4 years,
It's crazy.
the rates go up. So it really is a matter of affordability. Now, for new home contractors, sort of designing and building affordable homes doesn't often give them the kind of profit margin that, more expensive or luxury homes, is the word everybody likes to use, often provide. So we have seen, in the last couple decades actually, but certainly aggravated in the last couple of years, here in the U.S., the concept of starter homes or more affordable homes are not always on the market, not always readily available.
For the majority of the year, as we talk about some of these home builders, we talk about the state of the housing market here in the US, a lot of it has been predicated on those rates coming down. Here we are at the end of December almost, and we've got 3 rate cuts being put into the system with maybe the thinking that they're penciling in another additional one come next year. Now, some say this might come early next year, some say this could come mid next year, but at the end of the day, we have had those rate cuts at 75 pips. So I'm just wondering, what impact have you seen on the housing market as a result of that? Because it seems that it might be some disappointment out there as to the kind of demand.
Here we go, double bottom.
Right. It has not increased sort of activity. So starts, which are starts of new homes, are down 5% year to date, year over year. And for new homes, which only make up about 15% of the market, it's still down year over year. We're also seeing that new home builders are giving a lot more incentives. And so the market is sort of has really wound down. Now, I think that it will improve, and most folks think it will improve next year because mortgage rates will come down. And there might be some pent-up demand as that happens. It's very interesting because homes are very personal.
Time to go boom boom.
So as folks make life changes, they retire, they have children, they get married, they often find that they need new homes. And sort of the ability to wait and make those decisions, you can only wait so long. The era of 2-3% mortgages may not come back anywhere, in the future.
So then in that case, what more needs to be done beyond just rate cuts?
Well, that's a great question. So we have a few sort of structural issues with the housing market. Well, first, which has not been a structural issue before this year, is that tariffs and economic uncertainty have aggravated some of the cost of the bill. Now, a lot of the really big new home builders can sort of absorb those increases, but we have seen the cost, particularly of steel, aluminum, and copper, really skyrocket. So aluminum is up 26%. A lot of doors, windows, and other things are made of aluminum, appliances. Steel is up 12% year over year, copper 64% year over year. Now the good news is that lumber is flat. So for single-family homes, new builds, that's a good thing. So there is
234.
uncertainty from tariffs that certainly needs to change and be improved. We do have labor pressures, which is also very interesting. So after the Great Recession, when we had this
It's
huge
got stuck.
of new home construction and residential construction, a lot
Let's
of
go.
them exited the market. A lot of labor exited the market. And so we did not see a lot of specialty trades, people like electricians and so forth, come back in the market at the same level. And so the cost of labor, especially for specialized trades, is still high. And with a third of residential contractors being foreign-born, and especially the activity that we've seen, over the last couple of years in the Sun Belt, we are beginning to experience some change in labor dynamics due to immigration policies. And then thirdly, the big thing is that regulatory approvals, permitting, the cost of land, all of that is just really, really tough
for new home builders. And, you know, it has been a topic in the federal market, you know, regarding policy around these things, but really it's at the state and local level that a lot of these issues would have to be overcome.
Okay, so there's a lot of factors here. I'm just wondering, you know, as far as those high input prices, obviously that feeds into the price of building your home. So you raise a really interesting point, though. We are going to be hearing from Lennar tomorrow, and I know you're not a stock analyst per se, but, you know, as an economist, how are you looking at some of these home builders as far as sort of double whammy that they're facing? I mean, you mentioned some of the incentives that they're trying to offer to some of these home buyers, you know, price cuts to try to attract buyers off the sidelines, and they're dealing with, you know, as you mentioned, these sort of record silver prices, copper prices, etc. Is this becoming a margin story?
It is a margin story, and I think it'll be interesting to hear from the new home builders what kinds of incentives they're giving and how they think that will impact their margins.
It's about time.
Some incentives can be around,
Make it even.
You know, buying down points or buying down rate, or they could be incentives around appliances. Maybe they're trying to mitigate the cost of new appliances. Often new homes don't come with all of the appliances. And so I think there is a story there in the sentiment the index released today. It noted that incentives are at the highest point in about 5 years or more. And so I really think that incentive story and the squeeze on the margins is probably the most interesting story in the short term.
Wow, highest point in 5 years. I guess we'll have to watch what Lennar says, whether we see any sort of evidence or follow through in their numbers to see how they're holding up as far as some of that margin pressure.
The video.
Absolute pleasure. Thanks so much for getting us across your thoughts on the housing market today. Erin McLaughlin, who's the conference board there. I'll send things back over to Marley in Chicago. Thanks so much.
Come on, sing the video, baby.
Coming up next, we've got options corner. Rick Ducant will join us here in our Chicago studio to take a look at NVIDIA as a positive analyst note from Bernstein came out. That's next on Market on Close.
The video.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risks. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10
Okay, Jimmy.
on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand.
I'm on demand.
Coaching and start learning today.
See, we know what to do. We need to move.
I'm Kevin Green, and I track options flow daily, identifying
Kevin Brown.
who's selling, how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
You're not green.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored
We're
education.
back to even.
Get an exciting library filled with new
There him
online
goes.
videos, webcasts, articles, courses, and more. All crafted just
We're at
for
175
and
now.
with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning.
185.
With Schwab.
Jim, should you sell?
Market on Close. Shares of NVIDIA are
Panic
higher
attack.
today as Bernstein is keeping its bullish out.
Okay, we're up right now. I can sell. $45. Oh, 90, 190. Will we run up a little bit higher? 190. Oh. Come on. Lower. There it is. That's exactly what I wanted to see. No. We don't do that. Just like that. Okay, Keely.
You mentioned these massive gains that we've seen and the potential that is that slowing down? Could that be over?
Yeah, back to the 200 just like that.
A lot of people say that we're still in the early stages of this whole AI situation here, but for now, it seems like it is a bit more of a sideways trajectory here. One thing I do notice too is that if you were to look at our recent price activity, kind of looks like a head and shoulders type pattern has developed here with a neckline near
75 center.
173 level, 174 level or so.
Triple bottom.
Bullish pattern, this would be more of a bearish outlook here. And really, these patterns can go either way. It's not like it's a guarantee it's going to break downward here. But we do have what looks like a supportive zone here between about 165 to 171 or so. So that could be an area to watch going forward. We do see as well that our downward trend line is still in play off these highs, connecting these subsequent highs as well. 188, our red line here, that's our relative recent high. If we do break above our trend line, that would be the mark to beat in the short term here. When we also look at our other studies here, including our momentum study, RSI, we can see that after a short trip into the overbought area, the momentum has been moving downward here after an attempt to cross above that 50 midline. The bulls couldn't quite make it. Red downward sloping trend line in play below that 50 midline still as well, suggesting more of a bearish outlook to momentum here. When we look at our moving averages, we can see that they're all clustered together basically right on top of each other near about 180 or so. So this gives us a pretty easy confluence point to be on the lookout for a potential upside breakout, which also lines up with our trend line here. So an easy point to watch to the upside for the potential for a big push. When we also look here at our volume profile study, our point of control, our heaviest trading area of all, comes in right about where we are now, or where we were earlier today, at least 178.64 to be exact. You can see our thick red line there.
No.
So this is an area for the bulls to hold on to. Notice not really a whole lot of activity between there and our next volume node down here, where things start to pick up near about 145 or so.
And that's a significant drop off from where we are right now, like 176, just below that important 180 level that you highlighted. Now, as far as the options action in video, a heavily traded name, are we seeing an increase in options activity today, or is it a normal day?
Today is a little bit lighter when I checked the sizzle, which is the options activity versus the 5-day moving average, was about 0.8 or so lighter than the average day. Still, to say that NVIDIA at the time I checked was about 1.5 million contracts traded, so a light day for NVIDIA as many other stocks put together in terms of the activity. Open interest, about 20 million or so total. So once again, very, very heavy activity in this name overall here. Looking at our January 16th expiration here for that month, we can see that 32 days out, our yellow box here is our expected move, plus or minus 9.4% approximately here. The OI just for the month, by the way, 4.6 million, about 23% of the total open interest overall for this name here. So an important month coming up for this name here. We did see one interesting large trade as well, plus 7,500 December 26, 2-10 strike puts at a 33.45 debit. So a $25 million debit paid for this very large trade here. Not clear if it's opening or closing, but many large trades almost at that exact same time. So we could do a whole second on that one, but we don't have time.
Well, thank you for breaking down in video for us.
Make time.
As we head into the end of the year, like you mentioned, seemingly turning into a bit of a laggard in the space, but still heavily outperforming the market overall, up 31% so far this year. I do want to send it back to Sam in New York, though, and find out what commodities she'll be talking about coming up.
Dive Molly into the metal space and look at gold, which is creeping back up towards
God. Oh my. Woo! I have 75, we're at 90.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an
Now we're at
active
60.
trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis,
Technical analysis.
and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Technical analysis.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time.
There's 1, 2, 3.
Subscribe at schwabnetwork.com.
Boom. Then you got the top of the megaphone right here.
Sometimes you know.
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest.
Boom, boom.
Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab.
Yeah, you better be careful.
And if you want, they can give advantage for you.
Not to mention
Oh,
Schwab is
95 cents.
taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties. Uh-oh. 105.
Schwab, a modern approach to wealth management.
Stay connected to the markets with the Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services.
Schwab Network, available anytime,
110.
anywhere, on any device for free.
What should he do? Should he sell them?
Welcome back to Market on Phones. I'm Sam Butters from the floor of the New York Stock Exchange. Joining us now is Derek McPherson, CEO of West Point Gold. Hello to you, Derek. Thanks so much for joining us today. Look, the last time we had you on, it looked like gold had sort of, got off the radar a little bit just because we've seen those record highs that have pulled back a bit, but we are creeping back up towards those records again. Just talk us through the price action and what's driving that right now.
Well, I mean, price action's back up, as you said, the 52-week highs, or sorry, the 52-week highs, the all-time highs, and it's pushing it, holds up 65% year to date. So obviously a very strong performer overall. And what's driving it is liquidity. I mean, as much as the rate cut was sort of telegraphed.
There it is, right there.
The Fed announced last week. I think that's continued to provide positive momentum for the gold price. And you have globally, you have significant deficit spending on the governments, so that liquidity is continuing to go into the system. And that's benefiting our assets. I'm looking at the graph you have here on the side, and while gold's doing really well, but so are silver and copper and other commodities as well.
Right there.
Yeah, obviously we've seen a little weakness, very much helping gold catch a bid this year. That is set to continue into 2026. We see this aggressive central bank buying. Obviously China's been a big contributor of that. And as you mentioned, some of these are sort of global concerns around debts and deficits coming from certain governments. Are those likely to be those sorts of trends that continue to drive this higher into the new year?
Well, I think you can kind of outline those key factors, right? You have central government buying, or central bank buying, which I think is going to continue. I mean, there's still the weaponization of the SWIFT system with respect to that. I think is still something that central banks are going to be focusing on. They continue to de-dollarize at a slow pace that they are doing that. And so that's going to provide buying support for gold. The other thing is you have this liquidity. I don't see any governments slowing down or spending anytime soon. Virtually all governments are in heavy deficit spending, and so that liquidity and that deficit spending, including the U.S., so you're seeing that. I think that's going to continue to push gold higher as well. So I think when you have those two things, those factors are still there. I mean, what could be the red flag out there? What could be the thing that kind of gives us a bit of a pullback? I think it might be a global pullback in the economy if we get that kind of liquidity down. But
oh man, 245.
Between central banks and governments are really trying to protect the economy against that, protect the markets against that.
Shit.
So I really think it's kind of the train's going to kind of keep on rolling. Or we're going to see another 65.
Man.
I'm not sure. But I think that the gold price is going to continue to be strong. And I think one of the other things that we're going to see is that I think the investment case is going to shift from where we had seen it, which was kind of the commodity, which was up until probably middle of this year. That was the place to be. And I think it's actually shifting more towards the gold equities.
Right, yeah, I mean, obviously we've seen that as well as far as some of the outperformance in some of these mining companies, I mean, up over 100%. Also, for some key names at least, who's buying gold? You know, when you talk about the retail investor, there's been a big conversation about how, you know, maybe the market would like to see more participation on that front. Is that something that you're seeing?
Yeah, I think we are, right? I think the you know, kind of had almost like a
boom,
late 2023, early 2024, because what you had were, as we talked about at the beginning, central bank buyers. So those Eastern, and mostly Eastern, so China, India, governments like that. So they're not going to step in and buy gold equities, right? They're not going to step in and buy the GLD, which is kind of the preferred way for retail to play gold. And so because of that, but that shifted middle of this year. And all of a sudden now you're seeing, not only are you seeing the gold price continue to perform strongly, but you're also, because they keep getting those incremental buyers, but you're also seeing the equities start performing, the GLD, and the GLDs finally start adding tons, which is a big difference. So that momentum is going to continue. Now, I guess the bull market or buyers are shifting from, they were east and now they're kind of east and west, which I think is giving it further momentum. The other key thing on gold is, or on precious metals that you can look at is that silver tends to be the poor man's gold, for lack of a better description. And I think the run in silver that we've seen recently is a good sign that you're seeing retail participation in the precious metals trade.
Right, I just want to unpack that a little bit further because you sort of took the words out of my mouth with this sort of commodity bull market that we're seeing sort of playing out here. At least that's the thinking into 2026 is that sort of starts with gold. What do you see as far as some of the trickle-down effects here with, silver getting record highs over the LME?
Yeah, I think you'll see silver's the obvious one. Typically, what you see in a commodities bull market, a big cycle, gold will run first, and then things follow behind it. Silver's one of the first ones, and so we're seeing that already, starting with silver, and then that actually generally trickled down after that, right? You start to see, other commodities, factors that drive gold ultimately drive those other commodities. So you see things like copper, platinum, palladium, things like that will start to see to catch it as well.
Derek, it's always great to talk to you and get an update on the gold market. Thank you so much for joining me today. I really appreciate your time. That's Derek McPherson there with Point Gold. I'll send things back over to Chicago with Marley.
Thanks so much, Sam. We're nearing the end of our market session. We'll be bringing in Alex Coffey to break down today's action and set us up for tomorrow. Next on Market at Close.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists.
Woo, good night.
24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Probably got 5 minutes to trade it.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
68.20s.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. And that could certainly be short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Schwab.
Sometimes, you know, you could have done better.
No.
Same goes for where you invest.
I don't think there's enough volume in there.
Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest
Kinda
headlines
dead.
to start the day, from volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern.
Wait.
Morning Movers only on.
Oh, wait.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on
MSOS.
and connect with me on LinkedIn or Instagram for more. We're back here on Market on Close. I'm Sam Butters here on the floor of the New York Stock Exchange alongside Marley Kane in our Chicago headquarters. We've just got a few minutes left in today's session. That's what we've been Alex Coffee today to help close out the session. So Alex, just a few minutes to go now before we hear this closing bell. The big four is telling us that on the surface level, the Dow and the S&P is pretty much unchanged. But as you and I like to discuss each morning, when you look under the hood, it tells a very different story under the surface.
Yeah, it does, Sam. And guys, I'm encouraged by what I've seen the last couple of days and the face of some red candles. And the reason I say that is we're starting to see a market that is holding in there without the leadership consistently of some of the most important names in the marketplace. So, yeah, you had an NVIDIA bounce back today, but it was offset by a massive move again in Broadcom, a move pretty significantly to the
Yeah, big on AVGO.
I did some math before I came on, and NVIDIA and Tesla together contributed about 10 positive S&P points, which is impressive for two names. But those other three that I mentioned that are to the red, Amazon, Apple, and Broadcom, contributed about 25 points of negative action. So they more than offset the bounce backs that you're seeing in Tesla or NVIDIA, and then the big move in Tesla back towards its highs. All that to be said, you look under the surface, Sam, as you mentioned, it's about 60-40 now, advancing names outpacing decliners. And also, you look at the fact that you're starting to see a market that is going sideways in this rotation. One of the big concerns, I think, was, maybe we have a concentrated market, but if every dollar that leaves the S&P 500 or leaves those mega cap tech names isn't necessarily going to find its way back into another S&P 500 company. And the fact that we're starting to see more of a sideways headline market with some of this rotation happening on the surface, this is, in my mind, the most positive way for some of this concentration to resolve itself.
And with that rotation that we saw today, we saw them moving into areas that are a little more sensitive to the economy. Healthcare, consumer discretionary, industrials, healthcare up like 1.3%, consumer discretionary up 0.75%. What are some of your thoughts about this rotation into this, and how it pertains to as we move into 2026?
Yeah, and it hasn't been consistent that way, right? And even today, you look at, equal weight is outperforming because you have more names higher. but it's still value-oriented. So it's a movement, I feel like, within these different sectors.
We have less than 1 minute.
Valuations that aren't as extended, because I don't know that there's a ton of concern.
Kind of flat day. Well, that's about the way I want to call it. Kind of a flat day today. Down draw into close. So I'm glad I didn't jump into them at the end. I did, kind of. And Broadcom was a big killer in the market. I think tomorrow we'll have a little bit more energy in the market. It's not as bad as last Monday. So, I'm going to get out of here. See you later, Randy. Magnificent. Shiba.